disappointment in the company's history. Joining us now is Natalia Knežević on Rocket Labs.
So the stock is up by 8%, Matt, today. That is the biggest, as you said, agreement for the company. The customer is a Japanese space company, and it's been a long-standing customer for Rocket Lab. So now, basically, this is a commitment for 10 launches until 2027. The terms of this agreement were not disclosed, but investors really liked this because basically this shows visibility for a long-term pipeline. And some analysts are saying this could probably be an example for other customers to make similar commitments. But we do have this excitement today in terms of the stock price, but overall, year to date, the stock is down 22%. A few reasons behind that. So the last quarterly report showed that revenue was lower than analysts expected. They also had an unsuccessful launch last fall, and the company is working on a very big project. It's a big rocket called Neutron, and as of now, the company produces small to mid-sized rockets, but this project could allow Rocket Lab to be a direct competitor to SpaceX Falcon 9. But again, this project requires lots of investments.
All right, Natalia, thanks very much. Natalia Knežević there on Rocket Labs. By the way, in the next hour, we're going to speak with the CEO of Rocket Lab, Peter Beck. Sir Peter, to be exact. He's gotten the Lord title since, is a Lord? I don't know. He's a sir, in any case, is what we say. Joining us now is Ben Guttridge. He probably knows better than I do about these titles because he's the investment director of investment solutions at Invesco and is over there in the land of lords. Ben, first of all, let me get your take on French stocks and the effect of the snap election that's coming up. It seemed like investors were all going to pile back into Europe. You saw the stock 600 really start to pick back up, and then this kind of freaked people out. Macron's call after the win for the far right there. Is everybody going to now abandon the continent?
Well, in answer to your original question, it's actually a knighthood.
Oh, sorry, he's a knight. Yes, yes.
In relation to French stocks, I think we've sort of seen this type of movie before. It's sort of a classic reaction from markets. Hedge funds get their new toy, and they sort of respond, sell down on sort of negative political developments. I mean, the concern is that a populist, sort of quite far right party take over the French Assembly, the French Parliament, but doesn't take much digging to appreciate that the probability of that is very low. So we don't expect any type of French exit from the EU. Far from it in terms of policy agenda. Any abandonment of the euro. There's a bit of a roadmap with what we saw in Italy, as some might consider more of an extreme sort of party securing power and adopting more moderate policies when they reach the pearly gates, when they reach that position of authority anyway. So I think the markets have overreacted here and therefore suggests a bit of an opportunity.
An opportunity because people do tend to freak out at these things. Where do you see the biggest drops, the biggest losses, the biggest entry points in terms of European stocks and bonds?
Well, I think it would have been sort of the utilities that have seen the biggest drop. They had the closest relationship with sort of government bond performance and French bonds really taking a bit of a hiding, certainly relative to other European bond markets. But that's also sort of bringing to markets' attention that the public finances in France aren't quite as neat and tidy as in other nations, certainly relative to Germany. So it could be a little while before French bonds recover, and therefore that discount in utilities might narrow. And therefore you think on a sort of a risk-adjusted basis that it's probably French financials, the banks, that look like the most interesting opportunity. Yes, some linkage to bond markets, but not as keenly correlated as utilities. And we think the growth outlook is pretty reasonable in Europe at this moment. The ECB cutting interest rates, real incomes looking reasonable, so wage inflation okay relative to fading inflation. So on that basis, the banks look like a better trade in amongst the opportunities that are presented.
Does all that, though, Ben, look better to you than, the AI boom that's going on over here? Do you feel like it's run its race already, that there's no more room for higher highs?
Well, I mean, I don't trade particularly short term. In the very short term, one might suspect that these sort of European discount opportunities do look more appealing given the relative performance of late. But over the medium term, I wouldn't say so. No, I think we'll be continuing to leaning into US equities, particularly those of the sort of loosely defined sort of technology theme, the home of innovation, and this tremendous AI earnings momentum that we're seeing. Recognise it could be a bumpy ride, but would not want to take that exposure away from portfolios at the moment, given the tremendous earnings performance we're seeing and the seeming inability for investors to be able to value these companies appropriately.
I wonder, when you look at what's happening in Europe, it's already kind of happened in Britain, is that the status quo is essentially thrown out for an alternative politically. Does that make room for a growth in a tech industry that has never really been able to flourish over there, but has done bonkers good here in the U.S.? I mean, are you starting to see that in London? Do you expect to be able to see that on the continent?
Well, I mean, there is sort of an underappreciation of technology businesses in the UK, but they're clearly not as dominant as they are in the US, and likewise on the continent. But of course, ASML is just almost sort of a linchpin in this sort of semiconductor industry, but it's clearly not such a dominant a stock within the market. I mean, it's just going to be too hard to displace the US as the home of innovation and technological innovation. But, there are opportunities in European equities to exploit this trade. I've mentioned one name already. But for the asset allocators, if you want to get a more meaningful piece of this trade, of course, you have to lean into the US.
In terms of growth there, we see it kind of slowing down here. You've already, or the ECB at least, has already started cutting. They didn't really give us a path forward, but what does the growth picture look like to you as the ECB contemplates further cuts?
Well, I think it looks pretty reasonable, pretty downbeat expectations for Europe by and large. But as I said, a combination of real income support, so wages continuing to running at quite a reasonable level, but inflation falling much faster on the continent than in the US, for example, is giving consumers room for manoeuvre. And we are starting to see all this increasing evidence of the manufacturing sector doing reasonably well. So that's good for Europe, really heavily integrated in the manufacturing sector. You take an economy like Sweden, something of a lead indicator on sort of global trade and global manufacturing. Their PMIs, their leading indicators suggest manufacturing is picking up. So that's good news for Europe. Over the medium long term, we're well aware that the sort of structural challenges of such a fragmented market in Europe and the links to China and all the challenges there don't set Europe up for sort of sustained long-term higher levels of growth. But in the shorter term, perhaps the growth outlook looking a little better.
It is so fragmented. The EU, not a monolith, as we get painful reminders of time and time again. You mentioned Sweden. We talk a little bit about the UK. Where do you think are the best regions to invest in Europe?
Well, I mean, I would say the UK, but that would circle back to our prior earlier in our conversation, where we think the US looks set up to be the best performing market over the medium term. And what you're getting there is sort of tech-heavy exposure. To build diversified portfolios, you need something of a hedge against that. And the valuation opportunity in the UK and the geopolitical hedges of the resource sort of dominant sectors that are in this market make that a nice barbell. Within Europe at the moment, over the short term, France looks like a decent opportunity. The sort of shorter term discounts, but of course it's home to such great luxury brands as well, and such fantastic technology businesses. So there are opportunities everywhere, but on a high level, we think US UK makes like a nice barbell.
Got it. Ben, thanks so much for joining us. Hope we can get you back soon. Ben Guttridge there of Invesco talking about the situation on the other side of the pond and what kind of opportunities the concerns open up. Coming up, Ryan Reynolds joins Mountain, or he has joined Mountain a while back as Chief Creative Officer. He gives a go at pitching the business in a new campaign. We'll go live to Cannes and speak with the Mountain CEO, Mark Douglas. Look at how streaming giants are spending ad dollars. This is Bloomberg.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd put everything I had into it.
I get asked more about our relationship than I do my wife. You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The deal?
The deal. The deal. That deal. The deal.
Huge deal.
Who dug this up? What are y'all in trouble?
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. The top names in business are on Bloomberg.
They're kind of predicting a soft landing, and you see that in both stock prices, which are kind of high, credit spreads, which are kind of low, markets, which are kind of wide open. That's all good. Doesn't tell you what the future is going to be. But I think there are a lot of inflationary forces in front of us that may keep it a little bit higher than people expect. My view is whatever the world is pricing in for a soft landing, I think it's probably half that. I think the chance of something going wrong is higher than people think.
Bloomberg. Context changes everything.
The top voices in advertising and media are gathered for the Cannes Lions Festival in southern France. One focus is how streaming giants are changing advertising. Joining us now is Mark Douglas. He's the CEO of Mountain. It's an ad technology company that
Dollar
builds
franc declining spot 7%. It's low since March 18th now. Franc on the upside here.
You have a chief creative officer in Ryan Reynolds,
Yes.
and he has recently made an attempt to kind of pitch the business, your new program, Mountain Match. Tell us what's that about and what's it achieving?
Yeah, so one of the things that Mountain is entirely focused on is bringing small and mid-sized businesses into the television advertising market. And so these are direct-to-consumer brands, usually e-commerce brands or travel brands coming to television for the first time. They don't have huge budgets. So they have a hard time, they're not broadcasting out millions of dollars on the TV. So we have to really identify their right consumer and kind of literally match them. Like, this consumer, you would love this brand. And then we make that match via the TV ad. So we released something called Mountain Match, which uses 2 layers of AI, generative AI and machine learning, in order to literally match consumers with the right brands and then show them the TV ads for products they're potentially going to love.
And of course,
when
you linked up with Ryan, I mean, that was kind of what he was famous for. It's his sort of creative genius in creating ad campaigns matched with your sort of engineering technology at Mountain helps you take on sort of the Goliaths. Amazon, I'm guessing, and Netflix are 2 of those Goliaths, right? How do you deal with those 2?
Well, we're partners with every streaming network in America, all of them. And we're bringing 90% of our customers have never advertised on television before. So that's a huge stat. And so they love Mountain is bringing these new advertisers in the market. But again, these customers, they're used to using paid search and using these super targeted platforms to find the right consumers. So they need that kind of technology in order to get access to Mountain customers, to get access to this new cohort of customers. And so they're excited about it. I think they're battling each other. And meanwhile, Mountain is above the fray, just like bringing new companies into this market every single day.
So how strong is the sort of comeback of advertising on television? Because for so long, Mark, I could stream stuff without seeing any kind of traditional commercials. Now, when I'm watching things, for example, on Hulu, they do pop up every 30 minutes or so, and I will, sit through and watch.
In 10 minutes time now at the top of the hour, the US business inventories month over month. Forecast 0.3% on the prior minus 0.1%. Keep in mind as well, Richmond Fed President Barkin is due to speak on the US economy and the Fed in an M&I webcast. No text is expected, but there will be a Q&A.
Are making it so that they're way, way more relevant. So those consumers that are now seeing the ads that maybe they weren't through a subscription, they're willing to trade that because they're much more relevant.
Keep in mind, for Fed's Barkin, the registration link is available on his entry in the calendar, if anyone is interested.
The industry is growing. I think there was a bit where it was stalled, but it's kind of growing, and it's because it's more relevant, more brands, like Mountain bringing more brands in the industry. It's just making a big difference.
So you're there in Cannes, and Elon Musk is going to be courting advertisers in Cannes, apparently in a speech or an interview, rather. Give me your take on what the Tesla CEO, the Twitter CEO, the SpaceX CEO is doing, because a lot of people wonder, does this guy have a plan? Is it headed somewhere, or is he just like throwing spaghetti at the wall all the time?
Yeah, so I think obviously Elon is one of the biggest innovators of our time. I think people would probably think Steve Jobs, and these days think Elon. And Elon's doing it in the physical world. He's launching rockets. He's building cars. With X, it's software. And I think a lot of folks are just not that used to seeing someone innovate in real time and do it so publicly and announce ideas and then, change his mind. And I think that kind of seeing how the sausage is made kind of freaks some people out. But it's part of the process. And so I think someone like me, I'm an engineer originally by trade. I mean, I think we see it as fantastic because that's the process. But the rest of the world sees it as schizophrenic, maybe is the right word. But it's all headed in the right direction. I'm a big fan of everything he's doing, including what he's doing at X. I think he will get there, and I've said that for quite a while now.
Mark, we have a viewer writing in with a question. He asked, do you think Silicon Valley is going to keep picking away at traditional media? How can anyone compete against Silicon Valley with an endless wallet to buy content?
Well, the thing is like these mediums like television, even billboards, what's referred to as out of home, have become digital, and Google and Meta play no role in them and won't be playing a role. So I think the Google and Meta are now competing with an entire industry of media companies who are now armed with digital technology themselves, and I think it's battle royale right now, and it's a fun time to be participating in it.
All right, Mark Douglas, thanks very much for joining us, CEO of Mountain from Cannes Lions. Now, for some of the sector price action that we're watching in the market this morning, let's get back over to Bloomberg's Abigail Doolittle. Abby?
Right now, we have the S&P 500 heading to another high, Matt, another record high, closing record high, an all-time high, and it's a broad-based gain sector-wise. Energy is the top sector, up 1.6%. We have a bit of a reprieve here for real estate, the only sector down on the year, right now up about 0.6%. To the downside, communication services, utilities, discretionary industrials, but a small gain that is well supported. Let's take a closer look at that energy sector because it has been steadily higher, and one piece of it is Occidental. Warren Buffett adding to his favorite energy bet, buying for 9 straight days in a row. The stock up 3 straight days in a row, and you can see today's spike there.
All right, Abby, thanks very much for that. Coming up, we're going to give you the market-moving events you need to watch. That's next in our trading diary. This is Bloomberg.
Fixed income fix. Watch Bloomberg Real Yield.
In 5 minutes time now, at the top of the hour, we get the release of the US business inventories month over month. Forecast 0.3% on the prior minus 0.1%. Also, we're expecting comments from Richmond Fed President Barking, who speaks on the US economy and the Fed in an M&I webcast. The registration link is attached to his entry on the calendar. No text is expected. There will be a Q&A though.
On July 4th, amid debates about tax policy, border security, foreign policy, and more, voters head to the polls to choose the next leader. Bloomberg has full coverage leading up to the election and will bring you the results after all the votes are tallied. Tune in for continuing coverage on Bloomberg Television. Context changes everything.
Now for the trading diary, what you need to be watching today and this week. Later today, we're going to get the tick flows, so pay attention to those. And then obviously a slew of Fed speak will continue this afternoon. Tomorrow, U.S. markets will be closed for Juneteenth. And then Thursday, we get the Bank of England rate decision. You can type BOE GO on your terminal for that. And we round out the week with existing home sales. This was the countdown to the open. I'm Matt Miller. This is Bloomberg.
You are also an owner, I should have pointed out, of 3 major sports teams.
That's right.
Right? And and you're the first woman, as I understand it, the first woman to own have a stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me. And I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
1 minute remaining for the US business inventories month over month, and we're shortly expecting comments from Fed Sparkin as well.
You need to have an AI game plan. We used to say that every company needs to think about becoming a software company. Now we say that every company needs to become an intelligent software company.
Context changes everything.
We are 30 minutes into the U.S. trading day. It is Tuesday, the 18th of June. Here are the top stories.
Euro spot 3%, Euro spot 3% as expected.
U.S. retail sales barely rise in May, pointing to greater financial strain among consumers. And 2 cuts to come. Goldman Sachs sticking with its call that the Federal Reserve will cut rates twice this year after a meaningful slowdown in GDP growth. Plus, as the labor market reaches an inflection point, they're worried about the economy. And ready for liftoff, space systems company Rocket Lab announces its largest launch agreement yet. We'll speak with the CEO, Peter Beck, about their new record-breaking launch. I'm Matt Miller in for
We have
Katie
posted out the
Greifeld
business
in New
inventories
York.
April
Welcome
report
to
on the
Bloomberg
feed for anyone
Markets. Take a look
interested.
at what's going on the S&P after a 30th record high close yesterday. The index is up again. Right now, just 0.1%, but to 54.79, 54.80. The NASDAQ actually down almost 0.1%, just under 20,000 at 19,890. And the U.S. 10-year yield ticking down. Investors buying that debt after the retail sales number disappointed this morning. Let's kick it off with that. The consumer is showing signs of weakness. May retail sales came in below expectations. Joining us with more is Bloomberg's Enda Curran. Enda, what do we know about the drop, and is this consistent with the trend?
It's weakness across the board, softer than expected increase in May, like I mentioned, Matt, but also a revision down for April. It looks as though consumers are shopping around for more online discounts, for more bargains, for example. We know that price discounts. Now, these numbers aren't necessarily adjusted for inflation, but you'd have to say that there's a trend now, to your point, emerging that consumer spending in each of the retail services reports over the past few months has been trending lower. Now, there are caveats. This doesn't capture the whole services world. There's still expected to be some strength in spending on services. But when you remember the backdrop of interest rates being very high, credit card debt continuing to increase, the fact that the jobs market is maybe softening around the margins, it all suggests that the great consumer boom of last year is now cooling. I mean, we're certainly not talking about a crash landing yet, but it is certainly cooling, and I think this is going to be very closely watched over the months ahead as we get closer towards that all-important Fed meeting in September.
What's your take, Enda, on the Goldman Sachs call? Jan Hatzius, his note on the labor market being at an inflection point. We did see non-farm payrolls booming higher. 273,000 jobs were added, right? But the household survey showed that we lost 400,000 jobs.
Yeah, a lot of different views on what those surveys mean and what they're telling us. Matt, a lot of confusion over what exactly is the role of immigration in the economy. Is it being counted or not? But all of that said, though, net, the jobs market remains robust, but I think most people would say that it is cooling around the margins. When you speak to employers, they make the point that it's easier to maybe hold on to staff and find staff this year than it was last year. Now, none of that means, of course, that we're heading towards a hard landing or anything like that, but it does add to the mood music that the economy is slowing, and this idea that we're at an inflection point probably sounds quite fair, actually, and that's why I say about retail sales, for example, the data over the coming weeks and months are going to be so important in terms of setting the tone for where the economy ends the year, and of course what that means for the all-important Fed debate. So inflection point sounds about right. The data over the coming weeks will tell us whether or not we are at that point or not.
All right, Enda, thanks very much. Bloomberg's Enda Curran talking to us about the retail sales data and the Goldman Sachs call. Let's turn to the market reaction. Joining us now is Ann Milletti, Allspring Global Investments head of active equity. And great having you on the program. Thanks so much for joining us. What's your take first off on these continued record highs that we're seeing in stocks? I mean, it certainly doesn't feel like the Fed is in a very restrictive place when the S&P 500 has hit 30 new records in a row.
I know. It's actually pretty shocking when you look at the top-down data. When you look underneath, though, it's a little bit more suspect. And, certainly it's something that you talk about a lot, Matt. The concentration of the index and where the returns are coming from is to the point now that is a little bit concerning, where you have 25% of the S&P in 5 names, 60% of the return coming just from those 5 names. And so we're 5 names away from having something look completely different in the market. Last year it was 7, this year it's 5. And so I think we're starting to see signs that things could be changing, but the timing of that is the greatest unknown.
Yeah, it's really interesting. On the weekend, Julian Emmanuel from ISI came out with a note, and it was bullish, right? He's raising his price target to 6,000 from 4,750. Like, wow. And that's based on, he says, expected earnings growth of 8% this year and 5% next year. Is that, though, earnings growth that we're going to see from the S&P 500, or is it just the Mag 7 or just the Fab 5, as you're pointing out? What are the 493 going to do?
It's so interesting. I read that note as well, and when you break down and peel the onion back a little bit more, you see the expectation is for those top 5 names to grow earnings above 30%, while the rest of the market,
Fed's Barkin says we are clearly on the backside of inflation.
5%. And so that changes in 2025, where the expectations are much more narrow. Those 5 names are supposed to grow about, high teens, call it 18%-ish, where the rest of the S&P is supposed to grow, low teens, maybe 10, 11%. So the gap starts to close, and I think the market maybe can broaden if that is the reality. But it does show, you can't just simply say earnings are growing 6%. Where
Fed's Barkin says it's hard to know how much signal to take from inflation last year, or this quarter, or the last couple of weeks.
The Mag 7, it's been justifiable based on earnings, and certainly you've gotten multiple expansion as well. But there are plenty other areas of the market that look attractive to us. And when you just look from a PE basis, the average, the equal weighted index is trading at 16 times versus 21 times if you add back those 5 names. So there are areas that look more attractive to us than just those select names.
So I think that's the important part, because a lot of investors are, I think, not interested in diversification. After 15 years of the S&P beating every other fund, and certainly what we've seen with the Magnificent Seven over the last couple of years, it's difficult to, I'm sure, explain to clients, like, look, you need to not put all your eggs in one basket, but there are also some really attractive baskets in which to put your eggs, right? Which baskets are those?
Yeah, there are. I think if you look at healthcare, if you look at some of the industrials, some of the areas that have been left behind, those areas are good in terms of sectors. I also think you have to look down cap, and there's a lot of like fear over kind of the smallest mid cap space, but if you focus on quality, which has been something that we've been focused on since the beginning of the year, coming into the year, if you focus on quality, there's a
Parkin
lot
says, on the good side, I hear pricing power is waning.
Companies that have kind of been thrown out, treated as if they're rate sensitive.
And Barkin adds that on the services side, I still think firms are exploring raising prices as much as possible.
There's other names that are really profitable, that have great management teams and a strong competitive advantage. And those are the names down cap that we're paying much more attention.
And adds that shelter and services inflation is not quite there.
To work out,
I don't think you have to. What you can't have is a swift change in the direction.
Says that this month's inflation reading was very encouraging.
Inflation starts to spike and we're talking about rate hikes. That's where it would be a little bit more dangerous to be in small cap. But certainly it feels like we've hit the peak of interest rates and now it's just a matter of timing of when they come down.
All right, we're going to talk more with you. You're going to stay with us. Ann Milletti of Allspring Global Investments. Let's take a look at what else is moving in the market right now. Let's go to Bloomberg's Emily Grafeo. And Emily, you're going to kick it off with one of those AI names.
That's right. We can't stop talking about AI, Matt. And I'm looking at shares of Broadcom because that stock was on track for its best winning streak of 2023, up for the past 7 days. Now it's moving between gains and losses. It has been up, though, and added over $200 billion in market cap in just the last week or so. And that follows its blowout earnings report, which showed that strong demand for artificial intelligence products is really driving Broadcom's growth here. The company supplies chips for big tech companies, think Apple, and they also offer a range of components that are used in computing and networking. I really like this comment from Barclays. They said last week that Broadcom remains one of the best ways to play AI. And you can really see that just in the stock performance this year alone, up over 60%. So we'll see if those gains hold today. If they do, that'll be 8 consecutive days of gains. Again, longest streak of 2023, Matt.
All right, Emily, Boeing is also one that we're watching here. Obviously, the airline has had problems, especially with the 737, and it looks like Congress is going to be grilling the CEO.
Yeah, that stock is down a little bit over 1% today, and we have another whistleblower report coming out, and that was alleging that Boeing mishandled and lost track of hundreds of faulty parts, some of which this new whistleblower said may have been installed on new 737 MAX planes. So the claims were coming from a June 11th report, but they were made public today by by a U.S. Senate subcommittee, and they're coming from Boeing quality inspector Sam Mohawk. According to Mohawk, Boeing had lost as many as 400 faulty 737 MAX aircraft parts, and they deleted records for many of those from an internal cataloging system. And Matt, these parts are supposed to be tracked or disposed of with meticulous records to ensure that they aren't used in the aircraft manufacturing process. The whistleblower also claimed that Boeing intentionally hid these improperly stored faulty parts from the U.S. FAA ahead of an on-site inspection. So
Fed's Barkin says, I didn't get more confidence in Q1 this year about inflation. We'll see where we go.
And that stock down 32% year to date. All of these quality concerns have really weighed on that company.
By the way, Emily, we're taking Ann's advice here and we're going down cap. So we kicked it off with Broadcom, which is like an $850 billion company. Boeing is worth $110 billion, I think. Let's talk about Chegg right now. It's a $300 million company.
It's the smallest company that we're talking about today, but I would say it's the largest stock move. That stock was up as much as 17%, Matt, biggest intraday rise since November. And yeah, this is an online education platform one of the reasons why they're higher, which isn't so great for the workers. They did announce a job cut, cutting 23% of its global workforce, but the company also announced a plan for growth that includes developing a single platform with AI tools. Really for Chegg, the question seems to be, can they leverage AI, or are they going to be replaced by a better AI tool? In May, they said that ChatGPT's OpenAI's ChatGPT threatened the growth of their homework help services, and Jefferies analyst Brent Thill said that, you know, a lot of ChatGPT is free and you have to pay for Chegg. So can they build a platform that is going to be better than OpenAI's platform that a lot of students can just use for free? At least today, it seems like the market believes so, but at least for Jefferies, he lowered his price target to $2.50 a share from $4.
It is a story, and Emily, we should be wary of a company that's replacing people with AI, right?
That's right, right. You look at those job cuts, and that's certainly a theme too, Matt.
All right, Emily Grafeo there talking to us about some of the movers at this hour. Coming up, Citi's CEO Jane Fraser says the bank is no longer, quote, the financial supermarket of the past. We'll look at how she's betting the bank's turnaround on its least glamorous business, and more with Ann Maletti. This is Bloomberg.
Ted Barkin says, I need to see sustainment and broadening in disinflation to give me confidence that we are heading back to 2%.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Invest, don't trade. Invest for the long term, i.e. when markets are challenged, don't get spooked. Don't get involved in investment hobbies. Investment hobbies are generally not profitable.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
It is Citi's Services Investor Day. We just heard from the CEO, Jane Fraser, and how she's putting their services business in the spotlight. Bloomberg's Shonali Basak joins us now for more. Shonali, what's the story with Citi kind of moving all of its eggs to the money-moving basket?
That certainly is what this division does. We're talking about Citi Services Investor Day, and of course, the services business is something that has been traditionally very hard, Matt, to explain to investors. Indeed, it is the plumbing of the financial universe here. They move money around for corporations around the world. Ultimately, it amounts to about $5 trillion a day. Large clients, Amazon, Uber, and importantly, the U.S. government are among clients for this business at Citigroup. That amounts to roughly roughly half of its profit. But it is hard to describe to investors, which is why they're having this investor day today. Of course, the key question here is, what about the other businesses? Does the wealth management business, the investment banking business, where there's a new leader in store there, do they also have the promise of having their own investor days in the future as well? By and large, as you mentioned, Jane Fraser this morning stood up to investors and said, we are no longer the financial supermarket of
Fed's
the past.
Barkin says that headline inflation numbers are heading in completely the right direction.
And of course, Matt, you have to understand this will be Jane Fraser's legacy as the CEO of Citigroup, simplifying that bank. And of course, investors, at least initially to this investor day, are reacting well. Shares up roughly 2% so far on the day.
You know, I'm looking at shares, Sonali, I like to use the comp function. If I put up Citi over the past 5 years against JP Morgan, Morgan Stanley, Wells Fargo, Bank America, their shares have done nothing, while the others have, you know, doubled or are up over 150% in the case of Morgan Stanley. How is she doing in her revamp of the bank, which is desperately needed for shareholders, right?
There are certain things that have been done at record speed here, Matt. The idea of exiting certain businesses that have been unprofitable around the world. Now the direction is going to turn quickly towards where's most of the profit going to come from. Of course, as we've been talking about, have been highlighting their services business, but what about the others? How competitive could they be in trading at a time where talent is very expensive to come by? How competitive can they be in investment banking? She highlighted this morning the wealth business as well, and the ability to be very promising over time. They brought in talent from Bank of America there to lead that business at scale. Interestingly enough, Matt, one big question as I talk to the CFO later today is how much propensity do they have to reach across Wall Street, bring in more talent to grow those businesses even further, especially after a moment where they've cut many jobs here and have reduced costs so efficiently.
So we're looking now to the Fear and Greed Index, 43 out of 100, which indicates fear, while the Crypto Fear and Greed Index is 74 out of 100, indicating greed. Fed's Barkin says the job market figures are healthy, with some signs of concern. We're keeping an eye on the VIX as well. It's down around 2.3% at around 12.44 points.
Global Investments head of active equity, and you know, a couple of weeks ago I would talk to investors and they almost all would say, hey, we're more interested in Europe. You know, we're looking internationally. The U.S. has been the only game in town, but we could see
Fed's
some
Barkin
rotation.
says the labour market numbers are very strong, but inflation still not at target.
Macron's call for a snap election, that seems to have done a full 180.
It seems to have, and I think there has
Fed's Barkin says that said, it's not hard to see scenarios where the labour market weakens.
So when you focus just on rates, it looks like a quick, maybe clear place to go. But when you look more broadly at the full picture, it still may take some time for Europe to see growth come back. I do think if you look more broadly at emerging markets, they have underperformed for many years, and they are starting to see some signs. There are some signs of light. If you look at China, which has been, you know, it's a big part of the index for emerging market players, they've had a lot of tension, both on the macro level and on the micro level and company level. Global interest rates on the rise has hurt them. A strong dollar has hurt them, but fundamentals are starting to shift. And as rates come down across the globe, that's a clear, that creates a lift for China. And the fundamentals seem to be improving at the company level. We're starting to see real EPS improvement. So again, it's up to individual investors.
Fed's Barkin comments that consumer spending is still solid.
You can have emerging markets play ex-China, or you can do it with China. And I do think there are some countries that are really well set up for recovery. We're just at that moment in time where it's hard to get the timing right. So I think if you're very underexposed, you probably want to start inching your way in and look at some exposure there.
How important is the U.S. election, you know, to that investment case?
Barkin says the dynamic underpinning spending is strong jobs market and the stock market at record levels as well.
Trump and Biden, on the other hand, they both have pretty aggressive policies against China.
They do, and I think they're both known. I mean, this is like an election where, like, you know, you kind of have to get over the frenzy, right? When we hear, oh my gosh, this is what's going to happen with Trump, or this is what's going to happen with Biden, they kind of have a history and a past in which you can look to and say, here's what potentially it could look like. And you're right, some of the policies for trade, et cetera, became tougher under Trump. They were extended in the Biden administration. So that is creating some hurdles.
104% tariffs on cars? I mean, wow.
But we also have to remember, the bark is often a lot worse than the bite. And negotiation happens out in public, and that's what we're kind of in the middle of. We don't really know what reality will be, but I feel a little bit better looking at past history and real actions versus just listening to the words.
All right, Ann, great having some time with you. Thanks so much for coming in. Ann Maletti of Allspring Global Investments. Still ahead, we're going to look at the companies making the most social buzz today. Social Climbers is next. This is Bloomberg.
Good morning from our world headquarters in New York. I'm Menace Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases.
Fed's Barkin says, I was very supportive of last week's policy decision.
Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg.
It is time now for Social Climbers, a look at the stocks making waves on social media this morning. And first up is Apple. It says it's calling it quits on its Pay Later program after just 1 year. The tech giant recently teamed up with Affirm to offer
Fed's Barkin says choppiness in the data since last year means that the path ahead on policy is not clear.
Software this fall. The move marks a retreat from earlier efforts
And Barkin says we will learn a lot more over the next several months.
So now it's just going to go through Affirm, its partner in Buy Now, Pay Later. Next up is Philip Morris. It is halting online sales of its popular nicotine pouch brand Zyn following a subpoena sent to an affiliate. The legal action relates to Washington, D.C.'s ban on flavored nicotine products. The small pouches, which are placed between the lip and the gum, like, you know, Bandits used to be, have gone viral and become a growth engine for Philip Morris in the U.S. The company says it will comply with the request for information, but you're going to have a tough time ordering those Zyn packs online. Finally, Gen Z is kicking the 60-40 portfolio to the curb in favor of fresh kicks. A new survey by wealthy Americans, by Bank America, shows 94% of Gen Z and millennial investors are more interested in collecting items such as watches, rare cars, and sneakers like tennis shoes or basketball shoes. Nearly 3/4 of those younger Americans saying stocks and bonds alone cannot deliver above average returns, opting for a mix between traditional assets and crypto, real estate, and those all-important collectibles. You can follow all the latest company buzz on the terminal. Just type TREN GO on your Bloomberg. Take a look at markets right now. After closing at another all-time high on the S&P 500 yesterday, we continue to make small gains. 54.77 is the level there. The NASDAQ actually off a little bit, and the 10-year yield coming down 3 basis points to 4.2517. Coming up, we're going to speak to the CEO of Rocket Labs, Peter Beck. This is Bloomberg.
The linear business is not going anywhere. The sports business is moving and is going to figure itself out between digital and linear. It's an unbelievably healthy market. They all have to be in it. They all want to be. Every single one of the players want to be in it because of the audience. We have two assets in the sports business that don't have are year-long, don't have a season. I don't believe prices are going down. You're going to figure out the bifurcation of the rights and give things up, not give things up.
How long do you think it is before Netflix actually jumps into sports?
You know, they're in sports right now, but they just do the shoulder programming.
Yeah.
I think their point of view, and you'll ask Ted tomorrow, is we build up we don't want to be in the bidding of rights and then not have any long tail. So I'm not sure. They did bid on Formula One, but ESPN got it. So I think that was a smaller package, meaning smaller economics. So we'll see.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special Equality series every Thursday in June at noon Eastern Time. Bloomberg Equality, celebrating inclusion this Pride Month.
Rocket Lab shares are surging after the company signed the largest Electron launch agreement in history. Joining us now from Tokyo is Peter Beck, Rocket Lab CEO and founder. Rocket Lab manufactures spacecraft satellite components, and the Electron, I guess, vehicle is smaller than we would normally expect from a rocket, right? Peter, and you've got a new deal with Japan. Tell us about it.
Yeah, sure. So we're about to launch our 50th rocket of Electron, actually, and you know the rocket has been a staple in the US, you know, quiver for delivering satellites to orbit. So this deal represents one of the largest small launch deals in spaceflight history, and so we're providing 10 dedicated launches for a Japanese company, Synspective, for their synthetic aperture radar satellites.
So. When you talk about SpaceX and Elon Musk, their ultimate goal, I guess, would be to go to Mars. When you talk about the Electron rocket, and I guess putting out smaller satellites into orbit is your goal for now. What's your ultimate ambition?
Yeah, look, what we're trying to build here actually is an end-to-end space company. So everybody knows us for our Electron rocket. In fact, it's the second most frequently launched rocket behind our friends at SpaceX, and fourth most frequently launched rocket in the world right now. But what we're really trying to build is an end-to-end space company. So as you alluded to, yep, we launch rockets, but we also build spacecraft and satellites. And some of those missions include missions to Mars and for NASA, and a number of commercial missions and national security missions.
So you talk about your partnership, your work with Synspective. Why are you so big in Japan? What are they picking up on that you could show to other regions and promote your growth there?
Yeah, I mean, the Japanese are focused on very innovative small satellites, and that's where our smaller rocket is really unique. So we're able to deliver these missions to very unique orbits in very short time frames, and this is something that only Rocket Lab and Electron can offer. So we do very well in the Japanese market.
What kind of competition do you expect, Peter? Because you mentioned SpaceX, and there are a handful of companies that people could name now. Is this industry set to grow?
Yeah, definitely. I mean, obviously AI is all the buzz, but the space industry is growing at a tremendous rate. What were typically the domains of governments are now the domains of commercial companies. We have missions, as I mentioned, commercial missions for NASA going to Mars. Once you would employ a government rocket to, deploy satellites into orbit, now you very much, focus on the commercial options.
So I guess the Electron rocket is your unique selling point, right? What are your advantages over your competitors? What do you see as your leg up?
Well, look, we launch very frequently. So every 2 weeks, pretty much, we have a launch one way or the other. And launch frequency is important, and also reliability. Electron has proven itself to be a very reliable.
Fitzbarkin says, my strong sense is that we are at a restrictive level.
Portable. And look, going to space and launching rockets is very, very hard. And our friends at SpaceX were the first commercial company to put a satellite into orbit. Rocket Lab was the second commercial company to put a satellite in orbit. So there's a lot of companies that are developing systems, but very few companies that launch on reliably regularly.
I mean, I mentioned that you're big in Japan, but you've also gotten some help from the Biden administration investment.
Fitzbarkin says scenarios where one rate cut then hold may be sensible. Says it is a fair question, though, how restrictive we are.
You've already sort of painted the picture that we move from a state-backed space industry to a private space industry, but you've got, the hand of government helping.
Absolutely. In the case of the CHIPS Act, it was really, really important. So there are solar cells or solar panels used on satellites and spacecraft that are very, very unique, that have to survive the harsh environment of space. And currently, there are 3 manufacturers in the world, two in the United States and 1 in Germany. So, supply is very constrained, especially to the national security platforms. So we are now the largest provider of space-grade solar cells in the world. And the CHIPS Act funding helps us grow that manufacturing capability to ensure that all of the national security programs within the nation don't go without solar panels and power. It's a fundamental element of the spacecraft is to be able to power it.
One of the purposes of that kind of government subsidy is to protect national security, as you point out. Another purpose is to create jobs. What kind of job growth do you expect to come from Rocket Lab?
Yeah, very significant. I mean, we have around about 2,000 employees now and continue to grow at a great rate. So at the moment, I think there's something like 400 job openings within the company. So we are growing at a significant rate, and obviously the government helping out on the semiconductors is an important part of that. But right across the whole business, whether it be rockets or space systems.
It's so exciting to talk about space and to see these rocket launches. but there's a boring part of your job, I'm sure, which is finance, right? How important to you is, capital formation and, interest rate levels? How much time do you have to spend on that?
Yeah, significant. Look, the space industry is very capital intensive, and that is just the reality. And in the current times where capital is much more restrictive and much more discerning, companies like Rocket Lab have been successful in attracting that capital. But not so long ago, there was you just needed to say the word space, and it was very easy to raise capital. So I think we're in a very unique time within the space industry. There's a lot of consolidation going on. And I think, the rubber is hitting the road between real businesses and aspirational businesses.
Well, when you talk about consolidation, it makes me think of M&A. Is that a good time? Is it a good time right now for M&A in space?
We think so. We've acquired 4 companies since becoming public. So M&A is a key thesis. And I think, there's some great companies that arrived at the wrong time in their funding environment, and some poor companies that are also, well funded. So there is some really interesting opportunities out there for M&A and for consolidation and taking great companies who have arrived at the wrong time and providing them the resources they need.
Peter, this is an exciting industry to follow, and as you said, you're launching every couple of weeks now. What is the next big milestone to look forward to from Rocket Lab?
Well, look, we've talked a lot about our small electron rocket, but we actually have a large rocket in development called Neutron, and that is intended to be a direct competitor, to the rockets available within the US today. So that rocket is intending to launch middle of next year, and that will bring some much needed balance to the industry with respect to launch vehicles.
All right, great spending some time with you and learning more about your business, Peter. Thanks so much for joining us. Peter Beck there, the CEO of Rocket Lab out of Tokyo. Let's get a market check right now, just about an hour and 8 minutes into the trade. For that, we go to Abigail Doolittle. Abby?
Well, over the last 13 days, Matt, we really have quite a rally. The S&P 500 up 10 of those days. You can see this really nice uptrend here in the near term, up about 4.7%. The last time I looked, continuing that trend today, which would mean a 31st potential record closing high in just the year of 2024. Now, beneath the
U.S. crude futures rise by $1 a barrel now.
Last gain that I saw for the S&P 500 up just fractionally. We have some big movers. Let's take a look at what is going on beneath the surface, and we are going to see that Micron's getting a really nice bid, up 6.4%. B of A saying that this stock and ARM Holdings, that you really want to be in them for the AI play. Now, of course, Micron is the storage and flash memory, but the analysts at Bank of America, B of A, saying that because of AI, there's going to be more demand for their products. ExxonMobil up 1.6%, the energy sector, the best sector for the S&P 500. I didn't see anything too specific on Exxon, but we also have Occidental higher, and Warren Buffett's Berkshire Hathaway buying again, and oil is up modestly as well. To the downside, though, Lennar down 2.6%, the home builder. Their orders backlog, the outlook, a little bit disappointing, so investors just cooling off that stock a little bit. And then Apple, in the recent last, let's call it week to week and a half, a rare down day. Since the April bottom, Matt, this is really pretty incredible. Apple up more than 30% after having nearly been in a bear market from its December high to that April bottom. Let's check in on the technicals because it's at a really interesting spot, this stock. And I would argue that the fundamentals suggest that this recent move's a little bit stretched. So this chart goes back many years. You can see this pretty reliable range. There was one spot here in 2021 when the stock went higher and then lower. You can also see that the RSI, when it gets to the top of the range, tends to peak and then go down. We are looking at lower RSI readings, though, so that's a slight bearish divergence. But what I would really like to point out, take a look at how Apple hit right up to the top of this range and now appears to be backing down. We don't know because there's a lot happening within there, which could point to a possible move out of the range. But the more likely scenario, Matt, just because of the range and then RSI, is back down. But stay tuned. Never a dull day with Apple.
That is excellent. So, and by the way, you can get that with any stock on the Bloomberg, right? Just type RSI go?
Yes, you can. You have to go into the chart, and then I think it's chart content, and then put in RSI 14-day, and then it pops right up on the bottom.
Abigail Doolittle, thanks very much. Abby, always reliable for a look at the technicals, especially on a big stock and a big mover like Apple. Coming up, $1 trillion bonus. We'll look at the wealth created through carried interest. Ludovic Philippou joins us of the University of Oxford next in today's Wall Street Week with David Weston. This is Bloomberg.
Every single thing I've done, it's almost as if somebody has said it can't be done. I mean, I remember I was in a factory and I said, I want to go in the night shift. And they said, no, we don't put women in the night shift. I said, how will I be a successful production manager or personal manager of a factory if I never went into a night shift and knew how a third of my people worked? So in some ways it has fueled some of my determination. It's fueled some of my, okay, I'm going to show this is possible, a sense of I'm going to go get on and do it. It also gives me courage because I feel sometimes I'm not just doing it for me, I'm doing it for everyone else who comes after me. And I always tell women who ask me for advice saying, put your hand up for the most difficult job. Put your hand up for things that are challenging. You know, go in there and lean into things that are difficult, that are challenging, because that's what gives you the greatest credibility, respect, reputation.
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Fed's Barkin says the household survey is much more volatile than the payroll survey. Household survey referring to the unemployment rate.
But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
DOJ or other authorities.
Could face bigger challenges next.
Fed was going to keep rating
World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
It's time for our daily Wall Street Week conversation. Today, we look at the magnitude of wealth created through carried interest. Joining us is Oxford professor Ludovic Philippou. He's a professor of financial economics there, and he's also the author of the book Private Equity Laid Bare. And here with me, too, is Wall Street Week host David Weston.
Yeah, Matt, it seems like we periodically have this discussion about carried interest, don't we? But nothing ever gets done.
Exactly. Nothing ever happens with it.
So, Professor, one of the things that I think you've contributed in your study, actually, is to quantify how much money treasuries, United States Treasury, UK Treasury, elsewhere, are giving up because of this special income tax treatment for carried interest. How big a number is it?
So it's the carried interest I calculated. I leave the tax question to tax specialists, but the amount of carry that has been earned, paid, and due is $1 trillion at minimum. That's the one for which we know how to calculate it. The total magnitude could very well be twice as much because we don't have the data for every vehicle out there. But for these firms here that you have on your screen, we will know about all their funds, and so we are quite sure that these numbers are pretty close to what they have earned historically in carry.
So I guess it must be Occam's razor when we ask the question, why doesn't anything get done about this? Is it just because these people that get carried interest benefits are extremely wealthy and have enough money to influence what congressmen and the senators do?
That's one view, but it's certainly by now, I think private equity is the largest lobby in the US Senate. But it's like that in every country in the world. So it looks like there is something that's quite clever about the legal structure that means that carry has been accepted as a capital gain in about every country in the world. But it's disputed. I think outside of the private equity industry, nobody really understand or believe that it should be a capital gain. People in the private equity industry believe very hard it should be. Their lawyers have successfully argued that it should be. And so about every country in the world has taxed it this way. We have seen in succession in the US, Barack Obama saying he would change that. Then even Donald Trump said he would change that. And none of them have done it. Everybody has maintained carry tax as a capital gain.
So, Professor, I suspect if someone from Blackstone or another private equity firm were here, they'd say, wait a second, this is not an expense to the taxpayer. This is actually a capital investment, because by having this preferential treatment, you're actually encouraging investment in new ventures. What do you say to that? This is actually an investment in a growing economy.
Yeah, you can make this argument. One of the benefits of doing this calculation, which nobody had done before, is that you can actually look at how much of a carry is going to small venture capital firms. So the people who are defending carry preferential tax treatment often say this is to enable innovation. You have all these venture capital funds that are essential for the American economy to grow, and therefore we need to be very kind to the people running these funds and give them a special tax treatment. The thing is that what my numbers are showing is that 7% of this anti-carry pool is going to venture capital. And if you would further restrict it to small venture capital funds, it would be 3 or 4%. So most of the carry is going to the firms you have just shown, and a lot more like this. And they are not in the business of small companies, early stage venture capital investing. They are in the business of buying out Hilton hotels, to buy out TXU, to buy out large companies.
I'll drop back to an incredibly basic question and just ask, and I'm sure you've researched this, or your economic forefathers have researched it to death, but why tax capital gains any different than you tax regular income? I mean, does an investor really provide that much more of an impetus to grow the economy than a factory worker?
Yeah, so it's a very good question. It's hard to understand. Nobody who's being taxed on an income like me has difficulties to understand why. But everybody who's subject to capital gain taxes think it makes complete sense. The idea of what often we hear that is because it's capital at risk. You could have earned or you could have lost the money, and so because it's uncertain, it shouldn't be taxed the same way as something that is certain. That said, when you earn a bonus as a banker, it was uncertain. You were not sure to get it. And yet you pay income taxes on these bonuses. And so this argument of it's uncertain income and should be taxed differently doesn't seem to really fly. So it is indeed a very good question about why there are two different tax rates. Another answer for why it is that sometimes when people tax on capital gains, they don't adjust for inflation. And because on average there is inflation, it would be unfair to tax it like income. And so instead of doing an inflation adjustment, you just tax it at a lower rate. But then it means in times of low inflation, then it's a very weird way, a very big tax credit you have given to people. And when there is high inflation, it's not even enough. So there are these arguments floating around, but they're a bit odd. They're not really squaring up.
So, Professor, apart from fairness questions, what does history teach us about the incentive to invest more? I mean, we've gone up and down.
At 11 a.m. Eastern Time, we expect comments from ECB's Not, who will speak in Dutch Parliament.
Cut the capital gains rate, that actually we get more capital invested.
The carry here is about what the fund manager is earning. So it's not really affecting the capital going in. So the capital going into private equity is coming from CalPERS, it's coming from family offices, coming from endowments and the like. The increase in taxes shouldn't really affect them. So unless you have in mind that because the fund manager is going to be taxed on carried interest, the carried interest will move from being 20% to being 35%. And then you can say, well, and then it's the pension funds that are going to pay for it, and so they're going to invest less in private equity. And if you believe that private equity is good for society, then you think it's a problem. You could reason this way, but it's important to know that the carried interest is really the tax. It's what the fund manager earns as pocket money for having performed well. It really is a bonus for performance. And so, how this is taxed a priori shouldn't really massively affect flow of capital to venture capital or buyout.
You started out this conversation by telling us that carried interest is taxed essentially the same across all different regimes. Do you see any chance of that changing in this important election cycle that we're facing right now?
It's a very interesting historical thing to study. In Sweden, a few years ago, it went all the way to Supreme Court, and then the Supreme Court, and they had lost at every stage. So it was said, there's no way you keep this as a capital gain. And the Supreme Court said, no, it remains a capital gain. We have seen some countries increasing a bit the rate, acknowledging that it's not really a capital gain. So like in the UK, they say if it's a pure capital gain, it's 20% taxes. This one is not really a capital gain, so it's going to be 28%. You have the Netherlands at 33%. So you have some countries that went then middle of the road type of things, or that they make it conditional on how much money the fund manager is putting in their own fund or things of the sort. So I think that, and we see it in the UK this week, where they first announced we're just going to tax it like any other income. And then just today they announced that, well, if people really put their money into their fund, then they will be excused, and then we will maintain it as like a lower tax rate. So I don't, history is teaching us that no one has really managed to move it. And again, like even Trump wanted to change it and then didn't. So, but the biggest donor of Trump is Steve Schwarzman, and that's one of the largest owner of carried interest. So.
Money talks. All right, Professor, thanks so much for joining us. Ludwig Philippou there, University of Oxford Professor of Financial Economics. David, we're looking forward to Wall Street Week. What else have you got coming up?
Well, coming up on Thursday, we're going to have Glenn Hubbard of Columbia Business School. We all know him. And he's actually got a paper coming out saying there's a third way on economic theory, somewhere between letting just the markets do what they want to do and having the government intervene an awful lot. There's a third way. That's Glenn Hubbard going to be telling us all about that on Thursday.
All right, looking forward to Glenn Hubbard. David, thanks very much. Looking forward to Wall Street Week throughout the week on this program. And then, of course, on Friday evening, David Weston hosts that program. This is Bloomberg.
Fed's Barkin, when asked about the yield curve, says there could be lots of reasons for why it's inverted. Barkin says a lot of economic signals have not worked so well this cycle.
The top names in business are on Bloomberg.
You need to have an AI game plan. We used to say that every company needs to think about becoming a software company. Now we say that every company needs to become an intelligent software company.
Context changes everything. From the world of politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern. Only on Bloomberg TV and radio. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
Let's take a look at some of the stocks hitting highs and lows today. 52-week high hit by Lazy Boy, jumping the most since 2023 after reporting a sales beat. The maker of reclinable chairs and other furniture. Shares of theme park operators, Six Flags, as well as Cedar Fair, whose ticker is FUN, also hitting 52-week highs after announcing their combination, their merger. The deal is expected to close on July 1st, and you can see that both of those shares are up more than 5%. Cedar Point operator Cedar Fair up 7 2/3%. Coming up, Eric Friedman, U.S. Bank Chief Investment Officer, joining Bloomberg Technology with Caroline Hyde. That's next. That does it for Bloomberg Markets. I'm Matt Miller. This is Bloomberg.
Operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
The US to sell $70 billion in 4-week bills on June 20th to settle on June 25th.
I'm Caroline Hyde at Bloomberg's world headquarters in New York. Ed Ludlow is off. This is Bloomberg Technology. Coming up, insiders cash in on NVIDIA's rally as the stock purchases
and pushes deeper into record territory.
So US lawmakers aim to bar CHIPS Act winners from using Chinese tools.
A high-stakes bid to overturn the law requiring them to divest or be banned. Details to come. Meanwhile, Steve Cohen's Point 72 looks to raise $1 billion for a new fund, picking winners and losers in AI. We'll discuss that and so much more throughout this hour. First, let's check in on these markets and look, a little bit of a temperature check going on when it comes to big tech. Mag 7, is there too much concentration risk? Is there a bit of profit taking happening on the day? Is there one too many bankruptcies being filed? We're just down about 0.1% at the moment when we're looking at the NASDAQ more broadly. However, the S&P 500 near or at record territory. And in fact, we're getting a little bit more risk appetite creeping back into Europe. Look at the Stock 600, we're actually up 0.6% as we digest what is happening from a political risk perspective over in France. We push higher. We're looking at a 20-year yield just down 2 basis points as we anticipate a big sale of 20-year treasuries coming later today. We've also got a little bit of a digestion on what is happening from an economic front. Industrial production looking relatively sound as retail sales just pull back a little bit. Mixed picture in terms of where the Federal Reserve goes. Move on and look at what the individual stocks are doing, because look, we've got some key news out, Fisker being the key one in terms of bankruptcy news. We're up by 51%. Look, this is a penny stock. We've anticipated this move. Now we look for how they're going to be able to restructure or pay back their debt and indeed their creditors. We're seeing the stock really taking the hit. We are also looking at Micron, though, just on the up and up. It's your best performer on the NASDAQ 100. We're seeing it up more than 5%. Analyst Wedbush, for example, saying they only expect good news coming from Micron. Remember, their earnings come out later, June 26th. Nvidia as well pushing higher up, almost 2%. Just the $3 trillion stock that just continues to give, and we are indeed seeing some of those insiders buying and selling, and we're most notably seeing some sales happening with executives offloading some of those shares. But we want to talk about the chip market. We want to look at how, well, maybe they're being impacted by geopolitical risks. There's a new story out by Bloomberg. A new bill is seeking to ban government-funded semiconductor plants from using Chinese-made equipment. Here is Bloomberg's Mackenzie Hawkins. Your new story just articulating how if you're going to be getting some subsidies from the US government, I'm afraid you cannot have China's technology within that.
That's right. So the U.S. passed this massive semiconductor subsidy program coming up on 2 years ago in August 2022. And the Biden administration is about 85% of the way through allocating some preliminary awards for the funding. That includes $8.5 billion in grants to Intel, more than $6 billion in grants to each of TSMC, Samsung, and Micron. And lawmakers are really heavily scrutinizing this program. There are already some guardrails on how companies that receive federal funding can proceed in China. They can't have significant expansions of their facilities there. But lawmakers are now looking at Chinese equipment that might wind up in U.S. facilities. And so this new bill that was just introduced this morning would seek to ban any companies that receive federal funding from buying Chinese tools for their U.S. factories.
How realistic is it that Intel, that TSMC are receiving, well, taking goods and equipment from China at the moment? There's also other countries listed in your story, Russia, North Korea, Iran, but really China's the one that we're most likely to see equipment come from.
That's right. So every semiconductor export control measure sort of targets a handful of foreign adversaries, but this really is about China. It's a great question. The U.S., Japan, and the Netherlands dominate the semiconductor equipment industry with companies like Lam, Applied Materials, ASML in the Netherlands, and Tokyo Electron in Japan. And Chinese equipment makers have taken a pretty significant hit over the past couple of years because of U.S.-led export controls on their ability to get high-end semiconductor manufacturing tools and the chips themselves. But they have made some significant progress, and they're actually beginning to pitch U.S. companies on using their tools. Some companies have been entertaining those early-stage conversations, we are told, perhaps more as a way to impose some pricing pressure on the U.S. firms that currently supply those fabs. But lawmakers see this as a growing threat, not just at the advanced edge, but also some tools that are designed to create more older generation chips.
We keep an eye on how geopolitics affects some of these technology companies and ones that are getting federal funding. Mackenzie Hawkins, it's a brilliant story. Thank you very much for bringing it to us. Meanwhile, though, look, chip stocks do continue to power higher today. You're looking at the stocks, for example, hitting new highs. We're looking at Micron outperforming on the day. Should you be allocating into tech right now when we're at such overbought levels? Eric Friedman is the man to ask, US Bank Asset Management CIO. And look, we do still have the odd headwind, whether it be geopolitical risk, whether it's happening in France, whether it's, of course, China, US, but it doesn't seem to be crimping the appetite of big tech at the moment, Eric.
Yeah, Caroline, I agree. It seems like this is the story that we're hearing consistently across not just corporate America, but also global companies, which is if you want to get bigger, stronger, faster, it's not so much a focus on labor, it's a focus on technology. And to your point, it has been really centered on chips and some of the larger integrated chip providers. So that's a space that we think is bought on weakness as opposed to sold at these levels. And part of that reason, Caroline, is the very consistent CapEx story that we're seeing. We have looked across the globe and companies that are not just in the technology industry, of course, but whether it's banks, whether it's healthcare providers, this push towards what AI and other big data services can provide, we think is an ongoing theme. So it's a space that we think that an investor, again, we're benchmark relative investors, we want to be at least neutral, if not overweight that space right now.
Don't fight the trend, basically. But sometimes momentum does come to a screeching halt, Eric. Is there a way of protecting yourself from the downside?
Yeah, I think it's a great point. I mean, one of the things that you did a great job in the prior segment was thinking about protectionism. And look, we've got a lot of data points coming up. We've got the July 4th, Sunak election. We've got the considerations around, of course, the U.S. Republican and Democratic national conventions, where we'll hopefully hear some more demonstrated policies regarding regulation and also on more tech specifics, if you will. So I think it's a space where you can lighten up, but we would not lighten up beyond market weight. That's a space that, again, we continually think that trend is there. What are some things that could really cause that to go the other way? Again, geopolitical risk is one. Also, if we do see a creep higher in interest rates, which is not in our current forecast, but if we see not just the Fed, but other global central banks push off rate decreases, that's something that could also be an issue for valuations on these companies. But again, it's a market that has to be proven that it needs to be sold as opposed to be bought, which we think, again, it's still a good place to be for investors now.
Yeah, Eric, when you are sort of looking at the broader benchmarks and you're focusing your allocation as thus neutral or maybe a little bit overweight, at what point do you start to say, okay, we need to broaden? And do you even have to factor that in particularly? When are you looking to diversify? When are you worried about concentration risk when it comes to the AI bet?
Yeah, it's critical as an asset allocator to think about the over concentration, if you will. Again, if you look at the complexion of the S&P 500, that does give us some concerns just about how overweight, if you will, on a normalized basis, some of that index is. But if you look across the pond, again, we're big believers in EFA as a long-term diversifier, but that's largely a value-oriented index. And so given that there is some participation in tech in Germany as well as in the Netherlands and space like that, and also to the point made earlier about Japan, there's a lot of feedstock implications of the chips back and forth from a political standpoint. It's not just the chip makers. It's obviously the designers. It's obviously some of the individual resins that go into the chip making process. So I think the point is that you want to be smart, I think, first and foremost about the OEMs. And then secondly, you want to think about the other parts of the ecosystem, which are still highly valued. We think places like Japan are decent allocations in this environment. But again, you can't get, I think, too bearish on the space right now, just given the backlog of demand that we think will still be there for some time.
Perfect perspective, global as well. Eric Friedman of the US Bank. We really appreciate your time today. Meanwhile, coming up, going into the AI trade, Steve Cohen's Point 72 raising a new fund to pick the winners and the losers of artificial intelligence. We're going to discuss that one next. Meanwhile, let's just keep an eye on what's happening with Apple. Interesting report coming from The Information. Apparently, they've halted work on the next high-end Vision Pro headset. We understand that at least one supplier that works on the next high-end Vision headset has been told to halt. This is coming from The Information. Currently down by 0.8%. Fewer features are going to be happening before the end of 2025. This is Bloomberg Technology.
you actually offer a payout at 7 years to encourage people to explore if they don't find themselves in management position. I mean, what's the thinking?
Yeah.
I mean, like, what's that about?
We're not forcing everybody to, be kicked out, right?
But you encourage people to explore.
Exactly. We encourage people to think about their, because sometimes it's easier, even for me, if I don't need to change everything, it's easier, right? Change is really tough thing for everybody. Should I do this job for next 5 years, 10 years, or should I try a new thing? If I had to think, that is a great opportunity to think about it. We need to think about what kind of talents I can have for the next 5 years, 10 years. What's the best way to contribute to the world?
Good morning from our world headquarters in New York. I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
Time now for Talking Tech. First up, Fisker has filed for bankruptcy. The troubled EV maker is listing assets of between $500 million and $1 billion, and liabilities of between $100 million and $500 million in its bankruptcy petition. Now, the filing protects Fisker from creditors while it works out a plan to repay them. Plus, Best Buy, it's preparing for one of its biggest product launches of the year, AI computers. The retailer is training more than 30,000 employees to sell and repair PCs equipped with Microsoft's new Copilot AI. That goes on sale today. Best Buy says it has exclusive sales rights to more than 40% of Copilot PC models. And Huawei says it's considering cutting fees on in-app purchases. That's through its mobile operating system. According to people familiar with the matter, the company is weighing a 20% commission for payments made via their mobile stores. Look, that undercuts Apple and Alphabet's 30% fees. Huawei has not yet made a final decision, and its plans could still change. Let's just talk about AI a little bit more, because Steve Cohen's Point72 is seeking to raise about $1 billion for a new stock-picking hedge fund focused on artificial intelligence. Story being broken by Hema Palmer, who joins us now. And tell us about this new fund. It's a big chunk of change, $1 billion.
It's a good chunk of change. And for a sector-specific fund, we haven't seen Point72 come out with a sector-specific hedge fund ever. And the sector they've chosen is AI, especially looking at semiconductors and hardware. And so, they're raising $1 billion for the fund, which is a pretty sizable fund. But keep in mind, the firm as a whole is $34 billion, so still not as big as the main hedge fund and some of the other things that they do.
But it's notable when we get a new fund, a first fund in more than a decade. Why is Steve Cohen pursuing this avenue? Because it's going to have long positions, but also short too.
Precisely. So he's quite bullish on AI. He thinks that it's going to be transformative, that it'll change the way companies work, how they make money, how much money they make. He thinks that the opportunity can be over the longer term, and so you might see big winners, you might see big losers. So there's long and short opportunities here, and he thinks that this is the best time to be investing. And so that it makes sense that he would launch this kind of a fund.
It's not just him making the investment decisions here.
No, exactly. He has a PM that's going to be focusing on the tech space. Steve will be overlooking and overseeing the firm and the fund. But what's interesting here is that this is a new hedge fund vehicle that they've decided to create for these investments. And typically, they have their main hedge fund that does investing in stocks and they do macro trades, and it's more market neutral. This fund will be more flexible. It will be able to be a bit more long biased if they see opportunity. It will focus on that one space. And so, it's an interesting move that he chose to create a new vehicle for these investments versus just putting it in the main fund.
It's notable that also not been afraid to make bets when it comes to technology, but actually has used just his own money when it comes to the VC area. But there have been other areas that they've looked at technology to actually improve things, right, too?
Exactly, yes. So they have venture investments, too. They have a unit that makes investments only for Steve's money. They have a separate unit that makes investments for venture and in private equity for outside capital. So you're seeing this firm that back in the day was just old school hedge funds, long short, really push into new areas, going more into venture, going more into privates, pushing into macro as they've been expanding that unit, and now pushing into AI.
And using generative AI to improve some of the bets they make from a private equity perspective. Hema, it's a great story. It's really well read today. Thank you so much, Hema Palmer, on all things Point 72. Meanwhile, coming up, we're going to be joined by the CEO of Incredible Health on how the company is integrating AI, you guessed it, into its platform, and the real-world impact it's having on healthcare. That's next. Meanwhile, look at Snowflake. Look, we understand that there was indeed a hack that occurred to some of Snowflake's own customers. Now, we understand that the hackers are now demanding as much as $5 million from those particular clients. Remember, as many as 10 companies were breached in a campaign that targeted Snowflake customers in particular. We're currently off by 1.7%. This is Bloomberg Technology.
ECB's not says we must base further monetary decisions on incoming data.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special Equality series every Thursday in June at noon Eastern Time. Bloomberg Equality, celebrating inclusion this Pride Month.
Time now for our weekly AI in Action segment. And today, we're looking at AI's impact on healthcare, and in particular, how it might even alleviate some of the burnout of nurses, help with the shortages there, based on new data from healthcare worker platform Incredible Health. Here for more is Iman Abuzaid, CEO, co-founder of Incredible Health. Look, we want to talk to you about how ultimately you're seeing a real worrying trend here. There's going to be a huge shortage of nurses. Can technology help in any way, Iman?
Absolutely. So in our most recent study, 90% of healthcare executives think the nursing shortage is going to worsen in future years. So the way we see the role of AI is that it can have an impact in increasing opportunities for nurses and other healthcare workers too. We've experienced it ourselves. Our platform is used by over 1 million US nurses and by over 1,500 hospitals. And on Incredible Health, we've implemented AI features that have benefited these workers as well. So for example, we're now using AI in what we call our resume wizard, which enables nurses to create resumes using AI. And we enable hospitals to send out messages to nurses using generative AI, which has led to a 20% increase in interview requests being accepted.
So can totally see how it's making, ultimately, nurses accepting interview requests that much easier. Tell us a little bit about how healthcare providers, the hospitals that you work themselves, are perhaps using generative AI and might be able to alleviate some of the burnout, the stress, the work for the nurses they employ?
Absolutely. So in our recent study that's just published today, over half of healthcare leaders are exploring technologies that use artificial intelligence for nursing operations. Primarily, they're looking at using it for scheduling and administrative processes. We're seeing a lot
ECB's
less,
Knott says
less than
inflation
10%
might start rising
using
again.
it for recommendations in patient care. And the reason that they're focused on this technology is because burnout is still the top reason why nurses are leaving the workforce and why they have such high turnover of over 20% annually in hospitals too. So it's an urgent issue to alleviate the workforce, and AI is a potential for doing that.
I can imagine that actually in years to come, generative AI and the way in which we interact with it might help with the mental health burdens that nurses feel too.
Absolutely. So, when there's several things that nurses are going through right now. First of all, they're very dissatisfied with the ratios of patients that they need to take care of. So they're taking care of more patients than usual. And the healthcare executives acknowledge that as well. They're also dissatisfied with the nurse-to-patient ratios at their hospitals. We're also seeing burnout and stress be the #1 reason for turnover. And then finally, we're seeing an increase in workplace violence. So over the last year, there's been an increase in verbal and physical assault from patients or patients' families on nurses. And so for all these reasons, these are high priority topics that healthcare executives are trying to tackle with technology like AI, but also with other more traditional methods, right? Including salary increases, increasing flexible scheduling, and improving these nurse-to-patient ratios.
As a co-founder and CEO of Incredible Health, how quickly have you been able to increase the skill set of your own employees to adopt generative AI to basically make your product even better?
Yeah, so we have a fantastic product and engineering team here at Incredible Health, and since ChatGPT launched, they've been very excited to use that technology. And so yes, we do use GitHub. We use Copilot, for example, when writing code, and then we've also implemented AI in a whole range of features that benefits our users too. So we're big believers in that technology and the impact it can have on our users in a beneficial way, especially when it comes to expanding opportunities for healthcare workers.
You're headquartered, though, in San Francisco, where I'm sure the conversation every other second is around generative AI or AI. How is that differing with the global workforce that you employ or help employ within hospitals? How does it affect your own talent pool and how expensive it is?
Yeah, so look, as far as the actual Incredible Health marketplace itself, we have over 1 million U.S. nurses and 1,500 hospitals here in the U.S. So we operate pretty much in most of the country. And so we've actually seen the uptick in adoption of AI to be quite rapid throughout the entire country, certainly not just focused in the Bay Area. And then also we operate our company fully remote, and so have an engineering team and a product team that's spread across the country as well. And so we're really seeing the sort of adoption and interest in AI be national. It's widespread.
How do you use it, Iman, on a daily basis?
How do I personally use it?
Yeah.
Sure. I mean, I've used ChatGPT pretty consistently when it comes to improving written communications, whether it's to customers. It helps sort of edit some of my marketing copy as well. So I definitely have personally used it day to day at work too.
Don't we all? Thank you so much, Iman Abuzaid, CEO, co-founder of Incredible Health, just talking us through how generative AI might change the game for nurses going forward. Meanwhile, speaking of artificial intelligence, NVIDIA insiders have sold shares worth more than $700 million this year alone as the stock continues to push deeper into record territory. Now, amid the unrelenting demand for its chips, company executives and directors have unloaded about 770,000 NVIDIA shares so far. Now, that's the most in the first
Brent crude futures gained more than $1 a barrel to $85.26 a barrel.
Shares were sold, according to data compiled by Washington Service. Now coming up, Bloomberg's Jamie Terabay joins us to take a look at the high-stakes bid at ByteDance as it's trying to overturn the potential ban on TikTok and what disclosures it wants to see. Meanwhile, let's just have a quick look at what's happening in the US with Altice USA. Look, creditors are trying to band together here to ensure that they're working as one. They don't want to have any creditor brawls. They don't want to fall out. They want a pact designed to prevent exactly that. They're going to be signing a cooperation agreement amid concerns that basically Altice, the company, could move assets away from their reach, according to people with knowledge of the matter. Now, it could initially last about 18 months. Remember, this is Altice that ultimately is all part of the Drahi empire. Those creditors in Europe have done similar things when it comes to Altice France. Let's have a look at what's happening in Apple as well. There has been some reports coming from the information today that Apple has informed at least one supplier that work on its next high-end vision headset have been halted. Now, a report saying that the employee at a manufacturer that makes the key components for the Vision Pro is being cited here, remains at work on a more affordable Vision product with fewer features before the end of 2025. We're off by more than a percentage point for Apple. Maybe a bit of profit-taking happening after we've seen such a record run for this particular stock. From New York, this is Bloomberg Technology.
Arch has laid plenty of groundwork for future revenue, but for now, Mark Messler's most pressing challenge as CFO is conserving capital.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, and but we also have to be nimble around that as well because things change by the day.
Archer went public in 2021 in a reverse merger with a SPAC, Ken Moelis's Atlas Crest Investments. Through August 2023, the company raised over $1 billion from investors including Stellantis, Boeing, United Airlines, and Cathie Wood's ARK Investment Management.
Does that ARK investment open doors for you to bring in different kinds of institutional money going forward?
It does. I mean, I think there's a lot of credibility that comes in with an investor like ARK. As I think about, my top targeted list of investors over the next 2 to 3 years, an investment like that gives us some credibility and gives us a little bit of staying power as I go in and talk to other investors.
With the SPAC pipe now closed, Archer's facing a new phase of raising capital.
I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. I'm wanting to show them progress. I want to create credibility with them that we are marching towards our goals of commercialization.
This is Bloomberg.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. A quick check on these markets for you. Maybe a little bit of profit-taking coming in big tech at the moment. We're seeing also some mixed economic reports coming in the United States. Retail sales just slowing a little bit. Are we having a slight weakness in the consumer here in the United States, even though industrial production
At 11:40 a.m. Eastern, we expect comments from Fed's Collins, who gives a keynote remarks at the Lawrence Partnership annual meeting and 10th year anniversary. X is expected, but no Q&A.
Actually getting a bit of a reprieve at the end of trading. We're up 2/3 of a percentage point as maybe we just digest what's happening in terms of political risk coming from France. Bitcoin, though, under pressure, off by almost 3%. Maybe that is more of a trying to rationalize where rate cuts do go for this year. If there's going to be fewer of them, maybe some risk assets just pair a little bit. Move on and have a look at what's happening in terms of individual movers at the moment. I'm looking at stocks. Look, the index overall doing incredibly well today. Chip companies, just think of Micron once again on the up and up. Wedbush saying that there's only good news likely to come from this particular company. I'm looking at, though, that what isn't performing well. EVs, Fisker, files for bankruptcy. Look, we'd long awaited this. In fact, it's the second time that Henrik Fisker, of course, the man who had designed some real supercars, now sees once again another one of his companies having to file for bankruptcy, trying to protect itself from creditors. We're off by 48%, but it does drag other EV makers down. Tesla off by more than 2 percentage points today. Meanwhile, we're just going to flip gears and think about a privately held company that has been long in the headlights of regulation here in the US. I'm talking the Chinese company ByteDance, parent company of TikTok, of course, and it's entering a high-stakes bid to overturn the potential ban of its app imposed by US lawmakers. To talk us through how they are looking to do that is Jamie Tarabay joining us with more. And this is interesting.
So noting the France's CAC 40 up 0.7% and Spain's IBEX up 0.9%.
Meetings that made them really worried about TikTok. Might we learn something on what those meetings talked about?
We've learned a couple of different things that some of the lawmakers have discussed, including the revelation that there was an overlap between people on the board of ByteDance and their connections with the Chinese Communist Party, something that the CEO of TikTok told hearings on the Hill that there simply was no connection with the Chinese Communist Party. There were certain elements and events that happened over the course of the last year that really took most of the lawmakers who were lukewarm on legislation from not voting for it to convincing them that that was the only means necessary. And that's one of the things that we are looking at in this piece.
So, from what we understand, ByteDance itself, or indeed TikTok and executives, are basically pushing for more information to be divulged to the greater public. Thus far, they've sort of said, look, the risks cited by lawmakers are hypothetical.
Right, and it's very interesting because the lawmakers have said, look, the burden of proof is on TikTok itself. They're the ones who have to show that they're not a national security concern. There's plenty of evidence out there from not just with Congress and the things that have been sort of spoken about and reported in Congress, but there have been reports and research and findings done in other places around the world, in Australian Parliament, for example, that have basically displayed the sort of national security concerns that the lawmakers have referred to. One of the things that is an issue, though, is if the DOJ decides to put forward information that might be classified, they would have to do that in a closed setting. Otherwise, if that information is going to be released to the public, or at least submitted publicly in a lawsuit in response to the lawsuit, it would need to be redacted in terms of making sure that elements like sourcing and methods of obtaining that information were not included in the details. But again, it's really the lawmakers have said this is an act of Congress. It's really up to TikTok to prove their case rather than the lawmakers and the government having to prove what TikTok is alleging about the sort of the speculative nature of the national security concerns.
Yeah, I can't imagine, and indeed, as quoted in your story, Paul Stephen, a University of Virginia law professor, saying, like, it's inconceivable that a court would force them to release anything, given it is such highly sensitive data taken by, well, indeed, looked at and found by the United States. But I'm interested in just the timing of all this. It feels as though we're getting this pace of discussion once again, because June 20th is when we need to hear from ByteDance, from TikTok.
That's right. In a matter of days, we're going to have, at least from TikTok, they're going to lay out their case entirely, as we know that they have said that the law was unconstitutional, that it impacts the freedom of speech of its 170 million users in the US. And as you said, the legal expert that we quoted in our story says that if that were really the case, it would be about every platform, not just TikTok, but there are other platforms. So freedom of speech is essentially protected. It's also worth noting that TikTok is
At 11:40 a.m. Eastern Time, we expect comments from Feds Collins, who gives a keynote remarks at the Lawrence Partnership annual meeting and 10th year anniversary. Text is expected, but no Q&A.
Is that TikTok has a global audience of over 1 billion users, and they're fighting incredibly hard to hang on to these 170 million users in the US. And I think that in and of itself is worth exploring.
Bloomberg's Jamie Tarabay, great to have you on the show. Thanks for breaking it all down when it comes to TikTok. Meanwhile, coming up, we're going to be joined by the CEO of Waabi, Raquel Urtasun, to talk about how a new funding round for the driverless trucking company is really shining a light on the technology they have and how quickly we could see automated trucks on the road. This is Bloomberg Technology.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep rain World Cup.
This is a three. As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
The top names in business are on Bloomberg.
They're kind of predicting a soft landing, and you see that in both stock prices, which are kind of high, credit spreads, which are kind of low, markets, which are kind of wide open. That's all good. Doesn't tell you what the future is going to be. But I think there are a lot of inflationary forces in front of us that, you know, may keep it a little bit higher than people expect. My view is, whatever the world is pricing it for a soft landing, I think it's probably half that.
1 minute remaining.
I think the chance of something going wrong is higher than people think.
Bloomberg. Context changes everything.
Waabi is a company working on applications of generative AI to the physical world. And today it's announced a huge raise of $200 million in an oversubscribed Series B round, led by Uber, by Khosla Ventures, and with participation from the likes of Nvidia, Volvo, a who's who of corporate VC. The new funding brings total investment in Huawei to more than $280 million. I'm pleased to say we're joined now by the co-founder and CEO, Raquel Uriton, and we thank you so much for joining us, Raquel. And tell us about fully autonomous trucks by 2025. That feels really bold to me.
Yeah, it's bold, but at the same time, it's something that it's the next milestone.
Fed's Collins says, I'm cautious against overreacting to recent inflation data, and it's appropriate for the US Central Bank to remain patient on monetary policy. I remain realistically optimistic on the economy and monetary policy, and it's too soon to say if inflation is retreating again to 2%. Collins says inflation is still stubbornly above the 2% target, and the economy has been remarkably resilient. The US Central Bank has made notable progress lowering inflation, and recent inflation data has been encouraging.
Yeah, so I spent the last 2 decades really trying inventing technology, AI technology, to bring this idea of a single AI system that is able to reason like a human does, so that it can really generalize to all the different situations that might happen on the road, because we will never be able to observe everything prior to deployment. And this reasoning abilities is remarkable in terms of adding an extra layer of safety compared to anything else that we have seen in the industry. So one way to think about it is that we have this system that can be works by perceiving the world, creating interpretable abstractions, and then uses those abstractions to reason about what is the best, from all the possibilities of the things that it can do, what is the best maneuver. And that's much safer, much more efficient than anything that we've seen before. And it's provably safe. So we have solved the alignment problem in AI, which is very important to bring this technology to the physical world.
I mean, as you mentioned, you've been basically at the forefront of AI and applications in the real world for 2 decades. You applied some of that know-how to Uber, and you're now already sort of working alongside Uber when it comes to trialing autonomous on the roads of Texas. And they're backing you in this particular fundraise as well. What gets you from trial, error, to actually it functioning by 2025? Does regulation have to change, Raquel?
So the regulatory framework, particularly in Texas, where we're going to launch, enable us to deploy this technology. And we are working with all the regulatory bodies, really on a day-to-day basis, so that they can understand our technology with the trust. And for the first time, we have the ability to really make a much more robust safety case compared to the rest of the industry, which is trying to crank up miles in order to have a way to prove safety. But those miles are not sufficient, right? If you look at the rate of events on highways, a severe injury will happen every 10 million miles. And death on the road is every 100 million miles, orders of magnitude. So you need something different. And thanks to Huawei World, our generative AI simulator, for the first time, we have a way to prove safety in a scientific, mathematical way. And that's something that the regulators really appreciate, as finally having the ability to really certify systems in a much better way than the industry is today. So they're very excited about what we are building. And as I said, we bring them alongside and build trust from day one.
So when everyone's trying to poke holes in Elon Musk's idea of robo-taxis coming in a year or so, with the August the 8th date hot in many investors' minds, do you think that that can be a reality, and ultimately we can be seeing autonomous vehicles more broadly, whether it's trucking or cars or robo-taxis, by 2025?
I would say that we will see in the end-to-end other types of approaches that you see in the industry today for level 2, level 3, which is not fully autonomous systems. The problem with those approaches is that they are black box architectures. They are not interpretable. They are very difficult to validate and verify, and they require massive amount of data and compute to be trained. And it's not scalable either, like the previous generation of technology, AB 1.0, with the hand engineer approach. So we need something better, and that's what we have with Huawei, this new generation of foundational models that they are really purposely built for the physical world, so that you can really deploy safely this technology in a way that has superhuman capabilities. So we will see, in the next, months, years to come. But what is very clear is that self-driving is going to happen, and the scaling will happen first in trucking. That's why, this is our first use case. But WAB is going to do so much more than just self-driving trucks. So humanoids, warehouse robotics, all those different use cases would be something that we will target in the future.
Well, you've got that big infusion of strategic capital to get you there. Raquel Urtasun, thank you so much for talking us through what Waabi's got in store for us. Meanwhile, let's stay in the world of promising AI applications and where startups are getting involved, because Redpoint Ventures just unveiled its second annual Infrared 100. It's a comprehensive list of the next 100 promising private companies in cloud infrastructure. Guess what? AI has a big role to play. Erica Brescia is with us, Managing Director at Redpoint. And just dig through some of the companies here. What are the broad trends of the opportunities for startups looking to galvanize AI right now?
Well, I think, what we're seeing is that AI is permeating every aspect of our lives already, and this is really just day zero. And if you look across these companies and at their growth trajectories, what you're seeing is that we're seeing incredibly, almost unprecedented levels of growth as people harness the trend and the demand in the market for AI. We're seeing revenue ramp more quickly than ever before. Companies like Modal that are helping companies put AI into production and build apps that run on top of it are able to grow incredibly quickly. And what's most exciting to me is this is just the beginning.
I think that's exactly it. For many, it's been where is the value going to lie? For now, picks and shovels, infrastructure, the actual chips, the hardware that you need to build these large language models. And then you're saying it's companies that help you
Angola crude loading set at 1.26 million barrels per day in August.
Starting to see startups build the next layer of opportunity.
Oh, across the board. There's a company, for example, called Norm.ai that's helping turn hundreds of thousands of regulatory rules into automated AI compliance agents that can help financial institutions better comply with the regulations in place. And the work is so insurmountable that you couldn't do it before without AI. So yes, of course, it starts with the picks and shovels, but we're already seeing AI start to move up the application stack into categories like compliance, insurance, financial services.
Are there already too many startups? I mean, we had Clem DeLong over at Hugging Face saying, look, I'm getting calls 10 more than a week of companies needing to sell themselves to me because they cannot keep going, they can't keep growing, they don't have the money.
That's absolutely the case. Whenever you have such an incredible platform shift like this, there are a lot of venture dollars that go into it, a lot of optimism. There's a Cambrian explosion. That's not sustainable. Also part of a healthy ecosystem, right? We have all these brilliant founders that are coming out of existing, incumbent companies to try to build something new, and they won't all be successful, but we learn a little bit every time. And some of these companies will, of course, get acquired into larger institutions, and then people will bring their own learnings and innovations into those. And that's the cycle of startups that we've seen in every other platform shift before. So I think this is a good thing, even if temporarily a little painful for some.
Erica, what's interesting is we were just talking with Waabi, and they've got to deal with Uber, Airbnb, these companies that came into existence, disrupted, and stayed independent in the previous wave of move to mobile. Now we see these weird deals going on, acqui-hires, Inflection going into Microsoft, sort of relationships built between OpenAI and every other company. What sort of companies will end up existing, or will they be bought out or M&A and deals done with incumbents?
Sure. I mean, I don't have a crystal ball, and I think it's really important to call out that, we're still climbing the hype cycle. So there is a long time to come where we'll see a lot of evolution, just like we saw in the shift to mobile. You mentioned all these companies, and they all came several years after mobile phones and the smartphone really came out. So we're going to see the same thing, I think, with AI. We're going to, of course, see a ton of M&A. Of course, all eyes are also on regulators to see what's allowed to happen. And I think you take the case of Inflection and some of these other, I'll call them creative deal structures that probably had to be put in place because of fear of regulators. But the incumbents know that they need to harness this technology. They need to forge relationships with these up-and-comers in order to remain relevant over time. So yes, we're going to see some generational companies that are getting formed right now, just like we have in previous platform shifts. We're also going to see a lot of very interesting and exciting alliances between startups and incumbents come. We're going to see a lot of M&A to come as well. And I think, you know, some of the greatest companies of the next 20 years haven't even been started getting built yet.
It's not even on the list that you bring us. Well, we thank you for doing the hard work, for finding some of those 100 hot ones already. Erica Brescia is Managing Director at Redpoint. We thank her. Meanwhile, coming up, X makes a payment play. Details behind the company's ambition to take on the likes of Venmo. That's next. And talking of payments, we understand that Apple is shutting down its Pay Later program, which let customers make purchases on an installment plan basis. Well, they're making a retreat from the efforts to offer more financial services in-house. We're off by 1.3%. A lot of news around Apple today. This is Bloomberg Technology.
At 12 p.m. Eastern Time, we expect comments from ECB's Villeroy, who speaks at awards ceremony for the prizes in monetary economics and finance.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. And you know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal. The Deal. That deal. The Deal.
Huge deal.
Who dug this up? One of y'all's in trouble.
The top names in business are on Bloomberg.
You need to have an AI game plan. We used to say that every company needs to think about becoming a software company. Now we say that every company needs to become an intelligent software company.
Context changes everything. The UK decides. On July 4th, amid debates about tax policy, border security, foreign policy, and more, voters head to the polls to choose the next leader. Bloomberg has full coverage leading up to the election and will bring you the results after all the votes are tallied. Tune in for continuing coverage on Bloomberg Television. Context changes everything.
Angola to boost August crude exports to the most in almost 4 years.
Everything app. We're back there. Elon Musk's X. Well, to do that, it needs to perhaps add payment networks into its social media platform. Now, according to a whole trove of documents submitted to state regulators, the company is looking perhaps to add Venmo-like payment features for use on X. For more, we're joined by Bloomberg's Aisha Counts, who went through some 350 pages of documents when it comes to emails related to money transmitter applications made in various states. And Aisha, what have we learned from how payments will be interweaved to X?
Yeah, as you mentioned, we went through a lot of documents. We talked to state regulators because one of the things X has to do in order to allow payments is actually be regulated in all 50 states. And so we found a whole host of things. We found out that Elon Musk owns 75% of X Holdings, the company that then owns 100% of X. We found out X's revenue over the last year. So they made about $1.48 billion in revenue, which is down 40% from the year before Musk bought Twitter. So details like that. And then, of course, more details on how they actually plan to implement the payments aspect and how that's going to feed into an Everything app.
So let's talk about the payments part in particular, Aisha, because look, that's his roots, right? That's where he first came from, one of the PayPal mafia, as he was known, and his first company was indeed called X. What does he envision us using payments for and how on the platform.
I mean, he envisioned it just like Venmo, as I think you mentioned earlier. So if you think about being able to send money to friends and then being able to send that money back to your bank account, that might look like products and services that you buy through X. Maybe even in the future, it could be some of Musk's other companies. And then there's a vision of actually being able to use it in a way like Apple Pay, where you go into a physical store and you can buy goods. So it looks like all of those things together in one. And as you mentioned, that's so important for an everything app. If I'm going to, buy a good or service or order food, or if I want to buy a product, I have to have a way to send money. And so it's really a linchpin of that plan to really be able to do everything in one place.
At 12 p.m. Eastern Time, we expect comments from ECB's Villeroy, who speaks at an awards ceremony for prizes in monetary economics and finance.
Adyen and other players in the field. What more do they need to build here?
I mean, absolutely. They need those partnerships. You can imagine they
At
outline this in
Dayton,
documents
the
as
U.S.
well.
House of Representatives is launching a bipartisan critical minerals working group to address China's dominance of key materials.
So maybe other payments processors, obviously banks, they're banking with Citibank right now. And then if they're going to sell goods and services, they might want to have partnerships with retailers, and they might even want to have conversations with advertisers. If advertisers want to put an ad for their product and someone can click on that ad and then go directly into the purchasing process, I mean, all those sorts of things are opportunities for them to develop more partnerships and really get more people buying goods and services and sending money.
Last 30 seconds. Crypto related?
No crypto, which is sort of surprising, and it might be because of some of the regulatory hurdles with that. You might have to go through some additional steps, but X told regulators that it has no plans to do crypto at this time, even though we know that Musk has been a huge fan of Dogecoin.
Oh, I have to hold out for a little while longer. Asia Counts, great piece of reporting, a whole trove of emails and documents. We appreciate you scraping through them. Meanwhile, I think that does it for this edition of Bloomberg Technology. Don't forget to check out our podcast. You can find it on the terminal, as well as online on Apple, Spotify, and iHeart. From New York, this is Bloomberg Technology. Enjoy.
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Invest, don't trade. Invest for the long term, i.e. when markets are challenged, don't get spooked. Don't get involved in investment hobbies. Investment hobbies are generally not profitable.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Shortly expecting comments from ECB's
Bloomberg
Villeroy.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome to Bloomberg Markets. I'm Shonali Bassick. Stocks are mixed into session after data showed a slowdown in U.S. consumer spending. Of course, that retail sales data is drawing some more jitters about that consumer, and you leave that with an S&P 500 up about 0.7% or 0.1% rather. We were about flat on the day a little earlier, gaining some steam now. We have the NASDAQ 100 still in the red on the day, but just barely, pretty much flat on the day still. The two-year yield really recouping some of its losses just a day ago. 5 basis point move lower on the day here, and you're having the two-year yield standing around 470, just under 471 on the day. Of course, cooling of those yields after that retail sales data this morning. Some midday movers on the equity side here. We're looking at the CEO of Boeing set to face a Senate hearing later this afternoon. This comes after a quality inspector filed a claim saying that the plane maker mishandled and lost track of hundreds of faulty parts, some of which have been installed on the new 737 MAX planes. According to the complaint, more than 400 parts were mishandled and many were deleted from an internal cataloging system. We're also watching shares of Citigroup. The company holds its services investor day here and also outlines its targets for the year. CEO Jane Fraser said the services unit is at the heart of the bank's new strategy. Citigroup up about 1.5%. Remember, I'll be speaking in an exclusive interview a little later today with Citigroup CFO Mark Mason at 2 p.m. New York time. And we've also seen a number of notable calls for S&P targets moving higher. Bloomberg's Abigail Doolittle with the details.
It has been pretty remarkable, Shonali, because we have this big rally for the S&P 500 right now over the last 13 days, up 10 of those 13 days, up about 5% over that time period, and some of it having to do with these animal spirits being stirred by these Wall Street strategists. Now, it started last Friday, Goldman Sachs raising their price target for the end of 2024 to 5,600. It had been at 5,200. It was the third price target raised for Goldman Sachs in a relatively short period of time. They're talking about the fact that the earnings season that was, it's amazing, we're almost upon a new earnings season, it was less bad than expected. And also the idea that big tech dominance could continue. But the target that really took a lot of people's attention, that really got the attention of a lot of people, Evercore ISI saying 6,000. That's 10% upside potential from here. And it's also notable because strategist Julian Emmanuel, he had, prior to this, had a target of 4,750. So almost feels like a little bit of capitulation. He's talking about the idea that the economy is going to be okay, that the Fed is not going to be putting too much pressure on stocks, AI, big tech. So that really is the theme of the name. But if we take a look, Shonali, at a bigger chart of the S&P 500, it is basically parabolic, this rally. So the question is, can it hold? If we were to put it into the context of moving averages, more than 100% over the 200-month moving average, relative to the global financial crisis, it had only been 67% above. And then in the tech bubble, it had been closer to 200%. So it's hard to say exactly what is ahead, but stocks, frothy, it does seem right now, Shonali.
I want to welcome in now our audiences across our Bloomberg television, radio, and YouTube platforms, as one of finance's most notable names is running for a U.S. Senate seat. That is combat veteran and former Bridgewater CEO Dave McCormick is a Republican Senate candidate in Pennsylvania and joins me with Bloomberg's Joe Matthew. And Dave, there are a number of things we want to get to with you, but we were reconnected after you wrote an op-ed entitled "America Must Lead" on cryptocurrency. And, you know, it was somewhat interesting to see the former CEO of the world's largest hedge fund take a pro-crypto view, given how reticent the financial industry has been in adopting crypto. Why is this a platform that's important to you?
Well, thanks for having me. Nice to see both of you. You know, the reason that I advocated this is I think it's good economic policy, but it's also good national security policy. And I've obviously been following crypto for a while now. and the developments around blockchain. And I always thought it had appeal as around the principles of individual freedom and privacy. Data security, data privacy is something that is incredibly important and increasingly so. But I was always worried about the national security implications. And I think what's become clear is that we are in the next great wave of innovation with crypto and blockchain. And if America doesn't embrace it, we're going to be left behind. And by embracing it, we can create great jobs, a great source of innovation. I've lived through a number of waves of innovation, whether it was the PC and the internet, or whether it's some of the new developments around AI. This is one such wave that we need to embrace. And the national security implications of this are clear, which is that blockchain has very limited, and crypto, very limited illicit activity, something like 0.345% of the transactions. But it gives a roadmap for national security officials and prosecutors to zero in on illicit activity. So the national security and legal experts I talk to think that it offers a real source of eliminating, not increasing illicit activity. And so for all those reasons, and important to Pennsylvania, a job creation engine for Pennsylvania, I've embraced this and encouraged lawmakers to lay out a regulatory framework that will allow innovation to continue.
Well, it's interesting. Dave, welcome. It's Joe Matthew in Washington, and great to see you. As we consider this, you point out in your op-ed that this is also a matter of staying competitive with, if not beating China when it comes to crypto. And I wonder if we could get to the matter of China right off the top, because we have a lot of questions for you on the economy, on taxes and tariffs. Your opponent in your Senate race, Bob Casey, has pointed out repeatedly the role that you had at Bridgewater in directing investments toward companies based in China. Can you tell our listeners and viewers the extent to which you were personally involved and the effort behind those investments, how you see them now?
Sure. Well, I've been very involved with China for more than 20 years as a policymaker. In the Bush administration, I was one of the folks that was very involved in making sure that China didn't either steal or get access to some of our key technologies. And as the global economy has evolved and as China's evolved, it's become more and more of a national security threat, particularly with the rise of President Xi, who has a very aggressive view of China's role in the world vis-a-vis the United States. With regard to Bridgewater, Bridgewater is a global investment firm. We serve global clients while I was there and still. And in Bridgewater's portfolio, there was something like 2% of its allocation that was devoted to China. And that was mostly in portfolio types of investments. And so this is one of the challenges as we think about national security going forward. One of the things I've advocated is we need to make sure that investors are not investing of any kind, are not investing in companies that support the Chinese military, support the PLA, support the Communist Party. And the government should take a much more active role, and I've said this in testimony and so forth, to identify which companies we do not want American investors or American companies to invest in. And that's one of the things I'd be advocating as a senator, as well as decoupling in key industries that are going to be absolutely critical to America's economic and national security going forward. So that's the vision that I've laid out, and I think what's going to be required. And I honestly think my experience with China, both as a national security official, but also as a global CEO, is going to help me be much more sophisticated in how we deal with the Chinese, because I actually know what I'm talking about.
Dave, to that end, I want to get your view here on the tariff policies put forth during Donald Trump and his presidential run. There are a lot of mainstream economists, including Larry Summers, concerned about the inflationary impact that such policies could have. Do you share those concerns?
Well, listen, I was someone who has been generally skeptical of tariffs, but when President Trump came into office, I thought that selective use of tariffs to ensure a fair playing field, ensure reciprocity, ensure negotiating leverage made sense. And so I supported the tariffs that President Trump put in place under the last administration. And I do think that there's the risk of inflationary impact. And frankly, I think there's two dimensions of President Biden's policies which are relevant to this. One is the enormous spending is the primary driver of inflation. That and the policies that are directed on reducing oil and gas consumption. Those are the primary drivers of inflation. And economists like Larry Summers have said as much. The second problem with those policies of the Biden administration, particularly as it relates to EVs and solar panels and so forth, the policies that have been in place have made us, ironically, highly dependent on China, because 70% of the lithium batteries and 80% of the solar panels are manufactured in China. So in one fell swoop, in my opinion, the Biden administration's economic agenda has driven up inflation and made
So
us
the
more
Bank of
dependent
France Governor Villeroy urges against deepening budget
As I've
deficits.
run for the Senate, I've advocated a set of policies that take us in the opposite
So
direction.
Villeroy, an ECB member, but speaking his capacity from the Bank of France governor, urging against deepening budget cuts, budget deficits even, as they speak in Paris.
Trump is also proposing an across-the-board, a global 10% tariff that he says would help to pay for tax cuts if he's reelected. This has been a big debate, as I'm sure you well know, in Washington over the past week or so, and it's about to get a lot louder, making permanent the 2017 tax cuts that are set to expire next year. We saw a new analysis from the Committee for a Responsible Federal Budget says that would cost in excess of $4 trillion, that it could add that much to our deficit. So if it's not tariffs that offset the cost here, how do you pay for it?
Well, first of all, you got to pay for it with a growing economy that's generating tax proceeds. The best way to do this, and in the Bush, or rather the Trump tax cuts, if President Biden's reelected and those tax cuts are allowed to expire, that's going to hurt all Americans. So if you look at someone who's making $70,000 a year, the impact on them is something like $2,000 of tax reduction benefit that they lose. And this is the thing.
But the impact of inflation is pretty great on a household as well, right? How do you find $4.6 trillion, I think is the number that they put down here, to pay for that without stoking inflation even further?
The inflation's already been stoked by $6 trillion of incremental spending under President Biden.
So you'd add another $4.
No. The primary driver of the inflation we had has been the spending policies of Biden, and Republicans and Democrats have been spending too much. I'm not saying this is solely Democrats, but what's happened under Biden is $6 trillion of spending. And if you think about the types of spending, you can talk about $170 billion of loan forgiveness, which is absolutely, in my opinion, un-American and unfair, or you can talk about tax cuts that are going to benefit all Americans and all Pennsylvanians. And absolutely, inflation is the most regressive tax at all. So we've got to get inflation under control. But the drivers of inflation are bad energy policy that have driven up the prices of fuel and too much spending. And so I would say reversing certainly some of those Biden spending bills and rolling back the war on natural gas and fossil fuels is the key to getting our economy back in check. And I wouldn't, particularly now when so many families are burdened by this inflation, I wouldn't burden them further by rolling back the tax cuts that President Trump put in place.
Speaking of burdens on families, you know, when you think about the deficit issue largely in the U.S., does that mean that you've also ruled out the idea of more spending, or slowing spending rather, on Medicare and Social Security to be part of the solution in closing that gap?
Well, I think the primary thing we need to do now is roll back some of the spending that President Biden has put in place. Again, I keep pointing to it because it's such an obvious one, is the $168 billion of most recent student loan forgiveness. I mean, look at that. It's extraordinary. That's the size of the Army's budget. That kind of spending doesn't make sense to most Americans. So we got to roll back that spending. We've got to attack a number of sources of discretionary spending. And certainly, when you look down the road, there's questions around entitlements, but the basic premise there you have to start with is we have to live up to the obligations that we promise people. And so it's a balancing act for sure, but a pro-growth economic agenda that deregulates, that allows businesses to grow, is going to be the primary driver of driving tax receipts. We've got to drive back or pull back on spending. I certainly agree with that, but the starting point has to be the war on oil and gas, which has hindered us dramatically. And some of the Biden priorities, which I honestly think are indefensible. And the most notable one is the student loan forgiveness.
Well, we should note, I realize that you're speaking in some cases here about the moratorium on new LNG permits, but the United States is pumping more oil than it has ever in history right now. Dave, I want to ask you about your policy or your proposals if you're elected on Israel. Can I'd like to get to Israel if we can here, to try to get to as many topics as we can. Dave, there are a lot of questions about whether we're going to see a ceasefire at any point soon, and I wonder if you think that Israel should declare war on Hezbollah, if that is in fact the mission here for Israel, to combat the influence of Iranian proxies that have brought so much terror to Israel and a very difficult quagmire that we find ourselves in now.
My wife and I went to Israel right after Christmas and saw firsthand the horrible barbarism that happened on October 7th, and are fully supportive of Israel doing what it must do to eradicate Hamas and destroy that threat. I'm not going to comment on what Israel should do in terms of dealing with Hezbollah. I have much more confidence in their ability to decide what's best for Israel as a democracy. What I will say is that they are absolutely being attacked from all sides by these proxies that are underwritten by Iran. And the original sin, the thing that put
And so
us in
Bank
this
of France's
position
head
was President
Villeroy
Obama's
says that we
deal
owe our citizens
in
respect, and that means not running
2015
bigger
to get back
deficits
$100
than
billion
can't be
of
financed.
sanctioned money. And the deciding vote on
Also
that was
adds that
about
that
peace.
also means
And
quickly
that my
clarifying our
opponent in
country's
the Senate
economic
race.
and budget
And that money
strategy.
is being used to underwrite terrorist groups, the Houthis, Hezbollah, Islamic Jihad, and of course, Hamas. And we're going to have to deal with that. Israel's going to have to deal with that. And a final point, this is not just a war against Israel. This is very much directed at the West. And sadly, it's raising the risk for Americans around the world and in the Middle East.
Yeah. Let me ask you this from another angle, though, Dave. As we wait for a possible ceasefire, and you look at the destruction that has been wrought in Gaza, more than 30,000 civilians killed, according to the Gaza Health Ministry, at what point is the response disproportionate?
Yeah, well, listen, I obviously watch the same clips you do. When you see human suffering and innocent people injured or killed, it's heartbreaking. The source of this pain is Hamas, that has integrated itself into the civilian population. Their explicit strategy is to increase civilian casualties. And Israel certainly has every right to eradicate the risks that destroyed the lives of 1,200 Israelis. Hopefully we're going to be able to find resolution on that soon. I think it's very difficult to imagine Israel letting a military capability continue with Hamas. And so I'll leave it to them to figure out the best timing and path for that. But obviously, I was very gratified to see all the efforts that are being put in place to allow humanitarian corridors, to allow as much humanitarian support as possible into Gaza. And it's absolutely heartbreaking to see not only what happened on October 7th, but to see innocents killed in Gaza. But make no mistake, the root of this, the root cause, the source of this evil, and the culpable party is Hamas.
Dave, before we let you go here, I do want to get your thoughts on the U.S. election this cycle here, especially because you yourself are also on the campaign trail and going around the country looking for fresh donors, new fundraising. What is it about Donald Trump that Wall Street finds attractive at this point? Because we know that even those who have shied away after January 6th, some of them have come back in the fundraising circuit. What is it that they're latching onto?
Well, I think the primary thing is that the country's just going in a really bad direction, and most Americans see it. So the economy I talked about, there's certainly positive economic factors, but for 60% of Americans, they're living paycheck to paycheck, and compounded inflation is really driven, and higher prices have really made it much harder for them to make ends meet. You see it with the border crisis, 10 million illegal migrants coming into the country, a huge national security risk, a huge fentanyl risk. You see this in which we just talked about, the war on oil and gas, which is particularly a big deal for Pennsylvania and many states across our great country. So I think the policies of President Biden are taking us in a terrible direction. And I think that people compare the policies of President Trump with the policies of President Biden and say, you know what, we were better off and our future was much brighter under the leadership of President Trump. I think that's what's happening. That's certainly what's happening on the ground in Pennsylvania. And I'm running as someone who's an independent voice, someone who will fight for the interest of Pennsylvanians, someone who's led in the military, created jobs in Pennsylvania, led companies, and someone who can get into the Senate and make a real difference and be a real advocate for policies that help Pennsylvanians.
We have to leave it there. Dave McCormick, Republican candidate for Senate in Pennsylvania. We thank you for your time today. Now, coming up, we're going to talk about a company with a new investment from sovereign wealth fund Mubadala. We're going to talk with the founder of Aquarian, managing partner Rudy Sahai, and figuring out how he's planning to deploy those funds across credit markets. Stick with us. That story's next. This is Bloomberg.
You actually offer a payout at 7 years to encourage people to explore if they don't find themselves in management position. I mean, what's the thinking?
Yeah.
I mean, like, what's that about?
We're not forcing everybody to be kicked out, right?
But you encourage people to explore.
Exactly. We encourage people to think about their, because sometimes it's easier, even for me, if I don't need to change everything, it's easier, right? Change is really tough thing for everybody. Should I do this job for next 5 years, 10 years, or should I try a new thing? If I had to think, that is a great opportunity to think about it. We need to think about what kind of talents I can have for the next 5 years, 10 years. What's the best way to contribute to the world?
From the world of politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern, only on Bloomberg TV and radio. Context changes everything.
This is Bloomberg Markets, and I'm Shonali Bassick. It's time now for our Wall Street Beat. In today's headline, Aquarian raises nearly $1.5 billion from the sovereign wealth fund Mubadala, based in Abu Dhabi. And Aquarian was launched around 2017 by ex-Guggenheim Partners executive Rudy Sahai. He joins me now, and it's interesting because, of course, we know that when you look at a lot of the money being raised for these types of strategies, it is coming from the Middle East. Mubadala is pretty selective when they look at these strategies. Why is insurance and credit right now kind of such a hot ticket? Not just, frankly, from Mubadala and you, many other people. We reported last week that your former boss, Todd Boehly, is doing a very similar thing.
Yeah. Well, first of all, Shonali, thanks for having me on. I really appreciate the opportunity. Let me just give people a quick overview of what we're doing at Aquarian, and then I can answer your question. So the way Aquarian is set up is we're a diversified global holding company. We have an insurance arm that has a strategic portfolio of 5 insurance companies that we own and operate. Sitting next to them as a sister company is an asset manager that manages all of the money for those insurance companies with an orientation towards liabilities first. I can't speak to what the market is doing or what individual companies are doing, but the opportunity that we see is in the U.S. we hit peak 65 in 2024, which is the baby boomers are retiring at the fastest clip we've ever seen, and they're looking for retirement income solutions, and that's fundamentally the product that we're offering to the market.
Now, it's worth talking a little bit about the credit part, the asset management part of your business, because one thing you've told me before is you might use some of this money to go out, potentially seek acquisitions, expand those credit platforms at a time where credit is seeming to make this massive comeback. And so what types of credit are you looking at more specifically that is showing the most misplaced opportunity in the market?
So fundamentally, the market is limited from a liquidity perspective, and what we have right now is actually quite a bit of liquidity within our segment, and so we're looking at opportunities in real estate, private credit, and general corporate credit as well. The markets about a year ago thought that we were going to be in a higher for shorter period, and we're obviously higher for longer now, and so the way that people had liquidity planned is not what's actually happening today, so we're seeing fantastic opportunities to get paid a phenomenal risk premium relative to what the market thought about a year ago.
Where is that risk premium? Because on on one hand, you've seen gobs of money float into private credit, but you are looking both at those liquid credit opportunities and private credit. Is one better than the other right now?
It just depends on the specific company and who's coming to market. It's a credit by credit analysis. It's a credit picker's market at this point. We can't make a blanket industry statement because there are great companies in the private credit market and great companies in the public credit market. You just have to find the diamond in the rough, so to speak.
It's not for the faint of heart here. These are riskier markets sometimes, high yield markets in particular. Yep. How do you think about risk right now as you see signs of weakening in the economy?
So nothing in finance is for the faint of heart, to be completely honest with you. It's a bare knuckle brawl every single day. The way that we're seeing risk is a fundamental mispricing of what people will do outside of your control.
So where's that mispricing?
You see it where people think interest rates will go down sooner than they believed before. The way we look at our risk and the way we manage our portfolio is we're thinking about the individual business and whether that business has the capability to stand for the long term. Our capital has a long-term duration and orientation, and we're looking for the right partners who can execute on that vision.
We only have about a minute left here, but where do you see people maybe flying into risk that they shouldn't be? Asked differently, what are you avoiding?
We start fundamentally, and we look at every single business, every opportunity from the ground up. We don't look at ratings as an indication. We don't look at sectors as an indication, because as you and I both know, stereotypes or broad generalizations often turn out to lead you down a fool's path. What we look at is individual credit, individual opportunities, and we find those unique moments where we can exercise our capital and put it to work in the most powerful way.
Now, that's all well and fine, but how do you know at the end of the day that that analysis is good enough, especially when you're avoiding ratings? Do you not trust the ratings anymore? Is there a problem with how widely they're able to
We trust the ratings implicitly, the way that they're set up. We always have to trust but verify, and that's what a good investor does at all points. And so we make sure we have our own credit orientation first and then follow up on the back end.
That's Rudy Sehay, founder and managing partner at Aquarian. Of course, the latest in the string of asset managers we've seen in this insurance and credit play. Now, I'm Sonali Basak. That does it for Bloomberg Markets. Of course, interesting day in trading today. Yields lower, stocks mixed. This is Bloomberg Markets, and this is Bloomberg.
You are also an owner, I should have pointed out, of 3 major sports teams.
That's right.
Right? And you're the first woman, as I understand it, the first woman to own 3 major, have a stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Live from Bloomberg's World Headquarters in New York, I'm Shanali Basak.
And I'm Tim Stenevec. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
Tim, Bitcoin is taking a summer slump. It sits at the lowest level in more than a month. Outflows from digital assets are hitting the crypto market.
We're going to talk about this volatility and the road ahead with crypto with Meltem Demir's, a CoinShares advisor.
And crypto startups are seeing a slowdown in funding. Edith Young from Race Capital joins us to talk about the opportunities inside and outside of the United States.
All that ahead over the next half hour. First, though, we start with a snapshot of the market, and look at that, just red all around. Bitcoin touching a one-month low. The prospect of higher rates for longer leading to some pain in Bitcoin and the wider crypto market. Over the last 7 days, Bitcoin down 4%, all coming at a time, though, when we're seeing new record highs when it comes to equity markets. The S&P 500 hit its 30th record this year just yesterday. In fact, stocks and bonds have delivered better returns than Bitcoin in the second quarter of the year. It's quite a turnaround from what we saw in the first quarter, when digital assets outperformed traditional markets by a significant degree. And it's not just Bitcoin moving lower today. We got Ether and altcoins such as Solana, Tether, Dogecoin all moving lower today as well. Ether down 2.7%, Solana down 6%, Tether just going into the red, moving from green to red just now, and Dogecoin down about 8.2%, Shanali.
And let's zoom out, look at the weekly performance here of Bitcoin, because as you mentioned, it has been seeing quite a slump. It's hit a level last seen in mid-May. Last week's higher for longer messaging from the Federal Reserve does pose a challenge for speculative investments such as crypto. And you could see so much of the love you saw in crypto was earlier this year when you saw the advent of those Bitcoin spot ETFs hit the market here. And you have lost a lot of that steam with the last 3 out of the 4 weeks seeing outflows, Tim.
Well, speaking of outflows and losing steam, that's what we're seeing when it comes to flows for crypto products last week. About $600 million was pulled from digital asset products just last week. This is the most going all the way back to March. This data from CoinShares International. Again, this is all about rates. Traders have scaled back expectations for the Fed to cut rates, posing a challenge for speculative investments such as crypto, Shanali.
And we're going to bring in CoinShares advisor Meltem Demir here because, of course, we've been talking about that sour mood here in crypto lately, Meltem. And, you know, earlier this year when a lot of people started buying into the market with those ETFs, there was a big question on whether this was the top, whether if you bought in now, you would see a lot of gains in the longer term. How do you answer that?
These are all great questions. I'm calling it sideways summer. We had the winter of our despair. We had some thawing and an incredible 2 quarters with record inflows into ETFs. As of today, $16 billion in net inflows, really blockbuster performance across the 9 US Bitcoin ETFs. I think what we're seeing now is exactly what we saw in March. We had a hawkish FOMC last week, CPI still coming in hot, expectations of rate cuts were being priced in, volatility also really low, trading volumes, we traded 22 billion last week. This week we're looking at around 11 billion in trading volume. So volatility is down, trading volumes are down. I think there's a lot of uncertainty. And again, the question we always look at CoinShares is where are these flows coming from? And the question throughout the summer is going to be, What is the story around flows? Who are these net new buyers? Where are they coming from? And more importantly, what is it they're buying? It's really a tale of two cities in crypto. We can dig a bit more into that as well.
Well, what do you know about these new buyers? Where are they coming from? Who are they?
These are great questions. And again, I think what we're seeing this cycle is historically one of the great things about crypto trading data is trading happens on chain, settled on chain. So we have the ability to look at the Bitcoin ledger, the Ethereum ledger, and see where activity was happening. The ETFs have really obfuscated a lot of that data because settlement isn't happening necessarily on chain. Coinbase and some of the other larger authorized participants in these ETFs are not settling until day after. Maybe they're dividing volume between wallets. So it's more challenging to get the data. We get it after the fact. We did get Q1 13F filings from hedge funds, and I was personally shocked that there weren't more large funds buying. We did see a few larger U.S. institutions participating, but by and large, it's still driven by retail and a lot of rotation from people holding assets maybe on-chain or on a Coinbase, rotating into a product that's traded in a brokerage account. And then the second thing we're seeing is a lot of rotation out of the grayscale products into IBIT, Fidelity ETF, and other lower fee products as well.
Sideways summer, Meltem, but how can you be sure that the next move forward isn't significantly downward?
There's no guarantees in crypto. If there's anything I've learned, I'm always surprised by this industry. What I will say, I think what we've seen is Bitcoin was still up 50% for the year, Ethereum around 40% for the year, despite a slow start in Ether. We're seeing it buoyed by this news of a pending ETH ETF, potentially some flows materializing from there. I think the big question here is, with more assets flowing into ETFs versus Bitcoin held on exchanges, for me, the big question is, how is Bitcoin going to perform versus alts or these higher risk sort of longer tail crypto assets? So far, performance there, historically, it's Bitcoin runs first and then alts start to run, driven by wealth creation in Bitcoin. Now with money going into the ETFs held in brokerage accounts versus Bitcoin held on crypto exchanges where there's access to these assets on one screen, I think that effect has been greatly minimized. And we see that across the board with underperformance in everything outside of Bitcoin and Ethereum.
Now, Meltem, how do you think through the prospects for Ethereum moving forward? There was a lot of questions around what an ETF would do in terms of drawing new interest into it. But of course, Ethereum is not as widely known as Bitcoin had been for the last several years. How do you think about that dynamic moving forward?
I think this is a really interesting question. I think for institutional allocators, getting comfortable with Bitcoin, for most investors, frankly, Bitcoin's been around for 15 years. It's been widely discussed, widely mocked. Now it's being accepted as an asset. You have Larry Fink, Paul Tudor Jones, some of these luminaries in the world of traditional finance going on and endorsing Bitcoin's role in an investment portfolio. But again, we haven't really seen these massive institutional flows materializing yet. If we look again at 13F filings, if we look at Bitcoin exposure on the institutional side and these disclosures being filed at the end of Q1, still a lot of retail activity. I think with Ether, the story is even more challenging. Awareness of Ethereum, awareness of the supply and demand dynamics of Ethereum, awareness of the growth potential of Ethereum is still limited. That being said, I do think crypto has earned its place in an investment portfolio. I think as more and more institutional investors and the investment banks start to cover Ethereum alongside Bitcoin, perhaps we'll see that narrative materialize. But what I always go back to is price drives narrative. Really, the story in crypto is always price drives narrative. So I think in order for there to be material interest and inflows into Ethereum, we're going to need to see some relative outperformance compared to Bitcoin. And we just haven't seen that yet. Ethereum's really struggled to rally against Bitcoin.
Well, speaking of stories, I'm curious about the next chapter in your story, Meltem, and what comes next for you. Now you're an advisor at CoinShares. Previously, you were Chief Strategy Officer at CoinShares. What's your next move in the space?
That's a great question. There's a lot of things I'm interested in working on, but I'm not going anywhere. I'm going to continue to stay in asset management and in investments in the crypto space. And when I know Tim, you will be the first person I call, and I'll share it right here with all of your viewers.
That is what we like to hear.
Meltem, thank you so much. That is CoinShares advisor Meltem Demirors with her many interests in crypto. We'll keep an eye on everything she's up to next. Now, coming up, Edith Young joins to discuss the state of crypto venture capital.
And Tether launches a synthetic dollar tied to the price of gold, which has been hitting records.
So the US seeks allies' help in curbing China's AI memory chip progress.
CRYP Go on the terminal. This is Bloomberg.
So reading into this then, as a senior American official is set to visit Japan and the Netherlands to ask the two countries to add fresh restrictions on China's semiconductor sector, including on its ability to make the high-end memory chips needed for artificial intelligence.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. And you know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal.
The Deal.
That deal. The deal.
Huge deal.
Who dug this up? One of y'all's in trouble.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special Equality series every Thursday in June at noon Eastern Time. Bloomberg Equality, celebrating inclusion this Pride Month.
The top names in business are on Bloomberg.
They're kind of predicting a soft landing, and you see that in both stock prices, which are kind of high, credit spreads, which are kind of low, markets, which are kind of wide open. That's all good. Doesn't tell you what the future is going to be. But I think there are a lot of inflationary forces in front of us that may keep it a little bit higher than people expect. My view is whatever the world is pricing in for a soft landing, I think it's probably half that. I think the chance of something going wrong is higher than people think.
Bloomberg. Context changes everything.
In many ways, they always say that kind of the place to understand Bitcoin the least is the United States, and maybe the place to understand it the best is Argentina. But there are many places in the world where you just get a different perspective on how value flows from person to person, and certainly across Europe, there's just so many great development teams working on this problem.
And that's Ledger's Ian Rogers on the show last week after his firm opened its headquarters in Paris. Meanwhile, Australia due to list its first spot Bitcoin ETF on a Thursday. The Van Eck Bitcoin ETF will debut on the ASX exchange. Other players vying for a Bitcoin ETF include BetaShares and DigitalX. Cboe Australia listed a round of Bitcoin funds 2 years ago.
And we're going to discuss the best places to invest in crypto with Race Capital General Partner Edith Young. Her firm's portfolio includes Databricks and Solana, just to name a few. And of course, there's a lot going on in the worlds of both of those assets right now. But Edith, if you think about the way that the ecosystem is evolving moving forward, people, of course, in the more mainstream world do look at Bitcoin, they do look at Ethereum with the ETFs. But when you think about the potential for the tokens outside of those two, how do you think about where the next big play would be?
Yeah, so first off, it's so interesting, like for me to hear Meltem with your conversation earlier focus on institutional investor point of view. But from where I come from, sitting in Silicon Valley, we're very paying close attention to sort of like the altcoins of the world. The key thing is, crypto VC is back. I think last quarter is like 2.9 billion, which is been invested to over 600 companies, and about 29% increase quarter over quarter, which is a great sign. But at the same time, I think like the mood is a little bit different than before. I was just chatting with a hedge fund friends in Asia. Alpha 9 was telling me that institutional investor, yes, is excited about Bitcoin and Ethereum, but they do place close attention to altcoin, but a lot more, I guess, more savvy this time. And the key thing is sometimes what institutional investors don't like to see, which is when a VC, which means us, invest too much money in the hundreds and millions of dollars, and when all these tokens are fully vested and unlocked, is not necessarily good for the altcoins. So sort of compared to the last cycle, which I'm continue to be bullish on Solana, and I also place close attention to the Telegram TON token. And those are really like the two sort of from the last cycle, now is still strong and standing. So it will be very, very interesting to see this cycle, when more and more crypto VCs is coming back to market, are they being thoughtful about their investing schedule? Are they really kind of think through the true use case in the venture space, which one of my companies called Human Finance is so interesting to see now using stablecoin to sort of help with cross-border payment. We're talking about like billions of dollars in transactions. So it's really, really excited to be back in the market.
Edith, I'm wondering when it comes to retail excitement, what you're seeing out there right now and the metrics that you're looking at, because I know it's a cliche, but back in 2021, I would regularly get in an Uber or a Lyft and the driver would talk to me about crypto. That has not happened since the crypto winter.
Yeah, it's interesting. So I just presented a Hong Kong Web3 report and consensus a few weeks ago. The excitement in Austin is definitely not the same compared to Hong Kong or Singapore when I go to other conferences. I think the U.S. mood in terms of regulatory environment is not getting the taxi driver excited about crypto at all for now. But having said that, I do think that things are improving because U.S. government clearly know that we need to do more to make sure that we stay ahead of the game. But I have to say, being a native from Hong Kong originally, every time I go back, like, people are excited. I think in Asia particularly, regardless is the RWA's use case or gaming or NFT, people are just excited. And there are definitely people on the street. The Hong Kong taxi driver are more excited than the American taxi driver with crypto for sure.
Edith, that's fascinating. I want to go back to another thing that you had said here. You were talking about Huma Finance and the work around stablecoins. How important is the stablecoin world to the broader crypto ecosystem as regulation?
I think stablecoin worldwide is a super important topic. U.S. in many sense, I think, being sitting in Silicon Valley, we need to get ahead of the game because I'm looking at Hong Kong, actually just launched this year the stablecoin sandbox. And for the past 18 months or so, they literally went worldwide and talking to Circle, Ripple, Visa, Alibaba of the world to make sure that government really are on top of regulations to basically have very clear guidelines to approve various different institutions to be able to support stablecoins. So in that sense, in the cross-border payment, if we just purely let other people to define what stablecoin is about, it's really not good for the long-term finance ecosystem. So I think U.S. really we need to get our act together to catch up with in Europe with MiCA, or in Hong Kong or Singapore, which is already have very clear regulation to support it.
Okay, you say we need to catch up with Hong Kong, Singapore, and Europe. What specifically would you advise U.S. regulators when it came to stablecoin legislation? What do you want to see them do?
I think just to start with, to be a little bit more clear on which way we stand, I think it's great to see Fit 21 that got at least go through the House, but still we don't know. Like we need faster regulation. It's just that to the rest of the world, U.S. regulatory environment always seems a little bit disorganized and a little bit chaotic. And I think then I think for the U.S., unfortunately, a lot of things are still going to wait and see who's going to get elected by the end of this year. I do think that what is really, really funny when I was in Austin, that I literally see both sides of the House presidential candidate actually have a voice in a crypto conference, which I think that both candidate knows that, like crypto now, 52 million Americans now own crypto in America. This is a really large population that will really swing the vote. But unfortunately, I don't see all these things will play out until after the presidential election.
Raise Capital General Partner Edith Young, thanks so much for joining us on Bloomberg Crypto. Do appreciate it. Well, coming up, why Tether has launched a new synthetic dollar that correlates directly with gold prices.
And earlier this hour, we spoke with David McCormick, former Bridgewater CEO, who is
So in 10 minutes time now at the top of the hour, the US is due to sell $13 billion in a 20-year bond sale.
I was always worried about the national security implications, and I think what's become clear is
the previous bid to cover ratio was 2.51. The previous high yield was 4.635%.
And by embracing it, we can create great jobs, a great source of innovation.
Also keep in mind at the top of the hour, expecting comments from a couple of Fed speakers, Fed's Kugler and Fed's Logan, both slated at the top. So Fed President Logan due to be speaking in a moderated Q&A at the Headliners Club in Austin. No text is expected, but there will be a Q&A. As for Fed's Kugler, that's Governor Kugler, speaking at a virtual event about the economic outlook and monetary policy at an event hosted by the Peterson Institute. A text and Q&A both expected for Kugler at the top of the hour. And for Kugler's speech as well, we do have a live video pinned to her entry in the calendar for anyone interested as well. So just ahead of this 20-year bond sale, which again is also at the top of the hour, just noting a preview here. So given the lower yields and the fair valuations, along with elevated political uncertainty in France, JP Morgan strategists see the auction to require a greater concession from Monday's closing level in order to be digested smoothly. I'll also make note of the latest CFTC positioning data. That shows that speculators were net short around 11,900 bond futures contracts.
Foreign policy and more. Voters head to the polls to choose the next leader. Bloomberg has full coverage leading up to the election and will bring you the results after all the votes are tallied. Tune in for continuing coverage on Bloomberg Television. Context changes everything.
DOJ or other authorities
could face bigger challenges next.
It was going to keep reading World Cup. This is a three
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Tether, the company behind the stablecoin USDT, has created a new synthetic dollar that is backed by gold. Bloomberg's Mike Regan is here to explain exactly why this is going on. What is the purpose of Tether doing this? Of course, we know that USDT is very popular, backed by dollars, but why then inch into gold?
Yeah, well, I think the big picture is Tether obviously wants to sort of diversify its business beyond just USDT. There are questions in Europe and elsewhere about what stable coins will survive the sort of heightened regulatory environment. So Tether's making a lot of sort of diversification bets. They investing in crypto miners. They've made some investments in artificial intelligence, even some medical device companies. And with this project, what they're doing, it's really pretty fascinating. They're actually buying gold, storing it with a custodian in Switzerland, making tokens that represent that gold. So then you can buy the tokens and basically ownership in gold in token form. Then what you can do is you give those tokens back to Tether, and they give you a synthetic dollar, a tokenized stablecoin, basically, like USDT, but one that is related to gold. So it's over-collateralized, meaning, say you put $100 of gold tokens on deposit with Tether, they'll give you $75 back. So why would you want to do that? Well, if you're bullish on gold, you're happy to own the gold, but then you can take those dollars back from Tether and go invest them elsewhere. You speculate in crypto or put them in a lending protocol and make even more yield and returns off of that investment in the gold.
So I'm wondering who exactly this is for, Mike, if you're thinking about it from the perspective of the organization. Who are they trying to appeal to with a product like this?
Certainly there's a little bit of overlap between people who are, gold bugs, for lack of a better word, and Bitcoin enthusiasts.
And I was going to say, like crypto backed by gold. It's like you're hearkening back to the, years ago when currencies were backed by gold, when the U.S. was on the gold standard.
Right. So I think they assume there is some demand for this, but I think if you take another step back, it's almost a proof of concept for them, for this new platform they have called Alloy, I suppose is how you pronounce it.
Like the metal.
Like the metal, yes. And they clearly have ambitions, as they've said, to do other things like this, to tether.
It's been 5 minutes time now at the top of the hour. The US is due to sell $13 billion in 20-year bonds. Prior bid to cover was 2.51, prior high yield 4.635%. But keep in mind we also expect comments from Fed's Kugler and Fed's Logan as well. Fed's Kugler text is expected and the live video is available on the feed as well, or at least on the calendar.
If the price does go down, then what you have to do is either provide them more collateral in the form of those gold tokens, or you get liquidated. So that's clearly the market risk is the main thing. Now, obviously there are people who still have a little bit of suspicion towards Tether itself, but you got to look at Tether over the last few years. There was so much scrutiny, much mud slung at them, but the USDT has maintained that dollar peg. So they've earned a little bit of trust in the market, I think, for a project like this to succeed.
Mike, just 10 seconds. How will we know if this is successful?
I will watch the amount of money that's locked up in it. It was just announced yesterday, so we'll check back and see how many people are actually playing in this scheme.
Bloomberg's Mike Regan. Thanks so much, Mike, for joining us. Always good to see you. That is going to do it for Bloomberg Crypto. Join us again next week, though, on Wednesday, June 26th. This is Bloomberg.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Invest, don't trade. Invest for the long term, i.e. when markets are challenged, don't get spooked. Don't get involved in investment hobbies. Investment hobbies are generally not profitable.
The top names in business are on Bloomberg.
You need to have an AI game plan. We used to say that every company needs to think about becoming a software company. Now we say that every company needs to become an intelligent software company.
Context changes everything.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
So we're shortly expecting the US 20-year bond auction results, 1 minute away from a text release from Fed's Kugler as well. Also shortly expecting comments from Fed's Logan. Keep in mind the pre-sale when issued yield for the 20-year bond auction will also come out at the top of the hour.
This is Balance of Power. Live from Washington, D.C.
It's another primary day. Welcome to the fastest show in politics as we watch for the Trump effect today in Virginia and in Oklahoma. I'm Joe Matthew alongside Kaylee Lines in Washington. And Kaylee, this is interesting. Donald Trump finds himself competing with the Freedom Caucus, at least in one case here in Virginia.
Yeah, in Virginia, Bob Good, who is the chair of the Freedom Caucus, is facing a primary today from John McGuire, who is backed not just by
In the text release from Fed's Kugler says monetary policy is sufficiently restrictive, economic conditions moving in the right direction, likely to be appropriate to begin easing policy sometime later this year if the economy evolves as expected. Optimistic on productivity growth with a surge in new businesses, and AI is likely to diffuse quickly. Preponderance market data shows supply and demand coming into better balance. Most indicators point to a slow, steady easing in the labor market. If wage growth continues to moderate, we'll be soon at levels consistent with price stability. Also says, I'm optimistic that the improving supply and cooling demand will support continued disinflation. Further progress on inflation is likely to be gradual. Inflation is still too high, but I am encouraged by the renewed recent progress and trajectory. Policy has more work to do. Judgment will be guided by the data. Watching closely for any signs of labor market deterioration, I expect some cooling of economic activity to continue. Keep in mind the pre-sale when issued yield for that 20-year sale coming up. Pre-sale when issued yield was 4.48% ahead of the auction sale.
S&P right now advancing by 0.1%. The Dow has been swinging between gains and losses, down now by 9, down less than 0.1%.
So shortly expecting the results of this 20-year bond auction, where I'll be leading with the bid to cover ratio. Keep in mind expecting possible comments from Fed's Logan as well.
4.69%. Spot gold up 0.5%, 23.30 the ounce, and West Texas Intermediate crude up 0.9%. WTI now with an 81 handle at 81.07. So again, U.S. stocks are trading mixed. Briefly after earnings, looking at Lennar shares, the home builder, down 4.8%. Lazy Boy, the furniture retailer, surging 19.3% after earnings. After the close of trading today, we'll hear from KB Home. S&P up 0.1%. I'm Charlie Pellet. Balance of Power continues now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee.
So the bid to cover ratio.
All right, Charlie Pellet.
Bid to cover 2.74, 2.74, high rate 4.452%, 4.452%. The US sells $13 billion in that 20-year sale, awarding 97.08% of bids at high. Primary dealers take 5.77% of the sale, direct 16.35%, indirect 77.89%.
Within the last 24 hours.
Look to the markets, a little bit of weakness in the dollar as the whipsaw in the S&P 500 as well.
Bad for Virginia and bad for the USA.
That's pretty simple. He held a tele-rally for McGuire last night, said more things about Bob Good. Quote, if he's reelected,
He will stab Virginia in the back, sort of like he did with me. And that's where we start our conversation with Mick Mulvaney, co-founder of the Freedom Caucus, the caucus that Bob Good
Nvidia now tops Microsoft and Apple to become the world's largest stock. So again, that's Nvidia, ticker NVDA. They're topping Microsoft and Apple now, the world's largest stock by market cap.
How are you looking at this? Settling scores or a new fissure between Donald Trump and the Freedom Caucus in the House?
Joe, in fairness, a lot of them were jobs that nobody else wanted, so that doesn't really count. Settling, listen, politics makes strange bedfellows. It just does, right? Mm-hmm. I don't have any personal insight into the Trump support for the good challenger. I obviously do have some on the McCarthy angle there. And curiously, even more interesting to me was Warren Davidson this morning, a sitting member of the House Freedom Caucus, who actually came out for McGuire over the weekend. So clearly there are things happening within the Freedom Caucus that we don't hear that much about. There has been some discussion about whether or not they've sort of strayed from their course or not. But it also could come down to just friendships. McCarthy is certainly not a friendship. McCarthy wants Good's head on a platter. He did not get Nancy Mace's last week here in South Carolina. In fact, Nancy cruised to an easy re-election here in South Carolina, which I know stung Kevin a good bit. So Kevin would love to get at least one scalp. And with Trump on McGuire's side, Good might be that one scalp that Kevin can claim.
So, Mick, as we think about how that changes the dynamics within the House Freedom Caucus, as you say, even a member of that caucus coming out against the chair this weekend, would that actually be a catalyst for a reabsorption, if you will, of the House Freedom Caucus with the rest of the Republican conference, considering we've started to see a break among conservatives in some sense with that group and then the larger one?
Haley, I've been looking for that, and I've not seen it yet. I've been looking for that now for 18 months. I was looking for a little bit of it during the Trump administration, when I thought that the Freedom Caucus would come down more on the fiscal tightening that they did. They weren't nearly as
US Treasury 10-year yield drops after 20-year bond auction, last down 5.7 basis points at 4.462%.
Staying there. Look, here's what's going to happen, I think, is that regardless what happens with Good, the Freedom Caucus will recoalesce around Donald Trump on the backside of these primaries. So what you're probably seeing are some family squabbles, some personality issues, and not really big macro trends within the caucus.
Abigail Spanberger's seat opening up as she runs for governor. Mick, and I wonder your thoughts on Eugene Vindman, the retired Army colonel, of course, became a household name in his role as a whistleblower in Donald Trump's first impeachment. I live around here, and every time I turn on the TV, I see a Vindman ad. I mean, you literally just cannot hide from it. There are pictures of him, his family. It's been an endless stream of TV advertising as he raises a boatload of money here. I think it was $5 million, and he's got something like 6 opponents. What's your thought on the role that he could play here in congressional politics? Can he win this seat?
Well, in Virginia right now, the answer is sure. Anybody could win. I've seen some data that says Trump is neck and neck with Biden in Virginia. Now, I don't believe that that doesn't feel right. But the poll was a halfway decent poll, and it was after the conviction in New York City. So I don't know what's happening in Virginia at the local level. Vindman doesn't surprise me that he's doing what he's doing as well as he's doing it. Look, you want to talk about getting personalities involved. I'm absolutely convinced that that's what drove a large part of his involvement in the first impeachment.
That he wanted to run for Congress?
Absolutely. He was a publicity hound. I'd never heard of the guy before. No one had ever heard of the guy. But he's trying to.
Well, how did he end up on the phone call?
Well, it just goes to show you who's on the calls. I wasn't even on the call. So, but anyway, that's going back a couple years. Look, Virginia is an interesting place right now. The Democrats are losing ground in the rural areas. You guys live there. You know it. It's probably more bifurcated than any state in the nation. You've got 2 states. You've got sort of the northern Virginia suburbs, and then you've got the rest of the state. And it'll be really curious to see whether or not these primaries are any sort of bellwether going into November, and whether or not these numbers you're seeing that shows Trump pulling closer to Biden are anything close to reality.
Yeah, this Virginia thing keeps coming up. We know that Donald Trump raised it in his meeting with House Republicans here in Washington last week. Lawmakers who were in the room told me he's looking to spend money in Virginia, also New York and New Jersey. I guess we have to consider whether we need to expand our understanding of what the battleground states actually are. But Mick, while he was in Washington, he wasn't just talking to lawmakers. He also had a meeting with the Business Roundtable and a number of high-profile executives. The scuttlebutt is a lot of them walked out of that room feeling a little bit disconcerted about what Donald Trump was saying and maybe the manner in which he was saying it. If you're an executive right now looking at this election, should you more welcome the idea of some of the policies a second Trump administration would bring in terms of tax relief and deregulation, or should you be concerned with the idea of the general uncertainty it could bring?
A couple of things. I do put some weight on the firsthand comments that some of the CEOs made. So let's talk about that in a second to answer your question. A lot of the scuttlebutt comes from some of the reporting that somebody from a different network, a different financial news network that I'm familiar with and do occasionally came from. And I can assure you that that person is no big fan of Donald Trump. I read the accounts. I didn't see any of the video. I don't think there was any video. And it sounded like every other CEO meeting I've ever had with Donald Trump. Was he wide-ranging? Was he going from topic to topic? Yes. Was he disjointed? Yes. That's every single meeting that every CEO has ever had with Donald Trump. So I'm not sure why people say they were surprised by this. I didn't hear anything that was any different in 2017, 2018. So if I'm a CEO, what am I asking myself? Okay, I've never liked the package anyway, but let me look at the policies. Let me look how it was for business. What does Donald Trump really believe in? He really believes in tariffs. He really believes in deregulation, and he really believes in a simpler tax code. You know, if you're a corporate CEO, goodness gracious, if you're an ordinary person, that might be compelling. Look, there's a lot of folks who don't like his style. I struggle with his style from time to time. We've talked about that. But at the end of the day, I think the CEOs are looking their hands over and say this is a choice between Biden policies and Trump policies, and I wouldn't be surprised if they come down on Trump's side.
We talked to Dave McCormick last hour, running for the Senate in Pennsylvania, Republican. Asked him about Donald Trump's
At 1:20 p.m. Eastern Time, we expect comments from Fed's Muslim, who will give a speech on the U.S. economy and monetary policy at a CFA Society St. Louis luncheon. It will be followed by a moderated Q&A.
Trump has taken a couple of stabs at this, including offsetting the impact of tax cuts with higher tariffs. But the issue of deficits not going away here, Mick. We're not talking about reforming Medicare and Social Security. We're not talking about pronounced spending cuts. So are the CEOs in that room only concerned with the immediate term here, cut red tape, cut taxes, or are they worried about the long-term corrosive effect of deficits?
You've asked a bunch of questions. The cynic in me will tell you that they're just interested in the short-term balance sheets, the P&Ls. I hear Jamie Dimon talk about the threats of the deficit, but he was one of the largest voices for stimulus in 2008, 9, and 10, 2019, 2020. I get it, but welcome to the party is all I can say. Is that there have been a lot of folks in Washington worried about the deficit for a long time. Glad to have some big names along for the ride. On the tariff plan for taxes, that one I don't put any credence in at all. The idea of raising tariffs to get rid of the income tax, that was a throwaway line. It takes you. I've talked to the policy people inside the Trump policy team. None of them have mentioned that specific proposal to me in my many conversations with them. I think it was an off-the-cuff remark designed to sort of measure out how people felt about tariffs. Besides, Joe, Kayla, if you do the math, it doesn't work. Income tax generates just north of $2 trillion a year. We import about $4 trillion a year. That's a 50% tariff on a static basis. But of course, if you put a 50% tariff on something, you probably import less. So you're not going to generate that 2.2. It's a cycle into disaster.
Yeah.
So the math doesn't work on tariffs replacing income taxes. But tariffs are real, and he's serious about extending the tax cuts. He's serious about taking the corporate tax rate down from 21 to 20. He always wanted 20 to begin with back in 2017 when they cut the original deal. So that's going to be a priority for him on day one.
All right, Mick Mulvaney, former acting White House chief of staff, former OMB director, founder of the Freedom Caucus, former congressman from South Carolina rather. Too many titles, Mick. Thank you so much for joining us. We want to get an economist's view now on what we just talked about with Mick there and bring in Kitty Richards. She is Groundwork Collaborative Senior Strategic Advisor who is here with us in our Washington, D.C. studio. So, Kitty, we also want to talk to you about the retail sales data that we got today, which was a lot weaker than expected. If we could first begin, though, with what we're all talking about here in Washington as of late, higher tariffs in exchange for lower taxes. Does this make any economic sense in your mind?
Thank you so much for having me on. You know, I actually rarely find myself saying that I would agree with what Mick Mulvaney just said, but I don't think that we should take former President Trump seriously when he talks about paying for getting rid of the income tax with higher tariffs. But I do think that we should really think about why he is throwing that out to test the waters. And what his real commitments are is cutting taxes for the wealthy and for big corporations. And that's what we just heard. It's what we hear over and over on the campaign trail. And that's the part that I do think we really need to take seriously. And frankly, we have been experimenting with huge cuts to taxes for the wealthy and corporations over the last 40, 50 years at this point. They have not delivered for the American people. And that's why they're so deeply, deeply unpopular. And so any claims that this is going to be positive and grow the economy really are just more of the same failed trickle-down economics.
If these tax cuts were made permanent, though, and there's no effort to offset them, to pay for them on Capitol Hill, what do you say to those Trump supporters who say it's about growth, that we will grow our way out of the deficit?
Yeah, so, you know, the corporate side of the Trump tax cuts actually are permanent, and they were the largest part of the TCJA's revenue losers, and they have completely failed to deliver. The Trump administration. So on the individual side, I think, again, the model of growth that is built on funneling more and more cash to the very wealthiest in this country has not delivered for working people. It hasn't delivered for families. And I'd also like to talk about, you know, we hear a lot of concern about the deficit. What I'm concerned about is using these huge deficits that have been entirely created by first the Bush tax cuts and then their extension and then the Trump tax cuts on top of them as justification for cutting the programs that families and seniors rely on in their day-to-day economic lives. I think that is really, really dangerous for economic growth as well as for
So shortly expecting the Fed reverse repo operation, and also at 1:20 p.m. Eastern Time we expect comments from Fed's Muslim, who will give a speech on the U.S. economy and monetary policy at a CFA Society St. Louis luncheon. It will be followed by a moderated Q&A.
Material way. It's not just the only 0.1% month-on-month figure that we got, but the downward revision from the month prior, Kitty. How concerned are you by the data we've just seen come in?
So I'm concerned primarily because over the last year, 18 months, as the Fed has pursued its rate hiking campaign, the American consumer has actually been surprisingly resilient, and that has driven a strong labor market, had good spillover effects into wages. Those are all positive things, but it's sort of been a question of
68 counterparties take 375, spot $542 billion at the Fed reverse repo operation.
Credit card balances and delinquencies. We're starting to see some stress on American families who have run through the little bit of savings that they were able to accumulate during the pandemic and are facing higher prices, especially on things like housing and childcare, where the Fed's not really able to bring those prices down. And in fact, those high interest rates are really taxing American families very directly.
Kitty, we just have a minute left. When you hear Walmart talk about affluent people trading down to shop at their stores as opposed to going out to whatever luxury retailer they might be used to, what does that tell you about where we're going to be 6 months from now?
You know, I think that the good side of that is that we should have retailers competing on price.
Okay.
What we've seen instead over the past 18 months is prices going up, and retailers really absorbing that and creating higher profit margins for themselves. So I like to see that competition going. But what we really want to see is that competition leading to lower prices for all consumers, leading to higher wages for workers, and for families to be able to get ahead on the things that really matter, like education and healthcare, childcare, housing. And so that's what I want us to focus on. And I think that's really what the Fed needs to be focused on as well.
Yeah. It's great to have you at the table. Thank you for coming to talk to us.
Thank you.
From the Groundwork Collaborative, she's Senior Strategic Advisor, Kitty Richards. Many thanks for being with us today on Bloomberg, where we do have breaking news crossing the terminal here, and it's NVIDIA. Kaylee, look at this, topping Microsoft and Apple to become the world's largest stock. It's up $4, 3% to about $135 a share following that 10-for-1 split.
That is a valuation of about $3.3 trillion. Just absolutely remarkable, Joe.
We'll assemble our panel next. Rick Davis and Jeannie Shanzano on the fastest show in politics. It's only on Bloomberg TV and radio.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, The China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market
Shortly
analysis,
expecting
and the most
comments from Fed's
influential
Muslim.
newsmakers in and around China. Bloomberg, The China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. From the world of politics to the world of business, 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly.
So Fed's Muslim says, I need to observe a period of favorable inflation, moderating demand, and expanding supply before I'll have confidence for an interest rate cut. Retail sales data for May suggests aggregate demand is growing at moderate pace so far in the second quarter. I will remain vigilant until inflation is clearly and convincingly well on its way back to 2%, and if inflation becomes stuck meaningfully above 2% or moves higher, I would support additional policy tightening. These conditions could take months and more likely quarters to play out. I expect some further cooling in the labor market in the coming months, and the labor market no longer seems overheated but remains tight. He expects aggregate consumption to moderate in the coming quarters without stalling and then return to or slightly exceed the trend by 2026. Financial conditions feel accommodative in some parts of the economy, restrictive in others. And it's possible monetary policy transmission may be slower this cycle. And the current monetary policy stance seems restrictive, but some uncertainty about to what degree. Personal consumption expenditures price index should show welcome downshift of inflation in May. And Muslim says there are potential early signs of continued progress on inflation, and continued high employment and wage growth should moderate impact of easing labor market conditions on aggregate demand.
Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. There is a new number one. NVIDIA's relentless rally has propelled the semiconductor giant's market cap over its mega cap tech peers, helping it clinch the title of the world's most valuable company as the AI wave continues. NVIDIA now more valuable than both Microsoft and Apple. NVIDIA shares, they are gaining again today. Right now, we do have NVIDIA shares continue to push higher. We've got NVIDIA up now by 3.3%. Lots of Fed speakers today. Federal Reserve Bank of St. Louis President Alberto Massanum is suggesting interest rate cuts could be delayed for some time, saying it is more likely to take quarters and not months to see data support a reduction. And Federal Reserve Governor Adriana Kugler says it will likely be appropriate for the central bank to lower rates later this year if economic conditions unfold as she anticipates. U.S. stocks higher across the board right now, with the S&P up 11, a gain there of 0.2%. The Dow up 19, higher by just under 0.1%. NASDAQ up 0.1%. 10-year yield 4.22%. The 2-year 4.70%. Gold up 0.4%. 23.29 the ounce. And West Texas Intermediate crude up now by 1.1%. Briefly, CEO Elon Musk says Tesla is working on offering stock-based compensation for top-performing employees. This according to a Reuters report. Recapping, stocks higher, S&P up 0.2%. Balance of Power continues now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
Charlie Pellet in New York, thank you so much. Welcome back to Balance of Power live from Washington, where I am, Joe Matthew is, as well as is President Biden. He's
Fed slogan says, "I'm optimistic about generative AI's effect on productivity."
Marking the 12th anniversary of DACA. This, of course, happened during the Obama administration, the Deferred Action for Childhood Arrivals program, in which people who came to the U.S. as children were protected. Now he's getting ready to announce more action for immigrants who are married to U.S. citizens, have been here for over a decade. They could see a sped up process that would see them not leaving the country in order to get the status that they are seeking.
That's the key, is that you could stay here for this process. And it reminds us of what we haven't been talking about in the big debate about the border here the last many months, actually all year so far, Kaylee. That comprehensive approach in the Senate that went nowhere started the end of last year. And there's been so much talk about border security. There's been very little talk about legal immigration. And that's what we thought we'd get to with our panel. Jeannie Shanzano is with us at the table here in Washington, Bloomberg Politics contributor and senior democracy fellow with the Center for the Study of the Presidency and Congress. Rick Davis as well, partner at Stone Court Capital, Bloomberg Politics contributor. Great to see you both. Rick, you spent a long time working on comprehensive immigration reform in the United States Senate. It's, of course, still never cleared the final hurdle and become law. Is this the new approach now? Will it have to be piecemeal, whether it's through executive action or legislation?
Yeah, well, I think what we've seen is that the only thing that has worked lately is executive action. You didn't see a lot of landmark legislation during the Trump administration. You saw a lot of executive orders during his handling of the immigration crisis. And of course, I think the Biden administration has really come in late to it, but has decided after failed efforts at getting legislation, laws written, that they decided to start going the executive order route. And you now have 2 in 2 months. So I think right now you have to expect this to be something that's executive action and unfortunately not sticky. In other words, the next administration, if it changes, can undo all the executive orders that have been done currently under this administration.
Yeah, it's a very good point. Of course, the first executive order that Rick was referring to, Jeannie, was what President Biden announced in terms of cracking down on asylum seekers because crossings over the border were just too high. That upset a lot of progressives. It upset the Hispanic caucus in Congress, to be sure. Does today's action go far enough at playing to their side of things? Do these things offset each other in a real way?
It's more in the direction of what they would like to see, but I think it's also importantly in the direction of what many Americans would like to see, which is comprehensive immigration reform that Congress has been unable and unwilling to pass. And so the president is doing what he can with what he has. You know, I'm reminded of Barack Obama's famous, I've got a phone, I've got my pen, and they can't force Congress to act, but presidents can take these EOs. To Rick's point, right. They're not ideal because they can be overturned in the next administration. But presidents should try, and I give President Biden credit today for trying, just like with the security. We need border security first and foremost. That is most important. Then we need to fix a very broken process, which is what he's doing today. Somebody married in this country for 10 years to
Fed's
an American
Logan says
citizen
inflation
did
is
not
still
be forced
too
to go to a
high,
country
but
in
we
many
have
cases
made
they've
tremendous
never been to
progress.
for 10 years and sit there while we in the United States try to figure out how to run the paper through. So this is an important moment, and I give him credit for taking it. I wish Congress did it, but that's not happened in a long time.
It'll be interesting to hear the reaction from progressive Democrats who've been upset with Joe Biden for not getting what they want to see in terms of reforms when it comes to immigration. And we know that the border is going to be one of the most important issues on the campaign trail. Our own polling here at Bloomberg News with Morning Consult has proven that. And this is a primary day. I want to ask you guys about some of the races we're looking at and the so-called
And Logan
Trump
says the
effect,
May
which brings us
CPI
no
data
further
was
than
welcome news.
right across the river here in Virginia. Bob Good's seat, Congressman Bob Good, the chair of the House Freedom Caucus. This is an interesting one, Rick. We've been talking about it quite a bit here because Donald Trump has endorsed Bob Good's rival in this case, following mainstream Republicans to oppose the chair.
Logan says it's great to see CPI data, but we will need several more months to have confidence we're heading to 2%, and I'll be watching data in the coming months quite closely.
Or about establishment Republican thought?
Logan says we're in a good position to be patient on policy.
Jeannie, we want to take a swing at this one based on
Can you hear me now?
Sorry.
Hello.
Go ahead, Rick. Take it away.
Yeah, I was just going to say that given the support of people like Kevin McCarthy to John McGuire, Bob Good's opponent, that is retribution. But this is actually the first real risk that I've seen Trump take this cycle. He has basically endorsed people who are going to win anyway, and we haven't had that many competitive primaries. And so this is an interesting one where Trump has basically said that he wants to oust a sitting Republican from the Freedom Caucus. And if he doesn't win this, I think it's going to be an interesting story as to why Donald Trump wasn't able to make good on this. If he is able to get rid of Good in this primary, then he's going to look like he's consolidating his power in the House, including over the Freedom Caucus, which sometimes has broken with Donald Trump.
All right, Jeannie, now, if you could weigh in on the Bob Good race, how significant is it not just for his future as a legislature in the House of Representatives, but also for this group of Republicans that has often felt like it isn't really part of a Republican conference at all in many instances?
I think it's really important. I mean, number one, he would be, if he loses, and I don't think Tom Cole will, but if he did as well in Oklahoma, we have not seen incumbents in either party go down in this cycle except for one incumbent on incumbent race. So that in and of itself would be big news. If it's Good, the head of the Freedom Caucus, that would also be big. But I think it speaks to how much Donald Trump owns this
Fed's Logan says the neutral rate is probably higher now than it was before the pandemic.
A loss of Good, but I do think it would show that where Donald Trump goes, the party does go, and maybe the Freedom Caucus in the next Congress doesn't have quite as much power, particularly if Donald Trump is in the White House.
The Kevin McCarthy effect is an interesting one as well, Rick. It didn't go so well for him in South Carolina trying to run against Nancy Mace. What's going to happen tonight in Virginia when it comes to Kevin McCarthy's potential to have a lasting impact on these races?
Yeah, it's hard to say. I mean, the retaliation tour hasn't been going well, as you point out. He's lost his first out of the box. Nancy Mace was going to be hard to get rid of. Trump tried to get rid of her 2 years ago, and she defied him. So I wouldn't bet against her in the future. The reality is that these are tough races because there are strong incumbents in red districts that are going to be hard to supplant. And of course, shortly after this one is Florida, where he's going after Matt Gaetz. And that one will be really interesting to watch because, in this case, Kevin McCarthy actually recruited the opponent to his number one foil in the House. So my guess is it's more about retribution than it is winning. But today could be a feather in his cap if he's able to unseat Bob Good.
Well, Rick, you brought up Congressman Matt Gaetz there, of course, the Republican from Florida. It's worth noting we've learned in the last 24 hours, Joe, that the House Ethics Committee has identified what they call,
Fed's
quote,
Kugler says we have seen an increase in delinquencies, indicating that households are being stretched.
And illicit drug use. Yeah. Of course, there's long been ethics inquiries into the congressman. He said on X last night that time and again he has been vindicated by the outcome, which is they find no instances of wrongdoing, but interesting nonetheless to see that development.
He's talked about those allegations on this very program. The Ethics Committee declining to comment on the timing here of the statement that it put out today. Jeannie, what do you make of what's going on? We're going to go through this whole exercise again.
We will, and let's not forget, that was one of the reasons we suspect that Gaetz moved against McCarthy in the first place. So, if he was ousted, it was, adds to the drama. These questions have followed Matt Gaetz. He clearly has said there's no merit to them. But the Ethics Committee and the fact that this is a Republican House, we can't forget. It does say that, there may be something that ends up catching up to him in the end. Of course, first thing is he's got to win this primary and retain his seat, which is, I suspect he does, but there's, no guarantees, especially with this news coming out today.
All right, Jeannie Shanzano and Rick Davis, our Bloomberg Politics contributors, thank you so much. Just to read from that statement on X that Gaetz put out, Joe, he says in part, this is Soviet. Kevin McCarthy showed them the man, and they are now trying to find the crime, to Jeannie's point.
Fed's Kugler says retail sales indicate economic activity may be cooling.
It all started with the removal of Kevin McCarthy as Speaker of the House, and he's not done with Matt Gaetz. So let's see where we go with all of this. Thanks again to our panel, Rick and Jeannie. Let's bring you up to date on world and national news now.
And Logan says the Fed slowed the balance sheet unwind to provide a smoother path.
Hi, Joe. President Biden, meanwhile, is granting legal protections to undocumented spouses of U.S. citizens living in this country. Now, to qualify for the Parole in Place program, an immigrant must have lived in the U.S. for 10 years, be married to a U.S. citizen, and they would have 3 years to apply for a green card while receiving a temporary work permit, and they would be shielded from deportation during this process. Julie Kirchner is with the Federation for American Immigration Reform. She believes this is an abuse of power.
The Biden administration is completely circumventing Congress. They're creating their own immigration program. This is not in statute.
The move could affect upwards of 500,000 immigrants. The CDC is out with another warning that ADHD medications are in short supply. That has some parents struggling to find a
Fed's Logan says we are seeing the economy coming into better balance, but I'm still worried about the upside risks to inflation.
The Texas Tech Health Science Center says there's some red flags you should watch for.
They just seem to be interested in getting.
Logan says we are still seeing some lingering supply chain issues.
Jeannie Schwahart says the problem started during COVID. Telehealth was expanded. That allowed more people to get prescriptions for ADHD medication. And at the same time, she says there is a shortage of the active ingredients. Meanwhile, some of those telehealth companies will also charge you a fee on top of seeing a provider and getting those prescriptions. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
Every single thing I've done, it's almost as if somebody has said it can't be done. I mean, I remember I was in a factory and I said, I want to go in the night shift. And they said, no, we don't put women in the night shift. I said, how will I be a successful production manager or personal manager of a factory if I never went into a night shift and knew how a third of my people worked? So in some ways it has fueled some of my determination. It's fueled some of my, okay, I'm going to show this is possible, a sense of I'm going to go get on and do it. It also gives me courage because I feel sometimes I'm not just doing it for me, I'm doing it for everyone else who comes after me. And I always tell women who ask me for advice saying, put your hand up for the most difficult job. Put your hand up for things that are challenging. Go in there and lean into things that are difficult, that are challenging, because that's what gives you the greatest credibility, respect, reputation.
The linear business is not going anywhere. The sports business is moving and is going to figure itself out between digital and linear. It's an unbelievably healthy market. They all have to be in it. They all want to be, every single one of the players want to be in it because of the audience. We have two assets in the sports business that are year-long, don't have a season. I don't believe prices are going down. You're going to figure out the bifurcation of the rights and give things up, not give things up.
How long do you think it is before Netflix actually jumps into sports?
They're in sports right now, but they just do the shoulder programming.
Yeah.
I think their point of view, and you'll ask Ted tomorrow, is we build up we don't want to be in the bidding of rights and then not have any long tail. So I'm not sure. They did bid on Formula One, but ESPN got it. So I think that was a smaller package, meaning smaller economics. So we'll see.
The top names in business are on Bloomberg.
They're kind of predicting a soft landing, and you see that in both stock price, which are kind of high, credit spreads, which are kind of low, markets, which are kind of wide open. That's all good. Doesn't tell you what the future is going to be. But I think there are a lot of inflationary forces in front of us that may keep it a little bit higher than people expect. My view is whatever the world is pricing it for a soft landing, I think it's probably half that. I think the chance of something going wrong is higher than people think.
Bloomberg. Context changes everything.
Morning from our world headquarters in New York, I'm Manus Krenning.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything. The UK decides. On July 4th, amid debates about tax policy, border security, foreign policy, and more, voters head to the polls to choose the next leader. Bloomberg has full coverage leading up to the election and will bring you the results after all the votes are tallied. Tune in for continuing coverage on Bloomberg Television. Context changes everything.
On Wall Street, we do check markets all day long here at Bloomberg. NVIDIA, now the world's most valuable company, NVIDIA up by 3.6%. Rally in chip makers today, the Dow, the S&P, NASDAQ, all in the green. S&P up 0.2%. The Dow right now up by about 0.1%. NASDAQ also up by 0.1%. 10-year yield 4.21%. The 2-year 4.70%. Gold up 0.5%, 23.31 the ounce, and crude now at 81.35 a barrel, up 1.3%. I'm Charlie Pellet. Balance of Power continues now. Once again, your hosts Joe Matthew and Kaylee Lines.
All right, Charlie Pellet with a look at today's trading. Thank you so much. I am Kaylee Lines alongside Joe Matthew here in Washington, where we, of course, try to figure out how policies of the future could ultimately impact what's happening in any given day in financial markets, or really the trajectory of the U.S. economy as a whole. And that is why, Joe, in the last week, we have spent so much time and attention on the ideas that Donald Trump has been floating in regard to higher tariffs and lower taxes.
Yeah, we sit here on a primary day looking at a couple of important races around the country, Kayleigh, but there's one that's already set to a general election phase, and that's the Senate race in Pennsylvania. Of course, one of the very important swing states that we're focused on here. And Republican Dave McCormick is running against Senator Bob Casey, the Democrat, longtime Democrat from Pennsylvania. Remembering McCormick, the former CEO of Bridgewater, had run in a primary against Dr. Oz in another attempt to get a Senate seat in Pennsylvania. He now has the endorsement of Donald Trump, Kayleigh, and I had a chance to talk to him along with Bloomberg's Sonali Basak earlier today. Sonali started our conversation by asking him about those very tariffs that you mentioned and the potential impact they could have.
Fed's Muslim says the Fed targets consumer prices and not housing prices.
Been generally skeptical of tariffs, but when President Trump came into office, I thought that selective use of tariffs to ensure a fair playing field, ensure reciprocity, ensure negotiating leverage made sense. And so I supported the tariffs that President Trump put in place under the last administration. And I do think that there's the risk of inflationary impact. And frankly, I think there's two dimensions of President Biden's policies which are relevant to this. One is the enormous spending is the primary driver of inflation. That and the policies that are directed on reducing oil and gas consumption. Those are the primary drivers of inflation. And economists like Larry Summers have said as much. The second problem with those policies of the Biden administration, particularly as it relates to EVs and solar panels and so forth, the policies that have been in place have made us, ironically, highly dependent on China, because 70% of the lithium batteries and 80% of the solar panels are manufactured in China. So in one fell swoop, in my opinion, the Biden administration's economic agenda has driven up inflation and made us more dependent on our primary adversary. And that's why, as I've run for the Senate, I've advocated a set of policies that take us in the opposite direction.
Let's put a finer point on this, Dave. The idea of tariffs here against China we'll put aside for a second, because Donald Trump is also proposing an across-the-board, a global 10% tariff that he says would help to pay for tax cuts if he's reelected. This has been a big debate, as I'm sure you well know, in Washington over the past week or so, and it's about to get a lot louder, making permanent the 2017 tax cuts that are set to expire next year. We saw a new analysis from the Committee for a Responsible Federal Budget says that would cost in excess of $4 trillion, that it could add that much to our deficit. So if it's not tariffs that offset the cost here, how do you pay for it?
Well, first of all, you gotta pay for it with a growing economy that's generating tax proceeds. The best way to do this, and in the Bush, or rather the Trump tax cuts, if President Biden's reelected and those tax cuts are allowed to expire, that's going to hurt all Americans. So if you look at someone who's making $70,000 a year, the impact on them is something like $2,000 of tax reduction benefit that they lose. And this is the thing.
But the impact of inflation is pretty great on a household as well, right? How do you find $4.6 trillion, I think is the number that they put down here, to pay for that without stoking inflation even further?
The inflation's already been stoked by $6 trillion of incremental spending under President Biden.
So you'd add another $4.
No. The primary driver of the inflation we had has been the spending policies of Biden, and Republicans and Democrats have been spending too much. I'm not saying this is solely Democrats, but what's happened under Biden is $6 trillion of spending. And if you think about the types of spending, you can talk about $170 billion of loan forgiveness, which is absolutely, in my opinion, un-American and unfair, or you can talk about tax cuts that are going to benefit all Americans and all Pennsylvanians. And absolutely, inflation is the most regressive tax at all. So we've got to get inflation under control. But the drivers of inflation are bad energy policy that have driven up the prices of fuel and too much spending. And so I would say reversing certainly some of those Biden spending bills and rolling back the war on natural gas and fossil fuels is the key to getting our economy back in check. And I wouldn't, particularly now when so many families are burdened by this inflation, I wouldn't burden them further by rolling back the tax cuts that President Trump put in place.
Fascinating conversation and a taste there of our back and forth today with Dave McCormick. I'm Joe Matthew in Washington alongside Kayleigh Lines. That Senate race is going to be one that decides the balance of power in the United States Senate, and it also happens to be one of the most important swing states for Joe Biden. It'll be interesting to see how the top of the ticket argues potentially with
Feds Muslim says artificial intelligence, if adopted widely, will have material productivity impacts over the long term.
Actual election day. In the meantime, the country tomorrow is getting ready to mark Juneteenth. This, of course, became a federal holiday just 3 years ago in 2021 under the Biden administration, commemorating the end of slavery in the United States. It has been 159 years tomorrow since that day. And we wanted to have an important conversation now with Hillary Shelton. He is National Advisor of Governance and Policy for the NAACP, and he is joining us here in our Washington, D.C. studio. Hillary, welcome to Balance of Power. Thank you so much for being with us. Of course, a lot of progress was made to get to Juneteenth. Certainly there has been progress made in the 159 years since, but certainly there are also areas in which more progress still needs to be made. As we get ready to mark Juneteenth tomorrow, what is your view of how far we've come and how much further there is to go?
Well, I think as we talk about how far we've come, it's important to recognize that we want to make sure that it's clear. That is, that as a society and a country, that we recognize what had gone wrong and that we move to do the right thing in the right direction. That even as we recognize the 19th as Juneteenth, we know that the Emancipation kind of proclamation, so to speak, was actually something they had to roll out and work its way to Texas. Right. And it wasn't until it got there that we were actually able to fully recognize, with the support of the new government of our country, that much more.
Feds Muslim says, I'm really welcome to the news that the labor market has been rebalancing.
And recognize how awful slavery was. As we're looking ahead, we're thinking about things to make sure that it still lives up. That is, we know that even as we were recognized the end of slavery, we still had to clarify what the Constitution meant to, as the term was used, even those of former servitude. That is, those who had been enslaved in our country, and other people as well. It's amazing how the impact of slavery economically hit so many different places in so many different ways in our country, and eliminating that awful scourge was something that moves us forward and unified us even greater as a nation.
Well, you go back 3 years to Kayleigh's point to where we were as this became an official federal holiday. Markets are going to be closed tomorrow. It's a pretty remarkable achievement. But go back another year, 4 years ago.
Feds Muslim says, I am watching the labor market for signs of any unexpected deterioration. I'm not seeing those signs at the moment.
A lot of promises made then, not kept, when it comes to DEI policies, when it comes to investments that many major corporations promised to make. How important is it to go back 3 or 4 years to those initial promises and that feeling that this country had, to remind ourselves of what's important?
Well, it's extremely important. It's extremely important that we gauge the improvements that we make, or quite frankly, where we fall behind in the promises made.
Are you disappointed in what has transpired?
In a lot of ways, yes. There's so many things that still should be done. So as much as it hasn't transpired, hopefully we'll learn from our mistakes of the fix that wasn't taken and what needs to be done to make sure we live up to those promises. That is, when we watched George Floyd, I think one of the reasons so many Americans were so outraged that we saw what was happening. Perhaps new technology added quite a bit to us seeing what was going on and watching this man literally being assassinated on the streets in our country and whatnot for no good reason. The police were overly aggressive or overly violent. It was a big problem. We put TV cameras on police officers, body cams as we call them and whatnot, but they still didn't meet the need of our community.
At 2 p.m. Eastern Time, we expect comments from Feds Goolsbee, who speaks in a panel discussion at the 2024 Marshall Forum.
The important role of our law enforcement officials in being able to secure those things and even the trust.
Kugler says how much we can't will be a question we continue to assess as more data comes in.
Make the laws, as there are members of Congress who are sitting in those halls now who are actively pushing back against the entire notion of DEI, of things like affirmative action. What do you still hope to see from Congress?
We hope to see Congress begin with continuing to analyze the data As we move ahead, being able to know what the numbers are and see where we've continued to move ahead in fixing these problems, or whether we've fallen behind. In so many cases, we've seen that as well. George Floyd was a falling behind, because George Floyd came after Ferguson, Missouri. It came after so many other cases along those lines. We thought in each of these steps we'd fix the problems, and clearly we haven't. So as we think about what needs to be done now, we need to recalculate those laws and actually repair them where we need to repair them, fix them, improve them, change them, in some cases replace them. So we have the great laws that we can enforce that actually lead up to the kind of support we want for our constitutional rights of equal protection and equal opportunity under law. We need to make sure we continue to gauge those issues along these lines. Even as we think about hate crimes in our country, we still have to calculate the data. That is, we passed something called the Hate Crimes Statistics Act first, to show that the data very clearly indicated that we had a real problem with hate group activity, hate violence because of race, gender, ethnicity, and other changes and so forth, and it's something more needed to be done. And in essence, we began pushing that direction. We then passed the Hate Crimes Prevention Act, which included the data and the necessary resources to be able to accurately collect the data. One of our big challenges now is that we have jurisdictions that simply don't want to recognize that the crimes that are committed are indeed hate crimes. And indeed, the commitment of a nation to actually eliminate those hate crimes is
Feds Kugler, when asked why not to cut at the next meeting, says there are risks on both sides of the mandate.
You talk about the fix that wasn't taken. That's a great phrase. When we go back there and talk about some of the things that you just said, some of the promises that were made 3 and 4 years ago, we've actually seen progress on the state level with things like body cams, to your point, banning chokeholds, no-knock warrants. That's all been done on many cases on the state level. Is the federal government then and Congress the hindrance to getting further progress?
Well, I would say that they're major contributors to the problem, because we do still have local and state problems with the implementation of many of these programs as well.
Sure.
That very well, as we think about law enforcement officials, police officers, those are basically controlled at the state and the local levels. The federal government oversight, as a matter of fact, the Justice Department does a lot more to accurately collect that data than some of the jurisdictions that are wanting to protect, whether it's their tourism programs and whatnot, that who wants to go to a city or state that we know participates in racial violence or other things along those lines. So they don't want the data to come out sometimes. But you can't repair the problem if you don't have that data. We can't do it right to make sure everyone is protected along those lines. So being able to do what we do at the federal level is important too. So let me just say, nobody gets a break. We need to make sure the federal government, the state governments, and the municipalities are all actively involved.
Feds Kugler says we certainly need to be convinced that we are not going to be put in danger at all.
In our final moment with you, let's talk about the head of the federal government. The next U.S. president obviously is still an open question.
Feds Kugler says we certainly need to be convinced that we are not going to put in danger all the great progress made on inflation.
Issues that impact us the most. The question that you have to ask of any candidate that's running is, where do you stand on the issues? As we've seen the agenda of Mr. Trump and the agenda of Mr. Biden, let me first say the NAACP is a nonpartisan organization that does not endorse political candidates or political parties. But we do pay very close attention to the details in the policy itself. So the question then is, as we think about why it is we don't have more African Americans going to colleges and universities and being able to become professionals, because in many cases they can't afford it. Who's going to help us with those issues and whatnot as we think about things along those times, whether it's student loans, whether we're talking about grants? Well, let me just say that Mr. Biden has indicated and has shown actually through his actions that he recognizes that problem. Let me put it this way. You're sitting next to a guy that barely made it through on student loans, though both my parents went to college. And very well being able to raise the money to get that good high-quality education really took a lot of doing. It's not just education. We have to talk about criminal justice the same way, and so many other issues that affect all of us in our daily lives.
Hillary Shelton, what a pleasure to have you with us here at the table in Washington. Come back and see us again on this day before Juneteenth from the NAACP. I'm Joe Matthew with Kaylee Lyons on Bloomberg.
operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can...
Fed's Kugler says, contrary to the rest of the world, there has been quite a bit of resiliency in the US economy.
Tap into new things, continue being disruptive. We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Invest, don't trade. Invest for the long term, i.e. when markets are challenged, don't get spooked. Don't get involved in investment hobbies. The investment hobbies are generally not profitable.
Shortly expecting comments from Fed Goolsbee.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everybody, live on Bloomberg Radio, TV, YouTube, and Bloomberg Originals. This is Bloomberg Business Week on this Tuesday, June 18th. Carol Masser along with Tim Stenevec. So let's get to the setup on this Tuesday. Another breather in the equity trade for the most part, unless you are NVIDIA, Tim.
Yeah, the company's surpassing every other company to become the world's largest. Carol, it's up another 3.7% today. We're talking more than $3.3 trillion in market cap.
Just got to say, it's up 175% so far here in 2024. So 3.347 trillion market cap. If you're Microsoft,
CBO forecasts the US fiscal year 2025-2034 deficit at $22.083 trillion, up from $2.067 trillion from the February forecast.
Largest market cap companies, but NVIDIA taking that crown.
CBO forecasts 2024 US real GDP growth at 2% versus 1.5% in the February on fourth quarter to fourth quarter basis, and 2025 US real GDP growth at 2% versus 2.2% in February, and forecasts 2024 to 2034 average US real GDP growth at 1.8% versus 2% in February.
All right, we're going to talk about that in just a moment. Plus, speaking of the environment and the macro,
and CBO says the fiscal year 2024 deficit is to increase due to higher outlays for student loans, FDIC bank resolutions, Ukraine-Israel aid bill, and Medicare.
Are guiding one investor to names like NVIDIA and Comcast.
Yeah, I'm curious about that one. And then next-gen investors, maybe they're snapping up NVIDIA, but they are definitely snapping up sneakers and watches, and they're shunning that 60-40 portfolio.
What about ESG? Do they care about ESG?
We're going to find out. All right, first up, let's get a check on the trade and some of your top business stories. Let's get over to Charlie Pellet. NVIDIA, Charlie, king of them all.
Indeed, NVIDIA up now by just about 3.7%. Yes, we're looking at a record on NVIDIA. Key keeps pushing higher. Right now, we have got NVIDIA 135.87. Again, worth repeating, NVIDIA up by 3.7%. Big rally in chip stocks today. Tech rally overall. S&P up 12 right now, up 0.2%. Dow Industrials up 32, higher by about 0.1%. While NASDAQ up by 10, gain there of 0.1%. NASDAQ 100 index also up by about 0.1%. Broad rally, we've got the Russell 2000 index of small cap shares up by about 0.4%. 10-year 4.22% with a 2-year yielding 4.70%. Spot gold up 0.5%, 23.29 the ounce, and West Texas Intermediate crude now up 1.2%, 81.27 a barrel on crude. U.S. retail sales barely rose in May, and prior months were revised lower, pointing to greater financial strain among consumers. Among retail names today, on an update for the rest of the market, we got Macy's down 0.6%, Target down 1.6%, Walmart up 0.4%, Amazon down by 1%, XRT, that is the S&P Spider Retail ETF, up by about 0.1%. So again, recapping, NASDAQ just turning negative, down less than 0.1%. S&P up 0.2%. And on this NVIDIA Tuesday, NVIDIA up 3.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're going to hear NVIDIA a lot in the next few hours. All right, having said that, today, traders, it's not just about NVIDIA, folks. They waded through some mixed economic data that showed U.S. industrial production increasing in the month of May, helped by a broad-based pickup in factory output. And then separately, that retail sales report this morning barely rose, and prior months were revised lower. So that, Tim, suggested kind of greater financial strain among U.S. consumers.
Okay, with more on this morning's sluggish U.S. retail sales report and a move lower in U.S. yields, with us, Bloomberg News economics editor Molly Smith, also Bloomberg News rates reporter Michael McKenzie. They're both here in our studio this afternoon. Molly, I want to start with you, and I want to start with the data, because here's the headline numbers. Retail purchases, unadjusted for inflation, increased 0.1% after a downwardly revised 0.2% drop in the prior month, according to the Commerce Department. Excluding gasoline, sales rose 0.3%. Dig into the report for us, though. What exactly do we need to know about these numbers beyond the headline numbers?
So the retail sales data really just captures what we spend on goods. So think of that as like physical stuff, like furniture, clothing. Gasoline is actually a really big part of this, and gas prices were cheaper in the month, so that actually dragged the number lower, because remember, this isn't inflation adjusted. So if you see a category decline, that could also just be a reflection of lower prices, not necessarily lower spending. Exactly, less demand and spending activity. So, but taken all together, this really did point to a definite slowdown in demand, especially when taken with the downward revisions to prior months, as you mentioned, Tim, and really just as we saw, a few economists actually lowered their tracking estimates of GDP for the quarter coming out of this, because there is a measure within the retail sales report that feeds into GDP and how we impute consumer spending from that.
Michael McKenzie, come on in on all of this in terms of, we did see some reaction, right, though, after that U.S. retail sales report.
Yes, you did. You saw the market rally again. We got
Fed Scoresby says the inflation number that came out during last week's meeting was excellent.
Still holding a good rally, and then we had the 20-year auction. And I think what you're seeing with the bond market today is we got back to pricing in just under 50 basis points of cuts for this year.
And Goolsby says hopefully we'll see more data like that.
How further its yield can drop. What you're really starting to see here, and what I'm hearing from investors I've been speaking to the last few days, is people are now beginning to think they've got to get into duration. They've got to extend out the curve, because they're looking at the retail sales data and they're thinking, is this another little sign that the consumer is under stress, or at least beginning to get worried about this, the employment market? So therefore, it's pulling back on spending. And talking to investors today, they said it's not really retail sales that's driving this. It's more the idea that maybe the retail data is telling us the consumer is getting worried, and therefore we are getting close to that moment when the employment market starts to crack a little bit wider. And then, as we know from what the Fed officials have been saying, there's been a lot of them talking today, they are still sticking to this line. We're going to be patient, expect a cut, maybe two. That's kind of the story, right? That's what the market's priced in. But if the employment market starts to deteriorate, then, as someone said to me today, an investor said, you've got to be thinking about the next 6 months, the 2025 trade, and it's going to fall either way. Either within 6 months we'll know labor's okay, it's got through this period, or it's actually starting to fall apart. And that's how you want to be positioned. So what we're seeing in the bond market in the last few days, and spill over from last week, because both the 10-year and the 30-year auctions were very well received. Today, the 20-year is well received. So you've kind of got this group of investors out there saying, I'm going to buy here because there's a risk here that maybe the economy is weaker than we think.
Well, Michael, what I'm hearing from you is different than what we've heard from you over the past few months when we've spoken to you, over the past few weeks even. And I'm wondering what it was that you think that prompted this sort of shift in tone or shift in outlook from the investors you speak to. What was the piece of data?
It's more just a combination of data. It's more the anecdotal at this point.
Okay.
I think, and the fact
just
that
in our newsroom, can I just share anecdotally? It's not a Fed survey. It's nothing official. No government entity endorsing it.
Can we put it in the beige book?
But we could probably put it in the beige book. Well done.
All right. For the New York area, that would be.
Exactly, and specifically the Bloomberg newsroom area. But people talking about prices of things and making choices about things, and so I feel like we're just hearing consumers saying, "I can't be all in on things. I am going to have to make some choices."
You can see in the restaurant business, right? The restaurant business is starting to hurt. Certain areas really feeling the pain. And
Fed Scoresby says there is still a little bit of juice left after last year's rapid inflation decline.
I think you're hearing more talk about how all these accumulated savings that were built up after COVID or during COVID are now running down. And I think people are battening down. They're feeling more cautious here. Now, again, against that, you've got record stocks.
I know.
The housing prices are still very high. And don't forget, the American homeowner can tap a pretty hefty line of credit from their house if they need to. So I don't think you're going to get a real fall. But it is interesting listening to some people in the bond market now becoming more confident about moving into treasuries, out the curve, just thinking that maybe
this might be as good as it.
This is as good as you're going to get, but also the Fed may be falling behind the curve. They're hearing a bit more chatter of that now as well.
Molly, what are you thinking in terms of, we had a guest on, was it yesterday, last week? I don't know, the days all meld together. But just, that when the job market starts to come undone, it can move pretty quickly.
Well, this is where I have a hard time squaring all of this, because what we're talking about within our team is really like what is the best signal to take about the jobs market right now, because the last report was so conflicting, and that the two surveys between payrolls and households have been moving so far apart. So you have in this one camp where the data seems to really trade on and where Fed officials seem to take the most signal from is the payroll survey, which has been really robust. That came in about 100,000 above estimates in the last month. That's hardly, to me, showing a sign of softening. Then you have the household survey that everyone seems to poo-poo and say, oh no, it's the smaller one, and it's about to get even smaller. Actually, there's a sample cut coming, and that's where you're getting the actual weakness in terms of that employment measure coming down and unemployment going up. But people are saying, oh no, don't, the household survey's noisy, and we don't take as much signal from that. So I think that's really difficult to say then if you're going to argue that the labor market is softening, which yes, job openings are coming down, some unemployment claims are going up, but the biggest signal is still saying that the jobs market is very strong.
Okay, so what changes your view? What's the signal that you're waiting for, Molly, to make it sort of match what we're seeing anecdotally, or what at least you're hearing anecdotally?
Well, I think that's another thing when you say about matching it anecdotally, because I think this is really where it depends on where you are in the country. I was listening to we had Cleveland, outgoing Fed president of the Cleveland Fed, Loretta Mester, in the other day, and she was saying to us the reason why she trusts the payroll survey is because when she talks to contacts in her district, like that beige book, that the payroll survey really seems to be more indicative of matching up with the anecdotes in that district. So I think that's really increasingly of where you are in the country, of how the anecdotes match up to what part of the data you're looking at.
I keep thinking too, though, I'm already looking forward to earnings, which are less than a month away. Where
the countdown has begun.
The countdown has begun, where I hope, the C-suite is pushed about their labor needs. Are they hiring, to get an idea of what's going on? It's just a small swath, if you will, because it's a lot small and mid-sized businesses that really kind of make the backbone of the U.S. economy. Having said that, Michael, I keep thinking about this inverted yield curve, and when does it eventually pay off, or do we again need to disregard it because we just went through a pandemic and crazy amounts of liquidity, and how much is distorted as a result?
I think the jury is still out, but my own personal view here is that it is distorted, that it's a broken indicator. It's
interesting.
It indicated that this is a bond market that has been sticking pretty resolutely to the pivot trade and is doing it through the long end, so the 10-year. So this is why the 10-year remains stubbornly below both the funds rate and the 2-year yield. And if you go back in history, this is a pretty deep inversion.
Right.
So it suggests, on the one hand, I hate using the economist term, that the Fed is on hold.
Don't do it. No, go
The
ahead.
Fed is on hold for a long time and maybe makes a couple of cuts, and that's about it, right? And then eventually yields kind of get very flat. And the other scenario, of course, is that the bond market is finally going to get right, like a stop clock. All these pivot trade sort of views come to fruition because employment does start to deteriorate. The Fed has to cut. But it's interesting too, because if you look at how the market looks at the Fed's terminal rate, it's there at 3.5%, 4%. They don't expect a really big cutting cycle. So the trade really now is, do you think the economy is going to weaken a lot? Because if you do, then you should own 10s and 5s, because the Fed will have to cut not just down to 3.5, but probably back down below 3. But that's your risk reward, and that's kind of what you're seeing in the bond market. You're seeing that debate taking place, and it's just interesting that it is tilting a little bit more towards a sort of a harder landing if you look at the way that the sort of 5s, 10s are rallying here. And it could be, they've been wrong 8 times so far since late 21. Maybe they get it wrong again.
For those who are keeping track, like Michael McKenzie.
Again, ultimately, one day they could be right, and therefore that's the trade at the moment, really.
All right, just to kind of wrap up. So our next focal point, is it another inflation print next week? Like, what is it for you?
Yeah,
Molly?
I mean, we've got PCE. Is that already next week?
Yeah,
I
I think
thought
so.
Oh my goodness! Wow, the time does fly around
I
here.
know, when you're having economic fun.
Yes, and I mean, as we saw from the CPI and PPI data last week, it looks like PCE is going to come in pretty soft. A 0.1 increase in the core month-over-month measure. I think that would be the least since November, and that's where most economists are tracking right now.
So the trend line is there?
It is there, I think, but it's, again, so interesting when we had 3 months of horrible inflation news at the beginning of the year. You get one that's in line, and then last month was very good, and everyone's like, the downward trend has resumed. I think it's amazing how quickly that narrative shifted, and that we have now totally discounted the first quarter robustness.
That's a great point. I mean, for trend, I don't know. How do you think about
if you look at inflation break-evens in the Treasury market, they're at 2-year lows. So I was talking to an investor today who said they're actually buying that as a hedge because they're not ruling out a resumption of sticky inflation this summer. So it's a cheap hedge. But as he also said to me, I'm also long 5s because if it does turn out to be a weaker economy,
That's why we have 2 hands.
That's why we have 2 hands.
You guys are great. So appreciate the setup and analysis on this Tuesday. Bloomberg News economics editor Molly Smith and Bloomberg News rates reporter Michael McKenzie. That's a look at the economic news. We're going to get another perspective thanks to Citigroup hosting its Investor Day today. It comes less than a month from the bank's next earnings report with a look at the business, the banking environment, and really that overall macro view, some of which we just touched upon. Let's head to Bloomberg News global finance correspondent Shanali Bosick. She is getting ready to sit down with Citigroup CFO Mark Mason. They are at Citigroup's headquarters in Lower Manhattan, and this is now live on Bloomberg Radio and Bloomberg Television.
Thank you, Carol. We want to welcome in our Bloomberg Radio, television, and YouTube audiences. Alongside now with me, I have Citigroup's Chief Financial Officer, Mark Mason. It is the Bank Services Investor Day, and your CEO, Jane Fraser, made some news earlier saying that we are no longer the financial supermarket of the past.
Correct.
So, Mark, what is Citigroup in the future?
Well, first of all, thank you for being here today. Today was a very exciting day for us. We had an opportunity to update over 120 investors on the progress that we've made since our Investor Day, but importantly, to do a deep dive on our services businesses. And to your question, we want to be the preeminent bank for institutions with global needs, as well as a leader in global wealth and a winner in the U.S. market for our personal banking business. That's what we are today, all right? And a lot of what we talked about today, again, was really highlighting the crown jewel of our firm, the gateway to the rest of our offering for large institutional clients, but also for middle market clients, as well as for investors and asset managers in both that Treasury and Trade Solutions business and our security services business.
It's interesting because, to your point, even though security services has been a crown jewel, accounting for roughly half the profit recently of Citigroup's own entire businesses, it's been hard to explain to investors exactly what it is, what it does. Do you think Citigroup's stock would be trading higher if people understood the business prospects for it?
I think the services businesses, which are comprised of that Treasury and Trade Solutions and the security services business, contribute a significant amount of value to this franchise. And I hope that after today, investors will realize exactly how much value that is and how much upside there is to that franchise, and we start to see it in the stock price.
Today, you are seeing it in the stock price. If you think about some of the things that have been holding Citigroup behind, Mike Mayo of Wells Fargo, big proponent of Citigroup's stock, but even he has been kind of critical here of the wealth business, calling the returns pitifully low. The question is, do you have a timeline for when investors can expect returns in that business, and how soon and how robust those returns can be?
You know, one of the things we talked about today is timeline. We talked about the medium term, 2026. We talked about top line growth of 4 to 5%. And we talked about the services businesses being a significant contributor to that, both in the top line and our services businesses, a 20% return on tangible common equity. In the wealth space, we brought in new management there. And we're keenly focused on how we grow the top line and how we improve margins and how we improve returns there. That's going to involve everything from right-sizing the cost structure to increasing the banker productivity to driving new net investment assets across that business. And we do believe that inside of this window between now and 2026, you'll start to see that value play through our financials.
Now, it's interesting. You mentioned new talent over at the wealth business, also at the investment banking businesses. When you look across Citigroup's businesses today, are you seeing yourselves bring in more and more external talent, really scouring Wall Street here to pick out the best out of your rivals?
Look, the good news is that Citi has been a talent magnet. And when you look across Jane's leadership team, we brought in Andy Sig, we brought in Viz Raghavan, we recently hired Tim Ryan. So we brought in some of the best talent on the street to bring both operating chops, but also a different perspective to the institution that we have and to the execution of our strategy. These are real operators who understand these parts of the franchise and are going to bring that expertise to bear and help drive that value.
You know, a lot of your recent communication to investors kind of showed that a lot of this cost cutting has been executed on already. Does it give you wiggle room now to lean in and spend in a few places, to hire a little more in certain areas?
You know, look, this is a multi-year journey, as you know. We're going through a significant transformation, an overhaul of our infrastructure. We're addressing the consent order remediations while we're doing that. It's not going to happen overnight. We still have considerable amount of investment to make. We have been talking about bending that expense curve. I have given expense guidance that reflects some of the savings we expect to get from the investments that we've been making. And speaking of investments, to your point, in order to grow these parts of the franchise, they will require continued investment. And as we realize savings, some of that will be available for us to fund those investments to drive that improved performance.
Speaking of new hires and speaking of performance, you said today as well that the investment banking division in this quarter, you can see investment banking rising by 50%. Of course, it's just been a matter of weeks since a new hire from JP Morgan started to lead the investment banking business. What is his mandate across the investment bank?
Well, Viz is brand new, but again, you're talking about an experienced, seasoned banker that's joined our franchise. And so, as you would imagine, he's coming in and he's getting up to speed. He has a great appreciation for the unique characteristics that Citi brings to banking, the globality of the franchise, the breadth of the clients that we serve. But he's going to have to spend some time really understanding where some of our weak points are, where some of our advantages exist. He's going to quickly see that we have invested in areas like health and in tech, and that those parts of the franchise are well positioned to capture the upside as the wallet rebounds. But I think Viz is going to be keenly focused on how do we get greater productivity, how do we gain more share, and how do we serve our clients optimally. The last point that I'll make, because this is unique to, I think, Citi, is how do we bring the breadth of the franchise to bear for these clients? So that's not just M&A and ECM and DCM and the IPO activity, but how do we bring the corporate activity as well? How do we bring the TTS offering to bear for these clients? How do we access the middle market clients? I think Viz is going to bring some perspective on broader client coverage, and that's how you unleash the value and the differentiating characteristics of Citi.
Now, one big question that remains in the investment banking universe, Citigroup, massive debt underwriter, of course. How do you think about the competition you're seeing in the private credit landscape? Are they friends, partners, or enemies?
Yes, the answer is yes, right? I mean, at the end of the day, it's a growing space. It's a space that's hard to avoid. It's one that we're obviously looking at what's the best way for us to play in. I think part of that is going to be partnering with those that have the prospect for being broader clients with us, and part of it will be competing in some aspects as well. But we're going to be smart about it, we're going to be deliberate about it, and we're going to ensure that whatever we're doing is consistent with the broader strategy that we've set.
I also want to be cognizant that Citigroup still has its own deal making on the table here. There's a lot of questions about when you see that exit fully happen in Mexico, for example.
Yeah.
Of course, new leadership, the globe is watching in Mexico as well. Does it change your calculus on how you see an exit happening via sale or IPO?
Look, the new leadership is an historic event, and so we congratulate Claudio on actually being elected to president. We think that's significant. It doesn't change our strategy. It doesn't change our focus on the importance of the IPO. It doesn't change our focus on the importance of the separation, which happens before the IPO, which we're keenly focused on right now. We obviously, at the end of the day, want to do what's in the best interest of the shareholders. And we believe that getting the Mexico consumer franchise in the hands of another player is in the best interest of our shareholders, and we're focused on that.
Beyond the Mexican consumer, the U.S. consumer, of course, is the giant whale in the room. When people are thinking about the U.S. economy, investors are baking in where to put their chips next. How do you think about that from the perspective of Citigroup, given you're alluding earlier today to this higher for longer rate environment and what that means for charge-offs?
Look, I think that, we're all watching kind of the impact of inflation and interest rates and what that means for consumers. And we have seen the credit environment normalize for consumers, particularly on the low end of the FICO score. This K-shaped type of normalization that's taking place. What you have to keep in mind from a Citi perspective is we tend to play on the higher end of that credit spectrum. So 85% of our card base is with consumers with FICO scores of 660 or higher. Doesn't mean we don't watch it closely, but it does mean that we ensure we've got appropriate levels of reserves in place. And that we're sticking true to, if you will, our credit profile and risk appetite. So we feel very well positioned. There will be continued normalization. There will be continued increases in NCLs, but generally in line with the expectations given where we've come from, so to speak.
Do you have to change anything about the way you underwrite in the future, given the changing expectations around inflation and interest rates at this point in time?
We're constantly looking at that. I think we've got a very robust risk appetite. We constantly look at that based on the environment that we're in. We obviously run all types of stress tests and scenarios. We do that not only for the existing book, but we do that for how we profile the new book and the clients that we want to onboard and acquire. And again, we feel very, very good about that. We feel good about our understanding of those demographics, the savings profiles of our clients, their spending habits, and so we feel good about kind of where we're going with
What
that.
about industry-wide? Even though you have kind of clamped down on risk in Citi's own portfolio, you mentioned that you've kind of gone upstream in terms of the people you do lend to, in terms of their FICO scores. What does it mean for those that are more exposed to the lower income consumer today, especially because corporation after corporation is starting to mention those stresses in their earnings reports and otherwise?
Yeah, look, I think there's still a fair amount of uncertainty as to how this macro environment evolves, right? So whether that be interest rates or how inflation kind of stabilizes, and does that stabilize kind of fast enough for us to see cuts in the near term, are all unknowns, but they're also factors that influence the pressure that consumers are likely to see. And so there's a fair amount of uncertainty there that people have to manage too. And again, we're thoughtful about it. I think we're managing to it very carefully.
Before I let you go as well, Mark, there was a report today in the journal, Citigroup is specific here, about concerns around your living will planning at Citigroup. How do you address those concerns?
Yeah, look, I saw the report. I obviously can't comment on what our regulators haven't really said yet, or rumors that are out there. What I can say is that, as I mentioned earlier, we've been making significant investments across the franchise, across regulatory reporting, across data, and across resolution and recovery planning. We're constantly looking at these processes. We're looking at ways to enhance them. We're looking at ways to improve our forecasting capability to ensure that our playbooks are robust in case of a situation like that. Importantly, we feel very good about our capital, our liquidity. We've got a very strong balance sheet. But these are areas we've been investing in because we know the areas that, frankly, the industry likely needs to further enhance, and we certainly want to enhance them for ourselves.
We're not far off also from expected new proposals around the Basel III endgame. Yes. Given there's been so much change in what's expected out of those final rules, what do you think will be the most different? And are there certain businesses that Citigroup may have to tone down on given the new rules that may not be as profitable?
Yeah, look, the proposal is evolving, as we know. We have no idea kind of how it evolves further and where we end up. I think that, I'm hopeful that we see some changes in how the proposal addresses operational risk. There were certainly some heavy weightings as it relates to equity exposures. There were certainly heavy weightings as it relates to credit. And hopefully those things continue to evolve in a way that is more thoughtful and more favorable to the industry, supporting the stability of the broader markets.
Do you think they will be more lax in those fronts by the end of it?
I hope so.
Mark, well, we thank you very much for your time. That is Mark Mason, the CFO of Citigroup, of course, speaking at the bank's Services Investor Day, speaking a little more about that crown jewel inside of Citigroup.
All right, Shonali, thank you so much. Again, Shonali Bostic, our Bloomberg News Global Finance correspondent with Citigroup, CFO Mark Mason there at Citi headquarters in downtown Manhattan. Just looking at shares of Citigroup, just up about 0.8% here. The stock's up about 18% here in 2024. But again, among the headlines, and I think what's interesting is saying, a fair amount of uncertainty when it comes to the macro context, if you will, talking about partnering with private credit firms, which has been, Tim, no doubt about it, a very big theme that we continue to hear at Bloomberg.
Yeah, Mason also saying that outside hires bring operating strength to the franchise and that they're keenly focused on improving the wealth business returns.
Okay, we're keenly focused also on shares of NVIDIA, man. They are outperforming in a big way, up about 3.8%, as we said, surpassing Microsoft to become the world's largest market cap company. So let's get a little bit of context on the stock that continues to just outperform on so many different metrics. Back with us is our chief markets correspondent, Abigail Doolittle, right here in our studio. It's the biggest.
It's the biggest. It's also up 175% year to date. We're not even 6 months in. I mean, it's incredible, the run that this stock has had. And of course, it has everything to do with AI. But in a lot of ways, they do deserve a big move higher just because the numbers they've beaten so handily. And in terms of the outlook, that continues to be brought higher and higher. So long as the music is going and doesn't stop, people are just, dancing. They're not looking for their seat. The minute that music stops, and at some point they're going to put up a quarter that's not like all these other quarters over the last 4 to 5 quarters, then there's going to be significant issues, I would say.
Why do you say that? Just because it's gone so high?
It is
so
absolutely
far.
Parabolic. If you pull up a chart of this stock,
it's
is
incredible.
Almost a 90-degree angle. Just from a physics standpoint, that cannot hold. There's one exception to that to my memory. Now, Tesla, it had a parabolic uptrend in 2014 into 2015. That did hold, and then it broke into a range. So maybe NVIDIA, it could, but more likely it does not. The other thing is, so you were just mentioning how I'm going to really try to talk to about this chart to our viewers and our listeners, because as you mentioned, NVIDIA has taken over Microsoft and Apple just slightly. But Apple and Microsoft for years traded above the $2 trillion mark before making it above $3 trillion mark. NVIDIA, as of last year, was at literally at this time last year was $500 billion. I mean, it's just gone.
Wait,
yes,
half a trillion.
It's now 3.3 It's now the world's most valuable company that quickly. So, I don't know if I'm smelling tulips. I don't think it's
the tech bubble because there's something real here. I don't think that it's the housing bubble because it's not leverage. Although maybe you could make it the case that it's leverage because there's so much liquidity in the system. Those dollars.
NYMEX diesel July futures settle at $2.52 a gallon. NYMEX gasoline July futures settle at $2.48 a gallon. NYMEX natural gas July futures settle at $2.90.
And I guess you're right. Like I'm thinking, all right, I just marked down August 23rd is their next earnings. Like, do we start to see a little bit of a slowdown in terms of some of those numbers, or at least their outlook? Like,
you know, it is incredible, Carol, because I've just pulled up that FA function, and so for yes, it's
NYMEX WTI crude July futures settle at $81.57 a barrel. That's up $1.24 or 1.54%.
$61 billion. These aren't small numbers. For the end of next year, another 100%, then 34%. But yes, as that starts to trickle down, and if it happens in a way where there's a surprise, like right now people are looking ahead to that, they'll deal with 2026 and 30% growth when we get there. But if that starts to trickle down for some macro reason or other reason ahead of time, that could be a real issue. It's also going to be an issue for the likes of Broadcom and AMD, anything related to AI.
Okay, well, I guess it is related to AI still because of the Apple event we saw last week. Apple Intelligence, so we can go ahead and call Apple an AI company now, perhaps. But I'm interested in not in your thoughts about the company and AI, but your thoughts
marketing slogan there?
The chart. I'm interested in her thoughts on the chart.
I know.
Because this is something we've talked about quite a bit over the last few weeks, Abigail.
Yes.
What are you seeing when you're charting Apple?
So this chart is really ridiculous. It just popped right out of a range. There were a lot of signals, including the momentum that suggested it would go back down into the range, the fundamentals, the single-digit growth, the valuation being somewhat stretched at that point. Now it's outrageously stretched. So Apple last week at one point up 14% in 2 days, the best 2 days at those highs since 2008. Since then, it's consolidated in a very tight range between about 215, well, right now 214, 213 something. Let's call it 210 to 220. Those buyers and sellers trying to figure out what's next. It's narrowing. I would say within a week to 2 weeks, we're going to have a big move out of this near-term area of congestion. Again, the signals suggest, and it's hitting another longer-term level of resistance, the signals suggest that it should be to the downside. The single-digit growth, the valuation right now is very, very stretched relative to Apple, relative to the peers. It's trading, I think, 30 or 40% above the valuation of the peers. But I will say there's a rumor, well, actually, I shouldn't say that. There is a theory, there's a narrative floating right now, which is, you know, yes, their AI is okay, but the iPhone, that people want to buy for that.
All right.
Good stuff. Again, NVIDIA right now up about 3.6%.
All right. That's Abigail Doolittle, Bloomberg Chief Markets Correspondent. Let's get a check on the latest world and national news. We got Amy Morris in the Bloomberg 99.1 Newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. President Biden granting legal protections to undocumented spouses of U.S. citizens living in this country. Now, to qualify for the Parole in Place program, an immigrant must have lived in the U.S. for 10 years and be married to a U.S. citizen. They would have 3 years to apply for a green card and receive a temporary work permit and be shielded from deportation in the meantime. Julie Kirshner is with the Federation for American Immigration Reform, and she calls this an abuse of power.
There are millions and millions of people who've applied for green cards legally, the right way. And this move is going to put this group of people, the group of people favored by the Biden administration, it's going to let them jump the line.
The move would affect upwards of 500,000 immigrants. We're expecting an announcement from the White House in about 15 minutes. The CDC is out with another warning that ADHD medications are in short supply, and that has some parents struggling to find a source. There are options online, of course, through telehealth, but Jeannie Swahart at the Texas Tech Health Science Center says some companies will now charge you extra.
Some of them will charge a monthly fee on top of the prescription itself.
She says watch for some red flags, like if you have to speak to a different doctor or nurse each time with each checkup, or if it's just a little too easy to get a prescription from a telehealth company. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
you actually offer a payout at 7 years to encourage people to explore if they don't find themselves in management position. I mean, what's the thinking?
Yeah.
I mean, like, what's that about?
We're not forcing everybody to be kicked out, right?
But you encourage people to explore.
Exactly. We encourage people to think about their, because sometimes it's easier, even for me, if I don't need to change everything, it's easier, right? Change is really tough thing for everybody. Should I do this job for next 5 years, 10 years, or should I try a new thing? If I had to think, that is a great opportunity to think about it. We need to think about what kind of talents I can have for the next 5 years, 10 years. What's the best way to contribute to the world?
Morning, this is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Archer's laid plenty of groundwork for future revenue, but for now, Mark Messler's most pressing challenge as CFO is conserving capital.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, and but we also have to be nimble around that as well because things change by the day.
Archer went public in 2021 in a reverse merger with a SPAC, Ken Moelis's Atlas Crest Investments. Through August 2023, the company raised over $1 billion from investors including Stellantis, Boeing, United Airlines, and Cathie Wood's ARK Investment Management.
Does that ARK investment open doors for you to bring in different kinds of institutional money going forward?
It does. I mean, I think there's a lot of credibility that comes in with an investor like ARK. As I think about, my top targeted list of investors over the next 2 to 3 years, an investment like that gives us some credibility and gives us a little bit of staying power as I go in and talk to other investors.
With the SPAC pipe now closed, Archer's facing a new phase of raising capital.
I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. I'm wanting to show them progress. I want to create credibility with them that we are marching towards our goals of commercialization.
DOJ or other authorities
could face bigger challenges next.
It was going to keep Green World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
The top names in business are on Bloomberg.
They're kind of predicting a soft landing, and you see that in both stock prices, which are kind of high, credit spreads, which are kind of low, markets, which are kind of wide open. That's all good. Doesn't tell you what the future is going to be. But I think there are a lot of inflationary forces in front of us that may keep it a little bit higher than people expect. My view is whatever the world is pricing in for a soft landing, I think it's probably half that. I think the chance of something going wrong is higher than people think.
Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got a rally in NVIDIA shares. That is helping push stocks toward another record. Traders are betting the potential for Fed rate cuts will keep fueling the industry that has driven market gains this year. Here's where we stand right now with the S&P up 7, gain there of 0.1%. Without little change now, up 8 points, up less than 0.1%. NASDAQ now in the red, falling 8 points, little changed as well, down less than down 0.1%. 10-year 4.22%, with a 2-year now yielding 4.70%. And we have got West Texas Intermediate crude oil up 1.3%. Spot gold right now higher by about 0.5%. NVIDIA shares powering higher as NVIDIA tops Microsoft and Apple to become the world's largest stock. Right now, we do have shares of NVIDIA advancing by 3.5%. Recapping S&P up 7, a gain of 0.1%. I'm Charlie Pelleton.
Brent crude futures settle at $85.33 a barrel, which is up $1.08 or 1.28%.
Suffering their worst ever quarter for ESG-focused products as the price and actually the pace of client redemptions intensified. Client withdrawals from U.S. funds targeting ESG, environmental, social, and governance goals, reaching $8.8 billion in the first 3 months of 2024. Tim, this is all according to fresh data from Morningstar.
Okay, the bottom line here is that for 11 of the past 12 quarters, clients have redeemed cash from actively managed funds, registering as, quote, promoting ESG goals. That's according to data from Morningstar.
Yeah, and it all really indicates kind of a recalibration underway in an investing forum that from the get-go is supposed to favor the active selection and deselection of assets. So let's see what our next guest has to say about it, because he's doing his own recalibration. Joining us now is Jason Britton. He's the founder and chief investment officer at the registered investment advisor Reflection Asset Management. They've got about $5.9 billion in assets under management. And Jason joining us right here in our studio. Welcome, welcome. You believe in ESG, but you are doing a rebrand. Why?
So I believe in the concept of what ESG is supposed to be. My challenge has been in its execution. So we're actually rebranding it to actually reflect what an investor is supposed to look at. ESG data historically has been from a business management decision tool perspective. Where are companies experiencing materiality risks to their business model? Nothing to do with how you'd select a security or why it should be in an investor's portfolio. So I'm actually pleased to see those outflows because I hope they're going to smarter places.
Does it need a label, though, or does the market take care of ESG on its own? So, does money go toward the places where decarbonization is happening without us calling it ESG?
So I think it does. I was just having a conversation with one of my colleagues, and the companies that are doing the quote-unquote right thing, thinking about their environmental footprint, thinking about bringing down supply chain miles and managing inputs, throughputs, and outputs, that's just good business, right? Classically trained economists, you want to do more with less. I do think it does need a moniker switch, and I do think it does need marketing because it's such a passion for young people. I mean, something like 76% of women, regardless of gender, and 80+% of millennials and Gen Z align their personal preferences with it on the spending side and want to see their assets managed that way.
Well, and maybe it got lost in impact investing. To me makes more sense. Like, is it having an impact badly or negatively? But we could get into a big debate. You have your own acronym, C. Talk us through it.
So C for us is stakeholder, environment, and ethos. So what we're looking at is we want to understand how a company is being managed and is it thoughtful to its various stakeholders. We're talking about its employees, we're talking about shareholders, we're talking about customers. When we look at its E for the environment, that's traditional, that's the same. You're looking at managing your footprint, you're looking at being in industries that are heavily polluting, where you want to be thoughtful around limited resources. And then finally, the ethos. We call that the culture fit, right? Culture is a huge issue. It's number one driver in terms of if you look at all the kids who are coming out of the top 10 business schools, they're really concerned about the perception and how that organization is viewed out in the world. And for us, that's essentially assigning a corporation of personality, right? Physician's desk reference. Is it a homicidal maniac or a friend you'd bring over for dinner?
Okay, let's talk individual companies here. Just top of mind for me is a company like Tesla, for example, because from the perspective of environment, I think many people would argue, wow, it's doing the right thing. It's getting a lot of people to think about EVs. It certainly moved the needle when it came to global EVs. But from a governance perspective, or maybe you would say from a stakeholder's perspective, not everyone agrees with the way that Elon Musk runs the company. And
so front month NYMEX crude settling at $81.57. That's the highest since April 30th.
How do you see Tesla fitting into your framework?
So in my particular framework, Tesla does a whole lot better than some of the other challenges and things that have been reported recently. I mean, when you have, and I think it's MSCI, but don't hold me to it, it might be S&P, have put out a report where ExxonMobil and Philip Morris both score better than Tesla on a lot of these criteria, and that's just nonsensical. I mean, I guess there are reasons for straightforward if you're looking at it depending on how you're weighting the S versus the E versus the G. And that's my other problem, back to your question. It's a black box. They don't tell you how those ratings and those methodologies work. Ours is straightforward. It's peer-to-peer by sector, force ranked by quartile. I mean, even the most average retail investor can understand you're the first quartile, you're the second quartile, or you're the bottom half. The rest of it is just sort of industry averages and lots of smoke and mirrors in marketing. I do think that there are some challenges as it relates to the labor issues around Tesla. There are
Fed Scoresby says external shocks have derailed soft landings in the past.
Think that when you have a stock incentive and you hit those targets, that was the board's decision, and that is in fact good governance.
But what about a CEO who says some very controversial things? And
or maybe CEO of several different companies and not have full attention on that one company.
Right, like how would you, in terms of culture fit?
Well, so those are two things there, right? So culture is how he's managing the company. Whether or not he's behaving appropriately and saying some pretty outlandish and ridiculous things through his X account are different issues. Thank goodness, being an idiot and having a very loud and very controversial opinion is not yet something that we've figured out how to put into financial models.
Okay, but should we?
I mean, I've always been a proponent of trying to be able to figure out how do you charge back for pollution? How do you really put the dollars and cents where they belong? That's the math.
Well, it's funny because, we have these conversations, Jason, that it's like, here's a company that's doing something really well, protecting the environment, doing the right thing, but maybe their financials aren't so good. Do you put that in your portfolio?
So I don't. Right, some other folks would. So when I want to be clear, when we talk about the C methodology and the technology business that we built, which is Reflect Values, which helps financial advisors do what we do, but with their clients on their desktop, we're focused on the traditional fundamentals. It's got to be a good stock anyway. And then we're using these additional C criteria to separate the wheat from the chaff. It's not instead of. You can't just be an ESG company. They call that philanthropy, like it's the Red Cross. If you just want things that are well-intentioned and doing great things in the world, write a check to that. If you're looking to have your investments managed in a way and look at data that's different than what other people might be looking at, seize your methodology.
There's one name that we're dying to ask you about.
NVIDIA.
Fed Scoresby says, I can't help but be optimistic if you look at the long view.
It's the most valuable company in the world right now.
Today, for the moment.
For the moment.
What was the last ticket?
There are some questions about ESG, or I don't want to call it ESG, SEE, right, Carol?
Like, Jason, you like this name, and you would put this in, it is in your portfolio.
It is in the portfolio, yes.
Do you think about the impact that the people are buying all these chips to run these data centers?
Israel's military says operational plans for an offensive in Lebanon were approved and validated.
Over that. You could also go into, we don't know exactly AI and its next iterations, current iterations, the impact it's going to have on deep fakes, misinformation, the impact negatively it could have on society. So how do you cross that with your metrics?
So there are three issues in play there. One is when you're looking at energy use and energy consumption, I'm looking at not just the AI names that sort of have already run up, the big five.
Yeah.
What's interesting to me is the second and third derivative. So it's those companies that are building these data centers that are more efficient, more energy efficient, and also more efficient from a footprint perspective, right? There's no reason that they need to be these million square feet behemoths that are pulling all this different power. There are lots of other ways to think about that. Look at companies like Caterpillar and other places where they're building these more efficient power distribution and power storage. I would also take to the second part of that, which is when you're looking at the ethics side of the AI business, consumer privacy and what happened with Jennifer Lawrence and some of the issues that around, OpenAI, those are real issues. I don't necessarily think they're AI specific issues.
Do you mean Scarlett Johansson?
Yeah, I beg your pardon, yes.
Which they've denied, we should know.
Correct.
Yeah.
They have denied.
Sam Altman has denied that.
Yes.
But to be continued. So NVIDIA, yes, no in your portfolio?
So yes, it is in the portfolio, but I would actually start to trim the position. I think it's fairly valued.
But you're trimming it because of that.
I'm trimming it because it's that.
Because of the run-up. Really interesting conversation. I feel like taps into a lot of what we're trying to figure out when it comes to whatever you call it, right? In terms of these interesting metrics about the impact or harm that different companies could do. Jason, thank you so much. Jason Britton, founder and chief investment officer at Reflection Asset Management.
It is Bloomberg Business Week. Taking a look at markets right now, we're seeing green across the screen except for the NASDAQ, just down fractionally on this Tuesday afternoon. You're listening and watching Bloomberg Business Week.
also an owner, I should have pointed out, of 3 major sports teams.
That's right.
Right? And you're the first woman, as I understand it, first woman to own 3 major, have stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the, I guess, the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
The top names in business are on Bloomberg.
You need to have an AI game plan. We used to say that every company needs to think about becoming a software company. Now we say that every company needs to become an intelligent software company.
Context changes everything. Now, your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Lazy Boy shares surging today. They are ripping higher now by 18.8%. LZB on the ticker. The furniture company reported fourth quarter adjusted EPS and sales. It did top estimates again. Worth repeating, Lazy Boy right now up by 18.8%. The home builder Lennar reported better than expected orders, but its forecast for deals in the current quarter missed analyst estimates. Lennar projected 20,500 to 21,000 new orders for the 3 months through August, less than the analyst consensus of 21,095. Lennar shares down now by 5% after the close of trading today. We will be hearing from KB Home. Best Buy is gearing up for one of the biggest product launches of the year, artificial intelligence computers. The retailer is training tens of thousands of its employees to sell and repair Microsoft's Copilot Plus PCs, the firm's new AI Windows laptops that went on sale today. Philip Morris International has stopped online sales of its popular nicotine pouch brand Zyn in the U.S. after receiving a subpoena in the District of Columbia relating to flavored products that are banned there. CEO Elon Musk says Tesla is working on offering stock-based compensation for top-performing employees. This according to a Reuters report. The announcement represents a reversal of sorts after Tesla paused merit-based equity awards last year as EV sales growth slowed and the company zeroed in on cost-cutting. Tesla shares today are trading lower. Right now, Tesla is down 1.5%. And those are our top company stories at this hour, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. Let's get a check on the latest world and national news. We got Amy Morris standing by in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. The House Ethics Committee has given an unusual public update into its long-running investigation of Florida Republican Representative Matt Gaetz, saying that its review now includes whether Gaetz engaged in sexual misconduct and illicit drug use, accepted improper gifts, and sought to obstruct government investigations. The committee also announced it was no longer reviewing for other allegations involving the congressman, including that he shared inappropriate images or videos with colleagues on the House floor. Gaetz has categorically denied all of the allegations before the committee. New York's top court has declined to hear Donald Trump's gag order appeal, leaving the restrictions in place following his felony conviction last month. The Court of Appeals today found the order does not raise substantial constitutional issues warranting its intervention. Now, it's just the latest legal setback for Donald Trump, but it could be short-lived. The trial judge is expected to rule soon on a defense request to lift that gag order. And to let you know, the 911 system across Massachusetts has gone down. Boston's mayor says they don't know why. They are working on it. She also suggests if there's an emergency, call the police directly or pull a firebox. Again, the 911 system across the entire state of Massachusetts is down. Global news 24 hours a day, whenever you want it. With Bloomberg News Now, I'm Amy Morris. Now back to Bloomberg Business Week with Carol Masser and Tim Stenovec.
All right, Amy Morris, that's a little terrifying, especially if you're in the state of Massachusetts. So we'll continue to monitor and bring you any updates on that. Having said that, you and I were just thinking about the conversation we just had with Jason Britton, and we were talking about the evolution of ESG. He's done a rethink when it comes to sustainability-focused investing. We talked about Elon a little bit, and we brought up that we got to remember two sides to kind of every coin, two sides to every investment thought. Some might call what he does controversial, antics, not really love it. Some really agree with what he's doing in a big way.
I mean, just look what happened last week at the annual shareholders meeting. Voters or shareholders overwhelmingly approving that compensation package from 2018, $56 billion, the one that has been at the center of legal controversy, struck down by a Delaware judge earlier this year. They came out and almost gave it the same approval percentage, the same percentage of shares of votes yes, than they did back in 2018.
I mean, different investors think differently, do it differently. Having said that, it kind of brings us to our one more thing that we just wanted to bring to you. This is a story that caught our attention. It has to do with Gen Z investors. It's a Bank of America survey that's come out. They're calling them the new rich. And basically what they're saying is that they are trading in some long-standing investing tactics for more crypto-heavy portfolios and a passion for collectibles. Sneakers, anyone?
Okay, so let's get to the numbers here. 94% roughly of Gen Z and millennial investors are interested in collecting items. We're talking watches, rare cars, sneakers. It was the highest rate for any generation surveyed, with only 57% of baby boomers expressing interest in collectibles.
Yeah, and it just shows the gap between Gen Z and millennial investors and their baby boomer counterparts, according to the survey. Nearly 3/4 of wealthy younger Americans saying stocks and bonds alone cannot deliver above average returns, and the future of wealth is increasingly running through some more alternative investments. Another thing we talk about, like private credit, like pick your thing, real estate. Apparently, the one thing, though, that like all ages agree upon, real estate.
So they go to the office and have the company match their sneaker investment? How does that work?
You get another pair of laces. Or if you have laces, right?
We'll match your investment in sneakers up to 8%.
That's your dividend.
Yeah.
Another pair of laces. All right, that's going to do it for this hour of Bloomberg Business Week. If you're watching on television, the close is coming your way in just a moment. In the next couple of hours, though, in Business Week, we've got some cool stuff coming your way.
We're talking about Boeing CEO who's facing a grilling on Capitol Hill. What you need to know from Bloomberg Intelligence. And also, Carol, it is the most read story on the terminal. Some groups in the South have had enough with migrants, and we're not talking about migrants from the southern border. We're going to explain.
They are done. Quick check on shares of NVIDIA, as we said, overtaking Microsoft and Apple. Biggest market cap, up almost 4%. This is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Live from Studio 2 at Bloomberg headquarters in New York, it is Tuesday. I'm Alex Steele. Romaine will be joining us later on in the hour. Let's kick you off right here to the closing bell in the U.S. Let's be real. It's really just NVIDIA's world, and we're just all living in it. And here you have it. We're on track for another record close for the S&P. That would make 31 this year if you are keeping count. The best performing sector, no doubt, is S&P Tech. And then you move lower, you got energy doing really well, and S&P Financial is doing really well, but none of them making a new record like Tech is. And I just want to point out, it is still a bond story here. You got yields down by about 6 basis points on the long end. There we have it. Let's get to some of the top stories right now within the markets. We are riding on a chip high. NVIDIA getting a new Wall Street price target of $200 and a $5 trillion market cap call, while Bank of America adds Micron to its best investment ideas. The rising chip tide lifts the S&P to yet another record. And Citi's crown jewel, the bank, pumping up its business services division at its investor day and forecasts a jump in investment banking fees for the second quarter. We're going to have more from our exclusive interview with Citigroup's Chief Financial Officer, Mark Mason. And it is the long duration play. Investors pile into that 20-year auction, the strongest bid to cover ratio since April, as retail sales disappoint and Fed officials preach patience on that rate cut. Let's circle back to the top story, and that's NVIDIA taking the throne as the world's most valuable company. Bloomberg's Bailey Lipschultz joins us now. It is NVIDIA's world, and we're living in it. Like, that's going to be what I say for the next hour and 10 minutes.
Alex, I feel like it's been that way for the last few months, though. NVIDIA has more than doubled, more than tripled year to date. It's astounding. Right now, $3.35 trillion market value. It's added $2.1 trillion in market value this year. That's more than Amazon. That's more than Meta. That's more than Berkshire Hathaway. Really crushing expectations, and it's all about AI and what the future could bring and how NVIDIA is going to take us there.
Walk us through the Rosenblatt Securities upgrade, because that was like the today catalyst.
That was the today catalyst. The interesting thing, new price target implied a 53% increase from the last close. Really the interesting thing, though, from that analyst is saying the real narrative lies in the software that they say complements all the hardware goodness. So we've talked at length about AI chips, about how that's really driving NVIDIA higher. Now it almost kind of reminds me of when you looked at Apple becoming a services company. Maybe now the software component going to be the next leg higher. But again, $5 trillion value almost in the next year.
Yeah, that's not nothing. And the Apple services thing, though, didn't work out so well. It's still, in essence, just a hardware company if you get right to it. We also had a partnership between NVIDIA and HPE. That was yet another catalyst later in the afternoon. What is this partnership?
Yeah, when you look at that, it really kind of just adds to the potential for NVIDIA. It's not kind of a complete shock, and we've seen NVIDIA really making a number of partnerships. That's really been the thing when you look at a company like an OpenAI and some of the catalysts that we've seen for that company where everyone wants to be a part of it. So it is interesting, and it did move shares higher, but it does really seem like the momentum fear is continuing to play out when you look at AI software, and that's what that HP partnership really kind of is built on, is AI software, and what that can drive, again, for a company that is up 3.5%, which is not anything small for the world's largest company.
No, and at one point you had Hewlett-Packard Enterprise hitting a 52-week high on that. And it's not just NVIDIA, like it is its world, and we are living in it, but Micron, for example, also having an incredible run, earnings coming next week, Bank of America listing it on one of its top calls in the U.S. market. Broadcom also continues to fire on all those cylinders as well.
A lot of excitement around chips and a lot of excitement around companies who are striking the balance on AI. When you look at how an NVIDIA, how an AMD, how a Micron are trading and compare that to Intel, which is really struggling to kind of adapt to this new AI world with their investment in Foundry, investors are buying the winners. It's going to be interesting to see how things continue to play out, especially as it relates to semis, the SOX index, and this AI trend. But it does seem like betting on the winners has been proving to be a terrific bet. And when you look at the expectations for NVIDIA to continue to grow, they've been crushing expectations for the last few years. And we're waiting for a pullback, but it doesn't seem to be happening.
No matter how many times we talk about overbought conditions. Hey, Bailey, thanks a lot. He's also getting married this week, so happy marriage. Have a great wedding. We'll see you in a couple weeks. Bailey Lipschultz of Bloomberg. All right, also joining us now is Chris Ailman, Chief Investment Officer over at CalSTRS. Hey, Chris, it is NVIDIA's world. We're just living in it, and we just keep saying that every time we seem to talk. Does that make you nervous, or does that make you feel good?
No, it always makes you nervous. Think of the fact that it's grown the size of Microsoft. That's crazy. And, you know, I have to say, Alex, it reminds me a lot of Intel in the 90s, where you had Intel millionaires. My neighbor had Intel, and, you know, suddenly he was going to retire rich. It is amazing, but the story can't grow forever. Right now, it's just pure optimism, and that's okay. It is the new future. But let's remember, there are 2,999 other stocks in the U.S. market, and those are the ones that matter. The economy is what matters. We don't eat NVIDIA for dinner. We don't fly on NVIDIA airplanes. So there are other things that matter a ton when you're a long-term investor and you own the USA.
I mean, we don't fly in NVIDIA airplanes yet. Let's just keep that in mind. So if we wind up coming off the boil here when it comes to, say, chips and tech, do you feel like that money just drains out of the market altogether, or is it a rotation play?
I think right now we're due for the summer doldrums, frankly. You know, tech can continue, but look at what we're seeing today. A record new high, but by a centimeter or a millimeter. I mean, just tiny fractions higher. I think that we'll still see that. I want this market to continue on for a little bit period of time. But look at the consumer. Boy, we're seeing signs of cracks in the average consumer, especially middle and low income. We're getting those warning signs months ago from Dollar General and Walmart, different stores like that. Now we're seeing numbers in terms of auto loans and just credit cards. Not the sign of a recession, but the sign the consumer is tapped out. And boy, consumer optimism, as we've seen, is close to turning to pessimism, and that's a concern. So I'm worried about this market having legs, but I think you and I love bonds, and I think people really need to pay attention to bonds. That auction was a good sign. People have an interest in our debt. That's important because we're going to be borrowing a lot more money, the USA, next year, whoever is president, and at all-time records. So those auctions are really something to watch.
Yeah, and we keep waiting for, investors to drop out. We get the tick data later on today, and that's sort of what overseas investors are doing here with U.S. investments. And it hasn't happened. Like, the demand is still there. Do you like duration? Do you like short duration? Do you like the belly? What's the best way to capitalize?
I'm a 30-year investor, Alex, so I like the curve. I'm going to extend out when the curve is inverted and almost flat as it is. A lot of people I've been talking to are using short-term CDs. Well, that's okay, but the rates will drop eventually. And so you do want to extend out a little bit in duration. I would make a duration bet. I don't think the long bond's coming down dramatically. I think the Fed's proven the U.S. economy can do okay with rates in the 4 to 5 range.
Well, to that point, yeah, go ahead, Chris. Sorry.
Yep. No, the pressure's off them to make this cut. They want to job own the market to be optimistic, but they don't have to make a cut right here.
Well, and then to that point, like we had, I think, 7 Fed officials. That blackout period is no longer all talking today, and the general message was not yet, not yet. Like, be patient. It might be even quarters, not months, until we get confident on inflation data. What kind of cycle do you think we're going to see? A shallow cutting cycle? What do you think?
Oh, very shallow. There should not be a reason for them to cut dramatically. If it is, then the economy's in bad shape and we're heading for a recession. They should be able to ease off a 1/4 point at a time very slowly. And so then for long-term investors back to fixed income, I think they should extend out into the curve. I think you should look at credit. Look at how well high yield has done in the last couple of years. It's remarkable. All of that points, Alex, to diversification. And when, every mutual fund now owns NVIDIA, almost always in the top 5. Some of the value in mutual funds are even creeping into NVIDIA because it's driving everything. That tells you need to diversify because it's not going to grow to the moon, and you need to be in bonds in your portfolio.
Where else within the market? You mentioned credit was also interesting. Where else provides that diversification?
Well, for a long-term institutional investor like us, we can be in real estate, and obviously there are very different segments in real estate. I've got the office background on. You don't want to be in office right now, but data centers, another tech play, are huge, but as well as the warehouses. So there are opportunities in just good old stable real estate. Remember, real estate pays a nice, steady operating income. Don't invest for capital gains. Invest for operating income. That's where most of your return comes as an institutional investor. And there's value in the private markets. Infrastructure, there's a lot of money in the CHIPS Act that they really want to see go to work, and especially in the IRA, that is going to be pushed out in the next 6 months for long-term projects. And those are long-term stable returns. If you're a retirement investor in your 401k, you're looking for long-term patient capital. And I hate to say it, but NVIDIA is not long-term patient. NVIDIA is a short-term flare rocket. It's fun to ride it, but what are you going to do next year and the year after and the year after that? So I think you need to diversify and have a balanced portfolio.
Hey, Chris, we love getting you on. It's a good perspective to have. Chris Ailman, CIO over at CalSTRS. Maybe there's more to this world than NVIDIA. All right, coming up, you got shares of e.l.f. Beauty getting a lift as Canaccord Genuity raising its price target on the shares. We're going to talk to the analyst behind that call. Plus, we're going to focus on the challenges facing the commercial real estate market. Our guest is David Steinbach. He's global CIO at the giant real estate investment manager Hines. And we'll get into what companies are doing to lure workers back into the office. Is it more vacation days? Yeah, probably not. All that and more coming up. This is The Close on Bloomberg.
covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. The UK decides. On July 4th, amid debates about tax policy, border security, foreign policy, and more, voters head to the polls to choose the next leader. Bloomberg has full coverage leading up to the election and will bring you the results after all the votes are tallied. Tune in for continuing coverage on Bloomberg Television. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Citi stock is up 1% during its investor day, having a pretty solid day today. Bloomberg's Shelley Bassett goes down in headquarters and had a chance to sit down with Citigroup CFO Mark Mason. Here's part of that conversation.
We want to be the preeminent bank for institutions with global needs, as well as a leader in global wealth and a winner in the U.S. market for our personal banking business. That's what we are today, all right? And a lot of what we talked about today, again, was really highlighting the crown jewel of our firm, the gateway to the rest of our offering for large institutional clients, but also for middle market clients, as well as for investors and asset managers in both that Treasury and Trade Solutions business and our security services business.
It's interesting because, to your point, even though security services has been a crown jewel, accounting for roughly half the profit recently of Citigroup's own entire businesses, it's been hard to explain to investors exactly what it is, what it does. Do you think Citigroup stock would be trading higher if people understood the business prospects for it?
I think the services businesses, which are comprised of that Treasury and Trade Solutions and the security services business, contribute a significant amount of value to this franchise. And I hope that after today, investors will realize exactly how much value that is and how much upside there is to that franchise, and we start to see it in the stock price.
Today you are seeing it in the stock price. If you think about some of the things that have been holding Citigroup behind, Mike Mayo of Wells Fargo, big proponent of Citigroup stock, but even he has been kind of critical here of the wealth business, calling the returns pitifully low. The question is, do you have a timeline for when investors can expect returns in that business, and how soon and how robust those returns can be?
You know, one of the things we talked about today is timeline. We talked about the medium term, 2026. We talked about top line growth of 4 to 5%. And we talked about the services businesses being a significant contributor to that, both in the top line and our services businesses, a 20% return on tangible common equity. In the wealth space, we brought in new management there. And we're keenly focused on how we grow the top line and how we improve margins and how we improve returns there. That's going to involve everything from right-sizing the cost structure to increasing the banker productivity to driving new net investment assets across that business. And we do believe that inside of this window between now and 2026, you'll start to see that value play through our financials.
Now, with Citigroup CFO Mark Mason, and Shelley joins us now from Citi headquarters. Hey, Shelley, in that interview, what were some of your bigger takeaways?
There are a few things. You have Mark Mason, in addition to that interview, here at Citigroup's headquarters, addressing more than 100 different investor groups here, trying to pitch that business, that services business, as its crown jewel. But on the other side, there's some questions also, and you heard them all addressed today. How soon can they get to wealth profitability in a faster pace, in a more robust measure here, as well as... Now, you have to remember, when it comes to Citigroup stock, when it comes to Citigroup stock, you're looking at a firm that has traded well below book value. There have been a few issues that have been an overhang. It has grown less fast than its rivals here. And it's not just a question for its own investors, but of course Citigroup's own employees, right, Alex? Because they brought in so many different people recently from Bank of America, from JP Morgan, to help turn around the ship at a faster pace. You're starting to see that pay off, but again, there's still work to be done here.
The work to be done, though, the question mark in the investment banking business, I mean, they said their fees are going to be likely up 50% for the second quarter. That's pretty solid. Can you put that in context for us?
Yeah, definitely, because you've seen this investment banking rebound. So parts of Citigroup's turnaround story here are contingent on the market too, particularly investment banking. And the interesting thing about investment banking is they brought a very senior leader over from JP Morgan. It was a big stunner to the market when it happened. He started just a number of weeks ago. So when I asked Mark Mason here what the mandate is from the top of the house to Citigroup's bankers, it's profitability. This is a story we've heard at some other banks before. It's not just the amount of dollars you bring in, it's the amount of dollars you bring in per banker. And so as the investment banking industry starts to rebound, it will be interesting to see how they put that pressure under those bankers with new leadership, with, by the way, the competition coming in certain businesses. We spoke about private credit, for example, Alex, and remember, when it comes to Citigroup, the question is friend, enemy, or partner. When it comes to the private equity industry, he said yes to all three, though it is interesting to hear Citigroup open to doing more partnerships in the private credit space, and very much a lot of curiosity on Wall Street on how that plays out, what that kind of partnership could look like.
Frenemy. Maybe that's a new word we're going to make up right here. Frenemy. All right, Chanel, thanks a lot. Bloomberg Chanel Bassick. And you can really see over the last couple months a Citi underperforming, say, JP Morgan and Bank of America after a super solid run over the last year. All right, coming up, Elf Beauty is sitting pretty today with shares are soaring. We're going to get a fresh look from the sell side about the growth.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
Good morning from our world headquarters in New York. I'm Manus Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
All right, time now for top calls. A look at some of the big movers on the back of analyst recommendations today. Let's start with Kroger. BMO Capital Markets upgrading the stock to outperform, calling its $25 billion merger with Albertson a, quote, win-win scenario no matter the outcome. Analyst Kelly Bania is bullish about the deal, saying no deal is more likely and could result in higher earnings per share accretion. Those shares jumping almost 2%. And NVIDIA, that's next in line. Here's the call. Rosenblatt Securities lifting its price target to $200 from $140 in the wake of last week's stock split. The analyst is urging investors to look at software as well as hardware, saying we anticipate this aspect will significantly increase in the next decade in terms of the overall sales mix. Plus, valuation could near $5 trillion in the coming year, those stocks surging over 3%. And let's end things here on e.l.f. Beauty. Canaccord Genuity raising its target to a street high of $250. Analyst Susan Anderson says the cosmetics company is poised for another year of earnings beats and forecast boosts. She's also positive on e.l.f.'s agreement to expand its products at Walmart. She keeps a buy rating on the stock, and shares are up a whopping 9%. Those are some of your top calls. And we're happy to have the analyst behind that last call with us. Susan Anderson is Managing Director and Senior Equity Analyst over at Canaccord Genuity. All right, Susan, walk us through more about what was behind this call to a street high price target.
Yeah, sure. So management guided the year to 20 to 22% growth. The street's at about 25%. Based on our math, we think it could be as much as another, 40% plus year for a couple reasons. So one, the track channel data, which is mass food drug, is running still about up 30%. That does not include the space gains that they're going to be getting this year in Walmart, which we think easily adds another low single digits on top of their guidance, if not more, because depending on how much that space is, it could be as much as 160 million more in sales annually. Then also they gained space in Ulta with their new Naturium brand. We're estimating Ulta is about a low teens percent addition to the year. That's also not in the track channel. On top of that, they've seen their DTC and international segments outperform. They grew over 100% last year. Internationally, they're also gaining a significant amount of space in Canada, the UK, and then also in Mexico and Sephora. So we think it could easily be 40% plus this year. And so we're forecasting another beat and raise year.
So, Susan, this comes on a day when retail sales disappointed and there was a lot of focus being put on the consumer being stretched and being very price sensitive. How exposed do you think e.l.f. is to that kind of a macro environment?
Yeah, so if anything, e.l.f. should benefit from that because it's a value play. Their products are even cheaper than other mass products such as, Maybelline or Revlon. So we don't think we've seen a ton of trading down yet. And we just recently did our semi-annual beauty survey where the consumer once again said they're going to mainly spend more on beauty or at least the same. And they also said that they're still trading up to prestige. So we see e.l.f. as more of a share gain. They're taking from other of the legacy mass players. In some cases, you're seeing them take from prestige when they roll out a product that's just as good, such as their lip oil, which, really competes with that Dior lip oil. So, we think that the consumer is still trading around the store more. So they're finding, things to buy at value price points that they like and they think it's worth it. And they're also still buying prestige where they think they can get better products. So, we think though, if the macro does start to squeeze the wallet more and we do see more trade down within beauty, e.l.f. is perfectly positioned to benefit there.
This is my whole theory, Susan, invest in your face. This is my thing. I feel like that's a thing for a very long time. So you're saying basically if we do have a value war within cosmetics and face care, that they're already the top in the value war?
Yeah, so e.l.f. is some of the cheapest products, even within the mass channel. So they're cheaper than L'Oreal, cheaper than Maybelline. And they've done that by having the supply chain where, they manufacture the majority in China. They have been moving out of China, but they have a whole team over there doing quality control. And they're able to manufacture prestige-like products at a value price point.
Can they grow margin at that, Susan?
Yeah, so we see them staying EBITDA margins in the low 20% range. Last year, they were almost 23%. So still very strong margins, but they're investing more in marketing this year. So they expect to invest 24 to 26% in sales and marketing. So because they're growing that marketing spend, we don't see margins expanding a whole lot more. Potentially they can get a few more, 10 to 20 basis points out of it. But we think most of the growth is going to come from the top line.
All right, Susan, really appreciate Tuesday. Thanks for jumping on with us. Susan Anderson over at Canaccord Genuity with that price target upgrade of e.l.f. Beauty. All right, coming up, we're going to focus on the challenges facing the commercial real estate market. You heard Chris Ailman talking about real estate in general, and there are pockets of strength. We're going to get the take with David Steinbach. He's global CIO at the real estate investment manager Hines. This is the close on Bloomberg. The S&P up 0.2%. This is Bloomberg.
The linear business is not going anywhere. The sports business is moving and is going to figure itself out between digital and linear. It's an unbelievably healthy market. They all have to be in it. They all want to be, every single one of the players want to be in it because of the audience. We have two assets in the sports business that don't have are year-long, don't have a season. I don't believe prices are going down. You're going to figure out the bifurcation of the rights and give things up, not give things up.
How long do you think it is before Netflix actually jumps into sports?
You know, they're in sports right now, but they just do the shoulder programming.
Yeah.
I think their point of view, and you'll ask Ted tomorrow, is we build up we don't want to be in the bidding of rights and then not have any long tail. So I'm not sure. They did bid on Formula One, but ESPN got it. So I think that was a smaller package, meaning smaller economics. So we'll see.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Invest, don't trade. Invest for the long term, i.e. when markets are challenged, don't get spooked. Don't get involved in investment hobbies. Investment hobbies are generally not profitable.
Well, in the US, it's getting better the most. We have seen an uptick across all asset classes in the first quarter. Even office leasing was year over year 14% up in the US, 12% in Asia, and only 8% in Europe. So you see the difference. And we also see that the overall interest in buying commercial real estate is growing.
That was the JLL CEO talking commercial real estate on the program yesterday. And if by magic Romaine Bostick appears right here next to me, you show up like half an hour.
It's like Beetlejuice. You say my name 3 times and I just bang in. Sorry to bring you down, Alex. How you been? What you been talking about for the last 30 minutes?
Well, I don't know if you've heard this before, but it's NVIDIA's world, and we're just living in it.
I know.
So that is the thing.
Are they still the most valuable company?
It is still, and we're at 31 record highs. I mean, basically, just rewind to yesterday, it's the same story.
So yesterday is the same story, but it's kind of interesting you bring up NVIDIA. I was actually just rushing over. I was at an event that was sponsored by PGIM, of course, a unit of Prudential, and they were really kind of talking about the next sort of big disruptive events, and needless to say, AI came up time and time and time again, but real estate came up as well. And I actually talked to their head of real estate over at PGIM Real Estate, the head of equity business at the real estate business, and they said it's more than just AI for them. You know, it's like the data centers, but it's healthcare as well, and to a certain extent, housing, particularly multifamily and affordable housing.
It's just that office real estate, right? Like that's still the warning spot.
Nobody seemed to want to talk about office real estate for some reason. I don't know why. I don't know why, but you know. But there's opportunities elsewhere, Alex.
Yeah, let's find them.
Yeah, we got to find them here. Well, let's continue that conversation and talk to somebody who knows a thing or two about finding real estate opportunities. David Steinbach joining us right now. He's global CIO over at Hines, $100 billion global real estate investment manager. You've been around for quite a long time here, 65, not you specifically.
Not me.
Yeah, you don't look a day over 50. But let's talk about your business, though, because in all seriousness, when we talk about sort of the inflection points in real estate, the pain in the commercial real estate space, or at least in the office real estate space, when we talk to folks, including JLL, Christian Olbrich yesterday, there's still a lot of optimism out there, still a lot of opportunity. Where is your money going right now, or where do you want it to go?
Yeah, I mean, certainly this has been 2 years in the making in terms of a reset. I think it's really important to remember that this has been going on for a while. 500 basis points of interest rates all over the world going up is going to be a disruptive force in the industry. So it's taken a minute for the industry to get its head around that in terms of how to allocate capital. Without question, right now, you know.
But you've had a year to do that now. I mean, rates have been at 5% now, and if you believe all these Fed speakers are not going down anytime soon.
Yeah. Look, I mean, we have been dollar cost averaging into the market the last 12 months. This year, though, our deal volume this quarter is about 88% more than it was a year ago. So there's a significant uptick. Some of that is a low basis we were coming from last year. So we are deploying capital. It's mostly in residential and retail right now around the world. We are seeing opportunities in retail.
Malls?
Yeah. Not malls, but more necessity based, right? So, you know, it's been 15 years since retail has been under a lot of scrutiny all over the world, and a lot of investors have shied away, and not a lot of product was built in that time. And so the winners and losers have been mostly sorted, and we see some opportunity embedded in that now. So you can more clearly see what's going to win.
Is that like grocery stores? Like what kind of retail are we talking about?
Yeah, I mean, certainly anything around grocery store, but also we're integrating retail into our existing mixed-use projects we have. It creates footfall. It creates energy around centers that we want to activate with multifamily as well as office, bringing all that stuff together. Retail's been a useful tool in that.
Where else? So okay, you have the retail sector, and then what about the data centers / logistics? And I say slash because I feel like logistics had its moment, and it came down, and then data centers having a moment.
It seems like it's in the beginning of a hype cycle. You know, we've been active in data centers for a very long time around the world, and we've worked with some of the largest groups around the world to do that. It is interesting when you think about this wave that's happening in data centers, and what concerns me is more the energy crisis that seems to be going to be a part of this conversation. That's not yet. And I think that the energy use is something that is parabolic in many cases, and it will impact where data centers can ultimately locate, that and data privacy laws. And so those two constraints, I think, are going to come down into the market and will need to be priced in. And so that will be a governor, if you will, in terms of how much we can build, because you know we're leaving an era where we used to build things and you could plug it in pretty easily. And I think that era is coming to an end. A lot of municipalities are looking much harder at the planning expected and the power needs that these data centers have.
You refer to it as a crisis. Is it really that critical?
It's not. Well, this is one I think will come. It's not here today for sure, but I think it's one to watch because infrastructure will need to get built up pretty quickly, and it's not a muscle that a lot of localities have.
Well, how do you sort of pick and choose where you think those safe places might be, the localities that maybe have the ability or at least the willingness to do that?
Right. Well, certainly, looking globally at the data center opportunity, there's a lot of ways to look at it. I think, again, looking at where energy is available and the cost of that energy and the how sure the supply is of that energy. And so, in Europe, for example, places like Poland are increasingly interesting to a lot. Places like Texas as well. But again, I think a lot of this story is yet to be told as the needs get unfolded by the hyperscalers.
Where do you not like? Like, what is like verboten right now in your office.
Yeah, I mean, look, I mean, the conversation of office comes up a lot in that, right? In terms of, like, is that something that you don't like? I would say that we are very selective in what office that we are doing. I do think that opportunity is going to really emerge this year. I think we've yet to have seen it. It's certainly been, you know, the four-letter word in most investors' offices in terms of let's go buy more office. I think that sentiment is going to change this year. I think that we're going to see some key trophy trades in some of the gateway cities. And I think once that happens, the market will have a lot more clarity how to price the sector.
Right.
We have not seen those trophies truly trade yet, but that's coming. I think it'll happen this year.
But why will those trophies, why would that provide better price transparency? I would assume that those trophy properties, the prices on those would be maybe a little bit distorted from the reality of the rest of the market, or some of it has to do with what's happening in the fundamentals in the sector, right? So what I'm seeing is this real separation between what capital markets see and what's actually happening on the ground in some office projects. The best office projects are well leased. The rents are good. They're performing quite well. And so when those trade in the market, I think the cap rates is how we normally look at the value and relative to the cash flow stream. I think that will look a lot better than people are expecting because the stability of those cash flows is very real. You're planning, but you're looking at those cap rates much further out. I mean, we talk about interest rates. I mean, a lot of real estate investors, at least on the commercial side, will tell you that the Fed doesn't matter as much as maybe the media makes it out to be, at least for them. So when you are sort of looking at a project where you have to kind of forecast 10, 20, maybe even 30 years out, what's going to look like here, what sort of brings you to that determination, if not interest rates?
Right. Yeah, certainly. Look, any kind of time you're valuing, especially real estate, you look at multiple levers, right? You look at the basis, you look at the cap rate. What we focus most on is what value we can create at the real estate itself and how we can drive the income growth of that real estate. And we know if we get in a good basis and we can create real income growth, that will be valued on the other end, regardless of where interest rates are. Then how you finance it is the wrapper around that, and the financing strategy is going to change, depends on where interest rates are.
So when you say the trophy trades, like can you give me an example of that and like what the pricing might look for that will kind of clear the market?
Yeah, look, I think just having the clarity is the point.
Just getting it done.
Just getting a couple deals done where the market can see, okay, this was a stabilized project. This was not a distressed bank deal. This is a project that's difficult to get your hands on, and somebody bought it. And I think once they see how that prices, it's going to be clarifying. And I do think, look, cap rates will be above what they were, but I think they're going to be less than where people potentially are expecting when they read the headlines of what's happening with lenders and I would call the more commoditized office.
All right, David, great discussion. Always great insights. David Steinbach there. He's a global CIO over at the real estate giant Hines. And, you know, Alex, it gets to the point, too. He talks about the idea that we haven't had a lot of transactions. We've heard this from a lot of folks in the real estate. So you don't have that same type of price discovery as you might have had in a normal cycle. So maybe if some of these big properties come online and you get to see what they're real, or at least what the market thinks they're worth, then maybe that does aid the rest of the market.
It's like, who's going to want to be first?
Nobody's supposed to be first.
I know, but like someone's going to have to be first. Like who's going to wind up pulling that trigger at some point?
Yeah, and I mean, and maybe that helps accelerate things. Maybe somebody has to be that sacrificial lamb and just come out. And I don't know. Can we pick and choose?
No, but I don't think they want to either. So there's that as well.
All right. Well, we're looking at I guess a middling day here in the markets here. Markets right now, at least on the broad level, relatively unchanged, but some big individual movers out there as well. Shares of Chegg. I saw this in after hours yesterday. They came out with the big news here about cutting jobs, and you're seeing actually a big boost here in the shares on the day, up about 8%. The biggest intraday rise going back to November. It's our stock of the hour. We're going to have a full breakdown up next on The Close on Bloomberg.
Here's Bloomberg.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at noon Eastern Time. Bloomberg Equality, celebrating inclusion this Pride Month.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, The China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, The China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
All right, it's time now for our stock of the hour. A closer look at Chegg, the online education platform, out with a new plan to cut costs and develop new offerings using AI tools, a big restructuring of the company. Shares popping about 7% here on the day. Abigail Doolittle joining us for more. We should point out shares are up as much as 25% at one point here. This was kind of, I was looking through the press release, this is kind of a sprawling reorganization. There's job cuts. They're also talking about leaning into AI and making sort of one single distribution platform here. Where's the optimism coming from here? What's happening?
So I think the optimism is coming from the fact that the stock basically, as of yesterday, was at a record low. I mean, this had been a greater than $100 stock. Now it's a penny stock, so you can't go much further down than where they had to go. They had been, so they needed to do...
You can go to zero.
You could go to zero. You're right. And I've seen some, I've actually, for better or worse, I've traded some stocks that were low like that. But in any case, with this stock, so you had this big decline. You had a short interest of 19%. You did, so you have that big pop higher. Now the fact that we're off of the highs. And then you put in this AI mention. If we go back to 2021, that is when the stock was a greater than $100 stock. They blamed the pandemic, they blamed the economy, and they basically cut the outlook. And in that 1 year alone, it lost 80%, 75%. So that was the big problem, and they've kind of been skirting along the bottom.
And then after 2022 and the introduction of ChatGPT, there was all this talk about how AI would sort of cut into some of these online education companies. So it's kind of interesting to think now that they're saying basically we're going to have our own sort of AI.
Well, and some analysts are saying that AI has been a part of a piece of the problem for them. They had been pretty profitable, then they've been unprofitable for a couple of years. Next year, they're calculating to become profitable again. But the AI on their platform it certainly was a piece of the pop.
Have you ever used Chegg or anything like it?
No, I have not.
Because you used to be able to just ask it questions, and I guess now that's kind of what, in theory, ChatGPT did.
But then, I mean, if you think about it, like ChatGPT and AI can't yet answer who won the 2020 election because of all the noise surrounding it.
Oh, that's interesting.
So it's like, I don't know how that then dovetails with, education. Like, that's a little worrisome. If, like, AI can't do that, like, how do you put that then into the education
No, that's
model?
a good point. That's a limit on AI. I mean, it can only put out what's put in, and if there's confusion around it, then there's going to be confusion put out.
Do analysts like this stock? They just don't like it right now?
So analysts are saying it's a show me. They're saying that, okay, yes, they have this plan for profitability, that they're going to be putting up $1 at the end of this year and $1 at the end of next year, but the stability in revenue needs to return. If we take a look at the valuation on this stock, it is trading at a massive, an 80% discount to the comp group. I mean, they really just have a big turnaround.
Analysts, there's 15 analysts covering this country, not a single buy I can't remember the last time I've seen that.
It's a show me. I mean, it's a show me stock.
Yeah, 10 holds, 5
That's
sells.
a show me and then some.
I mean, right now, it's still catching a falling knife.
All right, Abigail, thanks a lot. We really appreciate it. Bloomberg's Abigail Doolittle joining us
Who's the first
there.
analyst that just finally says, you know, I'm going to go buy? Is that going to be the same person that sells a trophy profiting first?
I don't know. What's it trading at right now?
$2.75.
I don't know.
It's a bargain.
We'll see. All right, taking a look at the market here, you got the S&P is up by 0.2%. The NASDAQ now flat on the day. The Dow Jones up by 0.1%. We are counting it down to the close. This is Bloomberg.
Politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern, only on Bloomberg TV and radio. Context changes everything.
We're operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep winning World Cup. This is a 3
as the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg.
So the market on closing balance now S&P 500, 500 million to the sell side. NASDAQ 100, 60 million to the sell side. The Dow 30 was 70 million to the sell side. The Mag 7 stocks, 7 million to the sell side.
Tech can
So that's to the buy side on the Mag 7s, 7 million to the buy side.
New high, but by a centimeter or a millimeter. I mean, just tiny fractions higher. I think that we'll still see that. I want this market to continue on for a little bit period of time. But look at the consumer. Boy, we're seeing signs of cracks.
Christopher Ailman, CIO over at CalSTRS, is helping us kick us off to the close earlier today. The gains may be minuscule here, but tech is doing a lot more than that here. That is your biggest gainer here on a sector basis, and quite frankly, that's the lifeline for this market for most of the year.
Yeah, I'm just looking at 31 now record highs for the S&P, the SOX, so the semi index also at a record high. No surprise there. The NASDAQ 100 isn't at a record high, but it's pretty much flat on the day. But Nvidia a record high. I mean, how many times can I keep saying it?
You can say it again because I have a feeling. Yeah, I feel we're going to be talking about this for weeks, if not months to come. Jess Menton, our deputy team leader and senior equities reporter, right here at Bloomberg, joining us on set here as we count you down to the close. And Jess, are we going to be talking about this? Are we going to repeat what Alex said again and again for the rest of the year?
We probably are. And I actually was talking to Jill Wolf, who's over on Gina Martin Adams' team at Bloomberg Intelligence, because we've talked so much time and time again about breadth this year to the point of exhaustion, right? But I wanted to see, because earlier this year we had better signs of breadth, but if you look over the last 3 months, you've actually had close to about 50% of stocks that have notched gains so far in that span. But actually, if you looked over the top 10 biggest stocks by market cap in the S&P 500, the past 3 months, they've posted a gain of about 17%. If you look at the rest of the S&P 500, it's down about 1.3% in that span. So a little bit of an about face there from what we had seen earlier this year, but you are beginning to see things stretched pretty much. And then also if you look at positioning data from Deutsche Bank, actually through the end of last week, it is in the percentile that is around the highest since November of 2021. That is, of course, was when the NASDAQ 100 did peak, but really it's just showing you a lot of people were piling in on this rally, especially the AI-type theme so far this year, but positioning is getting a bit stretched where we are at this point.
And Bank of America Fund Manager survey showing something very similar as well. And then we have the ETF rebalancing, that tech ETF on Friday, so you can see
triple witching, of course, on Friday as well. So that could add a little bit of burst of volatility, but sometimes it can be a dud too, right?
It's true. All right, Jess, hey, we really appreciate it. Thanks so much for setting us up, Jess Menton, joining us from Bloomberg. Thanks for the hustle. All right, joining us here on set also is Shelby McFadden, senior analyst at Motley Fool Asset Management. All right, Shelby, do you think that this is tech more room to run, keep buying here, or is this going to be sort of, all right, we're going to take a little bit of a pause. Everyone just relax.
Yeah, it's interesting. If we split that up and we say, is there more room to run? As it seems there always has been. Every time we thought there's no more room left, there seems to be this sort of premium that doesn't have any sort of fundamental basis in many cases that continues to leave runway. But the second question of do we buy here? At these certain valuations at Motley Fool Asset Management, we're not necessarily buying with a lot of this froth in the tech space. We've seen a lot of investors and clients asking in about the major chip manufacturers and designers, and we're sort of saying at this valuation, it's not necessarily the best move for us to consider stepping in.
So if tech takes a break, does the whole S&P take a break, or does that money go somewhere else within the S&P?
I think it could go somewhere else within the S&P, because part of the reason we're seeing that sort of lack of breadth is because the companies in the S&P that are a bit more interest rate sensitive got intensely punished. And then when we also look outside and we look at small and mid cap, we know that those are very, very sensitive to interest rates. And so some of that money goes ahead and leaves the mega caps, the absolute top 5, 7, 10, and then can get filtered throughout the rest that are maybe more of dividend producers and less high growth.
I mean, you guys over at Motley Fool, I mean, you're the ultimate kind of bottom-up valuation. So when you look at where interest rates are, and if you assume that we're going to stay basically above 5% on a Fed funds rate for the foreseeable future here, let's say, for example, we do get a drop, I don't know, 50 basis points. Does that materially change any kind of discounted cash flow valuation, at least in a meaningful way?
Sure. Not necessarily in a meaningful way, because in many ways, it's something that's not likely to change the operational strategy for the companies.
Right.
And so we've also considered those different things when we are going out and doing our modeling. So we've already sort of considered what stocks we want to look out for in the event of an interest rate change.
What stocks are those? Can you name some?
It'll definitely be those that are a little bit more rich, that we know are likely to take a bit of a hit, and also those that have been a bit punished because of that. So in smalls, we would want to look at some of our higher end sort of bicycle producers. We have some different digital advertising platforms that we're interested in that if we really are starting to think that that rate cut is coming, it would be an opportunity to go ahead and add because they have been over punished.
Does it matter how many rate cuts happen? Like 6 versus 3, like does that matter for your SMIG call?
It would matter in terms of how we're going ahead and modeling out that cash flow and over what period of time. So if we're getting 6 inside of a calendar year, then that changes things in terms of how much attention we need to pay to those individual names, but it won't change our broader allocation strategy.
What about the consumer? We got retail sales today. That was rough. How do you play the consumer? We had the Elf Beauty analyst on who just upgraded to a street high. How do you deal with that?
I think one of the smartest plays for consumer right now is to play the premium end. So we've seen that in payments infrastructure. We've seen that in retail. So on the retail side, if we think about, say, Costco, and we compare them to different wholesalers, one of the things they have to their advantage is that executive membership is the premium end of wholesale. And they're able to hold on to upper middle class and upper class households that continue to see the value and are able to store that mass amount of product and purchase that large amount of product. So the revenues there tend to be a little bit sticky. If you look at the more premium end of credit, we've seen the same thing play out when we look across the different banks, where the large amount of shakeout has already happened at the lower end, and the premiumized customer has gone ahead and just laid down what is a very inelastic nature, if you will. So I would say premium end of consumer is where we're finding a bit more luck.
We only have about a minute left, but I saw amongst some of the stock picks you guys over at Motley Fool Asset Management was Netflix. And I am curious about the valuation on that, given how far it's come, and I guess a lot of questions about its growth, given that it's become basically the 800-pound gorilla in the media space.
Yeah, absolutely. And I mean, we have, as a team, looked at Netflix and seen that at times it's really rich, but we're also really excited about how far they've come as a company. And when we think about the great shakeout of streaming services, they did really well. They were able to hold on during the various strikes that cost a lot of streamers their business, and they've continued to generate fantastic cash flow. So they're turning into a mature business and then getting to tap into digital advertising after conquering streaming, which we think is a really great opportunity.
How many of these streaming services do you have at home? Because last time I checked, we have something like 33 of them.
I mean,
you have 33?
At this point,
at 4 p.m. Eastern Time, we get US overall net capital flows, previous 102.1 billion, and US tick long-term transactions, prior 100.5 billion.
Great conversation, Shelby. Great to have you here. Thanks for rushing over. Shelby McFadden, Senior Analyst over at Motley Fool Asset Management. I might have exaggerated a little bit about the number of streaming services I have, but we have a lot.
I'm counting.
Yeah.
You count.
Yeah.
We'll circle back on Thursday.
On Thursday, and then can we share passwords? I mean, just asking for a friend.
No, I'm not sharing passwords. No. Are you crazy?
All right, forget Alex Steele. We are moving closer to the closing bell. Stick with us. Our full coverage starting right now, right here on Bloomberg.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here with Alex Steele, here to help you take you through the closing bell. It's a global simulcast. I'm going to get this right one day. Joined right now by Scarlett Fu in the TV studio. Carol Masser giggling there in the radio booth. Tim Stenovic there.
You just got to get it right before we change the name again.
Yeah, exactly.
Okay.
Yeah. We just got it straight.
Yeah, there you go, Carol Masser. Why don't you pick it up? Did you prepare?
Yes. Interesting day. What, we're going to get another record?
Okay. I don't know where this is going.
Wait, I just really want to know the password things. Can I get your passwords?
No, I'm not sharing. I follow the rules. I don't do things outside the box.
All right.
It all depends on what services everyone subscribes to.
Yeah.
All I know is you give out too many I've been blocked because I can't get in because I think.
Oh,
yeah,
I'm one of those people.
So they're starting to figure it out. That's the issue.
They're on to you, Carol.
Yeah.
Hey, did you guys hear about NVIDIA?
What?
Did you hear about this today?
It is NVIDIA's world, man. We're just living in it.
It is.
Happening.
It's pretty wild to see. 31 record days for the S&P 500. Another new record for NVIDIA today. It's the largest company by market cap in the world now, surpassing Microsoft, surpassing Apple. People are still buying it.
Yeah.
It's a story that people love. But you know what's another story that people once loved once upon a time?
10 seconds.
EVs. And Fisker filed for bankruptcy. So, you know, the next big thing, this is a good reminder that the next big thing isn't something that can hold on to that status forever.
Wait, it doesn't always go up?
66.2 billion, 66.2 billion. Tick long-term transactions, 123.1 billion, 123.1 billion.
Space here, other builds still continuing on, and of course NVIDIA, the winner on the day here, the biggest point gainer in the point contributor to the S&P's moves to the upside on the day. 14 points higher than where it was yesterday, about a 0.2% increase as we wait for these numbers to settle. The Dow Jones Industrial Average up by about 57 points, or 0.1%. And the NASDAQ, we're just going to kind of call it unchanged here on the day. It's up about 5 points. That's only good for about a fraction of 0.1% there. Meanwhile, the Russell 2000 trying to get in on the action again on the day of roughly 0.2%.
I just kind of toggling back and forth between Microsoft and NVIDIA market cap. And NVIDIA's just going to, squeeze past them to end the day to be the world's largest market cap. Having said that, S&P 500, Scarlett, most names higher. 310 to the upside, 188 losing some ground today.
Yeah, and you can certainly see that reflected in the IMAP. We'll take a look at the sectors and the performances that we have there. On the downside, let's just focus on the few red slices. Communication services down by 0.8%. Consumer discretionary, that's being dragged lower by Tesla. So going back to that EV story, not necessarily playing out right now. Materials off by 0.1%. On the flip side, financials, tech, and industrials all gaining at least 0.5%.
What happened to Ball Corp? Down 6% here on the day. Cans, man.
Wait for the decliners. Maybe it'll come
I didn't put Ball Corp in there.
Did I step on Tim's toes?
I didn't put Ball
Apparently
Corp
not.
in there. I'm sorry. Such a disappointment.
All right, it's never too late. I'm going to get to the gainers right now. NVIDIA, of course. Now the biggest. I know, so I'm going to try and go quick. Biggest market cap in the world, finishing 3.3 trillion. Can you guys keep them quiet?
No.
NVIDIA up about 3.5%. Rosenblatt Securities raising its price target on the company to a street high of $200 a share from $140. This is even, Bloomberg reporting insiders selling some shares worth more than $700 million, as though Tim reminded us that's just a drop in the bucket. But NVIDIA up about 3.5% in today's session. Micron Technology up way off its highs, but 3.8% to the upside nonetheless. B of A adding it to its US One list, a collection of the bank's best investment ideas. Wedbush analyst also, Matt Bryson, increasing his price target to $170 from $130 ahead of the company's results next week. Stock closing at $153 and change. Lazy Boy, outperformer, finishing up about 19% higher in today's session. Company coming out with fourth quarter adjusted earnings per share and sales that topped estimates, so it's up the most in I think about 7 years, so all the way back to late June of 2017. And Silk Road, a little deal action, up 24%. It's a $1 billion medical equipment company, rallying after Boston Scientific agreed to buy the company for $27.50 a share. So there you have it. I'm done.
Okay, I got the decliners. I do want to look at how shares of Boeing ended the day.
That was faster than I thought, Carol.
I know. A little pressure there, buddy.
Yeah. Speaking of pressure, that's what CEO Dave Calhoun faced as he testified before senators over the last 2 hours. He got searing criticism from these lawmakers who accused him of failing to overcome the company's shortcomings by putting profit ahead of safety. Shares finishing it down by 1.91%. Ahead of the testimony today, Boeing quality inspector alleged that the company mishandled and lost track of hundreds of faulty parts. And then there's what's happening in space right now, totally separate from everything on Capitol Hill. Boeing and NASA pushing back by 4 days the return home of 2 astronauts from the ISS. It's the latest disruption for a program that has been beset by delays. Boeing down 33% so far this year. Also checking in on shares of Apple after the run that we saw last week and after NVIDIA surpassed it to become the most valuable company, along with Microsoft surpassing that one too. But Apple shares fell after the company was cut to neutral from accumulate by Philips Securities analyst Helena Wang, citing a rally in the company stock following the recent reveal of that new AI framework at WWDC. And NextEra Energy shares falling today. This after the company said that it intends to sell $2 billion of equity units. Shares ended up falling today by about 2.6%. It was among the worst performers on a percentage basis in the S&P 500. And an honorable mention goes to Philip Morris International for a decliner today.
Wow.
The shares fell this after the company halted online sales of Zyn. These are the nicotine pouches in the U.S. in response to a District of Columbia subpoena related to flavored products that are banned there. Shares ended up falling only about by 0.8%. They were down over 2% a little earlier in the session.
Flavored tobacco products. I just can't. I could never do menthols. All right, guys, let's go to the
Is there tobacco in them? I
have no idea.
I think it's just nicotine. I don't know.
Did you ever smoking over 20 years ago?
Did you ever smoke?
I did. Yeah.
Wow.
Yeah. I quit over 20 years ago. So yay me. My lungs have regenerated. All right, let's get to the bond market here. We have a rally pretty much much all across the board, across the curve. It started once you had retail sales that disappointed and continued on the long end once you got that super solid 20-year auction. That moment where all of a sudden investors shun treasuries because of too much supply has not yet materialized with that solid takedown of that 20-year scar.
All right, we have some breaking news. Golden Goose, the luxury sneaker maker, was supposed to go public this week, but according to Bloomberg reporting, which cites people familiar with the matter, that company has decided to postpone its planned IPO. They've decided to shelve the listing because luxury stocks have not done too well. There's also a lot of turmoil in European stock markets because of political uncertainty.
So this is going to list in Europe. So this is more about the European market story, not being like, I guess, accommodative enough for the
Perhaps
market?
Conditions are not ripe, are not right either. So maybe that might be part of it. But I mean, the retail sales report that we got today also certainly doesn't help either.
How many pairs of these do you own, Scarlett?
No, I only own Birkenstocks. I have like 20 of those.
I can verify this.
Yeah, I don't spend up to $1,000 for sneakers.
I was actually interested. I went. They had a store downtown, and I went into them, but all the shoes were dirty. I didn't know what to do.
Do you have 20 pairs of Birkenstocks?
Yeah, it's kind of embarrassing.
20 pairs? Wait, is that for real?
Yeah, almost. I don't throw them out because you can get the soles resold.
Because they don't die.
But the point is, you get the soles resold and you keep the same shoe. You don't buy 20 pairs of them.
Okay, this is what's going to happen.
It takes me a while to get that done.
I'm going to count my over the top. He's going to count his over the top. Scar, you're going to cut your Birkenstocks.
Okay.
We're going to reconfigure this, guys, on Thursday.
And
we're
see
going
who
to get
can
the data.
scare who.
Yes.
Okay. All right. We're going to get
Speaking of shoes.
Right.
Speaking of
Maybe
shoes.
you're investing in Birkenstocks.
segue.
Well, we have an
Thanks,
interesting
Tim.
story
Yeah, you're welcome.
about Gen Z
You gotta keep Carol
investors.
on track.
Speaking. Oh, yeah, right. All right. Gen Z investors apparently shunning the 60-40 portfolio, but they're investing in kind of alt investments. Things like sneakers and classic cars. Apparently, there's kind of been a shift in what they are investing over maybe an older investor.
Okay, we got the survey from Bank of America. They surveyed wealthy Americans. They found that 94% of Gen Z and millennial investors are interested in collecting items such as watches, rare cars, and sneakers. That compares to only 57% of baby boomers who expressed interest in these collectibles.
Huh? What do we make of this? Are they going to collect stamps? Like, would they be on the same